plugged this thermonuclear weapon, into the core of a private credit engine, could we scale out this impact story more so than we previously ever imagined was possible, and we did it. So what we've established is we've changed our name. So we went from Outface Capital to the Africa Bitcoin Corporation.
Okay.
And we were very intentional about putting Bitcoin in our name. Most of the Bitcoin treasury companies, you won't find that they put Bitcoin in their name,
It's
right?
a little play on it, but not exactly,
Exactly,
right?
and we wanted to make sure that this was Bitcoin. We're not a DAT. We're not some altcoin. It was
like that.
Bitcoin. That was the first thing, and we wanted to make a statement with that, being the first to do that. So we did that, and now we're raising Bitcoin to go off and find fiat capital, bring fiat capital to its knees. So go to Switzerland, go to Japan, lend at 4 to 6%, go to the East Coast, 9 to 10% of the USA, and deploy that capital in Africa through our private credit engine at 20 to 25%, which is actually cheap in Africa.
Yep,
lending rates are so high. So our analysts, our team in the private credit engine that we have are really loving this because the capital inflow, and we've already raised, I think we've announced a couple of days ago, 50 million rand, and we've got another 100 million rand in the pipeline. We don't have a lot of Bitcoin yet. We're still engaging with investors that buy our story, but the model, the story, the playbook, fixed income loves it. And we're already getting fiat capital coming in at very low rates, which we can deploy. And then again, we're going to take the profits from that and in kind of an accretive, in a budget neutral way, federate that back up into the treasury. And we're very excited about doing things like BitBonds. We will give a loan out to an SMME, say 5 million rand. We'll take 20%, so we'll take 1 million rand and we'll put that into Bitcoin. And if you do that as an SMME, we lower the rate of your lend, right?
Yeah.
And we hold on to that Bitcoin. And over the period of time, if that grows beyond what you owe, we can settle. Or at the end, we split that 50-50. Offering Bitcoin life insurance, offering Bitcoin insurance. So we're very excited about this highly, novel flywheel that we've built between traditional finance and Bitcoin powering it. So what Michael Saylor is doing with, digital capital and digital credit, we're doing with digital capital and private credit. And what we measure is not BTC per share only, BTC yield, MNAV, doing all those measurements. On our dashboard, on our analytics engine, you'll see very clearly we measure human yield.
And could you touch on this a little bit? So you actually have a metric where you're saying every one Bitcoin you accumulate is what you think will benefit potentially 5 employees?
Yeah, 5 employees. So that's back of the matchbook math at the moment.
Yeah.
The model's got to mature up, but where we're sitting right now is every Bitcoin that we raise impacts or creates and establishes 5 jobs.
5 jobs.
That impacts 5 families. That impacts 5 Africans. That's dignity. That's honor. That's purpose. And that's what we're driven by. Because both Warren and myself, the CEO and myself, we grew up in African townships. We've seen what broken money does to people. I was in Zimbabwe a couple weeks ago, met with very senior leaders talking about Bitcoin, and we're looking at a dual listing in Zimbabwe. And when you talk to them and you look in the Zimbabwean's eyes, you can see what broken money can do to someone's soul.
Yeah, for sure.
Like we frame their banknotes and we put it in our offices as a reflection of what broken money does. But just think about how that makes a Zimbabwean feel. That's not great, right?
A lot of it, yeah. No, and that Zimbabwe, one of the big examples of hyperinflation in recent times. Absolutely wild stuff. I want to come back to that. But, Sean, I want to go over to you. A little bit of an overview of what you're doing with SALT, if you don't mind. I believe, thinking about Bitcoin, I guess, as pristine collateral, right? People borrowing against it. This seems to be a new trend. SALT has been ahead of the curve on this trend. If you could fill us in a little bit more, we'd appreciate it.
Yeah, really, it is that exact idea that Bitcoin needs to be property on a balance sheet, and however you want to hold it, it is something that preserves wealth. So we think of ourselves at SALT as helping people build and preserve wealth. And through the mechanism of Bitcoin, and the platform becomes a bridge where you still need fiat in order to do whatever is needed for the bridge from here to when we get there. But the ability to just enable people to be able to save, and to save at a better rate than they would be by having access to liquidity in a safe way, becomes something that really embodies, I think, why I got into Bitcoin, and having everybody have that ability to have a brighter future and to have hope into thinking about what it looks like once you're aware of what better money looks like. And it becomes a baseline. And we can do that for individuals and for corporations. And there's quite a bit of innovation we're working on around different ways to keep pioneering. And focusing on more ways we can give all of the things you would expect in the banking world, where you kind of have a lot of different needs. You got a Swiss Army knife. We want to build all of that around Bitcoin.
Okay. Just for the audience, I think a lot of people, they have their Bitcoin in cold storage. This is my Bitcoin. It stays over here. I don't do anything with it. I'm not giving it to someone else. I'm not borrowing nothing. How easy is it? How difficult is it to do something, to take a loan from something like Salt?
I mean, I think it's very easy. We focused a lot on making the least amount of friction possible to make that journey as easy as possible. And it's stressful, and we're aware of that. So we pride ourselves on having people and relationships and being able to get to know every account and focus on exactly what the needs are before just making any assumptions. And that's where we learn what kind of flexibility we can add in to give the best experience. But you can be in a very small position to start there. You could be just in custody and leave it that way to kind of get comfortable, or you could be looking for yield, or you could be looking to borrow against it. And all of those are just parts of two sides of the same coin and different ways to move around it. But I think it's pretty easy.
Okay, appreciate that, Stafford. I want to go back to you. Yeah. We were talking off camera a little bit about, we didn't all find ourselves here just kind of randomly, right? We care deeply about Bitcoin. A lot of us have this moment where we really saw the light when it comes to Bitcoin. So I'm kind of curious if you could share a little bit of your Bitcoin story. When did you see not only what Bitcoin is, but the impact it could potentially have on Africa?
Yeah, so it was 2014, and in 2014 I had built a fintech startup before fintech was fintech. And what we did was we converted a phone into a card acceptance machine. So we built a little dongle that plugged into the stereo jack before Jack Dorsey and Square.
Is that what I was going to ask? Yeah, before that, really?
Yeah, we were before. In fact, Visa did an investment in us after they did the investment in Jack. And we had discussions with them going back and forth around what they were doing. In the United States, they were doing it with a little white dongle they plugged into the phone, and they only had mag swipe. We did it differently in South Africa because we had EMV and PCI, so we had chip-based cards.
Okay.
So we had to actually build a dongle that could actuate the chipset, do a secure switch over a non-secure device into a banking fabric. We were the first in the world to do that. We filed multiple patents. The team was incredible. But the reason we built that company, let me just step back for a second,
Please.
And I think we'll go back to the Bitcoin in a second. I built that company because of an experience that I had. I was sitting 7 years before then, I was sitting in a very senior government official's office, and I was about to have a meeting with the senior government official. And I was there with someone from SAP, the ERP company. And a lady came in, black lady. She was in tears. The baby on her back that was wrapped in a blanket was in tears. I mean, she was distraught. It was a very traumatic scene. She came in. The senior government official opened the door, said, "Gents, I can't see you right now. I need to see her." She went in. Cut a long story short, I asked the receptionist, "What happened? Why is this lady in tears?" She said the following to me. This lady gave birth to twins. She was hurt during childbirth. She couldn't get out the house to make the payments. We sent out someone to her house to switch off her utilities. She lost one of her twins due to exposure. Yet, she had a bank account. She had cards in her wallet. She had cash in her wallet. She just couldn't physically get up to make the payment. That moved me, and I had to do something about that. And I got a bunch of engineers together at my house, and I was like, guys, we can solve this. And that's my message there is, in Africa, when payments don't work in Abu Dhabi, if payments don't work in Europe, if payments don't work in the United States, it's an inconvenience.
Right.
Where we come from, when stuff like this don't work, people die.
Right.
People die every single day. And where I grew up, I see it every day. And people's lives are inconvenienced because payments and money are so broken. So I went and built that company, and that company was a very arcane solution for integration of bank fabric with mobile technology, etc. And then someone came along in 2014, one of my engineers, and showed me Bitcoin. And I was like, F off, man. There's no way. Are you telling me someone can send value from one person to the other person globally, securely, more so than we've ever done in the history of humanity?
Yes.
Without an intermediary?
Just a quick word. I just got a word from my producer. We do have to head over to a commercial break.
Sure.
But we're going to pick up right there when we come back. Stafford Massey, ladies and gentlemen, we're heading over to a commercial break, but stick with us. We're warming things up here at day 2 of Bitcoin MENA 2025. Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. We're here kicking things off at Bitcoin MENA 2025, Day 2. To my left here, we have Sean Owen, founder and CEO of Salt Lending, as well as Stafford Massey, Executive Chairman of the Africa Bitcoin Corporation. Stafford, I didn't mean to cut you off before.
No, sure.
You were in the middle of a story, your Bitcoin origin story. You started to see the value in Bitcoin, this ability to transact without a third party between two people. Please continue.
Well,
if you
look, I
don't mind.
didn't see the value. I mocked the value.
Okay.
I was like, there's no way. I had built this very arcane payment rails with issuers and acquiring and cards and key loading facilities and PCI and EMV and I mean, banking fabric is extraordinarily arcane.
Okay.
Especially when you build a device that needs to switch a card transaction through it. Then you start realizing the depth, breadth, and width of it, how much energy it uses, how much technology is involved in it, and how arcane it really is. And then someone came along and said, hey, let me download this thing on your phone, and let me send you Bitcoin. And I was like, wait a minute, no, this doesn't make sense. So it took me a couple of months to kind of get it. I read the white paper, etc. And then I kind of went down shitcoin road for a while, right? So it's like Bitcoin, Ethereum was like fascinated me. And then I got into like, well, it's blockchain, it's not Bitcoin. And then all the way back again over kind of a 2-year period. So I'd say 2014 I bumped into it, mid-2015 towards the end of 2015, I was like, oh, wait a minute, this is different. And then proof of work was my big one. This is where Bitcoin really made sense to me. It wasn't number go up, number go down, wallets and stuff. It was actually proof of work, the Bitcoin protocol, and every 10 minutes the block, I mean, all of that, and that's been extraordinary. And I've invested in a Bitcoin mining company in South Africa, and we're not announcing anything here right now, but we've got about 500 megawatts that we may announce.
Okay.
For grid stabilization, etc. And that part of Bitcoin to me is the more fascinating human impact side, actually.
100%.
Is the mining side.
Yeah,
what
we
it
could
does
get
for
into that.
humanity.
Shout out to Gridless, doing amazing work with Africa with Bitcoin mining. I want to come back over to you, Sean, if we could touch a little bit on your sort of origin story, maybe the origin story to what brought you to doing what you're doing now with Salt.
Yeah. So, I came from, before hearing about Bitcoin, I was a workaholic, loved being entrepreneurial, was just very fascinated and focused on building wealth through working and saving and investing. And most of my investment had been in brick and mortar and ways that are very complicated, businesses that are complicated, with a lot of payments, a lot of transactions, and it was real estate focused. And 2008 really kind of rocked my world in a huge way, not only in the economics of just watching everything you worked for get cut in half on paper, but also just watching that clearly I did not, and a lot of other people did not know as much as we thought we knew about how things work, because it didn't seem possible to have that much carnage come out of everywhere. When life was good and suddenly it wasn't for all of us. And, next thing you know, people are foreclosing and vacant houses, all this stuff. And so I went down this rabbit hole of learning and really found alternatives in what do I not know. And that led me to gold and silver and investing in hard assets. And it also led to a lot of rude awakenings with how did this happen with politics and how did this happen in the money system and how is this so broken, because I had grown up thinking everything just worked. And so I got lucky in a way, because all of that then kind of painted the picture to hear about Bitcoin. I love technology. I'd always do technology on the side, whether it was digital, music, building computers, you name it, anything. I just always was very fascinated in the future, being better. And I thought technology was the way to get there, investing in technology. And so then suddenly you hear about Bitcoin, and I think the things that just really caught my attention immediately was you could mine it. There was this open, anybody can run it, you could earn it. In between, there's only 2 parties that are in a transaction. It settles immediately, and there's no censorship. I was just blown away, and started getting into the mining, and immediately started kind of getting down the rabbit hole of, is this real? And is this a scam? I was very busy still too, so it became the thing that just started to consume my mind.
It didn't go away, right?
It just wouldn't go away. And it was like those eureka moments where your just brain is exploding with all this, what does this mean? And how cool would this be if this could be real? And what would this do for freedom and for finance and for libertarians and for the economics and for all those things that start to percolate? And I just could never get rid of that bug. And so I kind of started doing meetups and trying to find people. And most of the people were still pseudo-anonymous, or it was very few people that you couldn't meet people just out of the blue. And so I became an evangelist. I started doing the the Bitcoin Jesus thing, where I would be pushing the narrative as much as I could, and started doing meetups, had the first meetups, and hosted those at businesses I was running, and 10 people would show up, and we would just geek out for hours and talk about it.
There was that many people? I was going to say 10 sounds like a lot.
This is in 2012, 13.
Okay.
It starts to be
wow.
just a small group of people that would have pizza and, hang out and talk, and, everybody was weird for their own reasons, but it was super interesting all the time, and everybody kind of had some notion of the same ideas, like it was reinforcing, and then you could watch the space, you could see things evolve, and I really wanted to do something there, and I thought it would be in payments, because at this time there was no scaling issues, there was no fork wars, there was free instant, you can download this immediately, and then I knew very well with transactions just how many steps there are in a transaction to close, and how much you don't really, as the business owner, get the benefit. You're getting taken advantage of.
Middle people taking,
everywhere in between.
Yep.
And then it would take 90 days to settle, and I'd have to do the triple accounting where invoice shows up, you put it in a computer, you put it on paper, you print it out, and I just thought, this is insane. Everything should go onto a blockchain. Bitcoin's just going to change the world, but it'll be through a currency, and I advocated for that until it started to become very clear that everybody would spend and immediately buy, and everybody would hold, and that was the thing, and nobody really wanted to let go of it, and then the IRS said you had to pay taxes and the scaling wars, and I thought, okay, well, you can buy and sell, but nobody wants to do that. You can spend, but we're probably a long ways away. What else is there? And I started messing around talking to the banks, and my bank in particular, and said, I'd love to get a loan off of this, and this is after the idea kind of percolated, like these other ideas that are related to transactions and clearing are probably either too early or not feasible, or
Block might be changing that now. We got
probably
we might be on the verge of it sort of shifting into a different phase now.
I still think that's where it goes too.
Yeah.
I do,
Yeah.
and I think we're like a scaling solution in a way, being able to borrow against, and another form of allowing people to have the time needed to stay in the position and still run their life. And so like when that started to percolate, and the ideas were, how cool would it be if you could just actually get people who would see that we're enthusiastic enough, and we're never letting this go to zero, because we'll all buy it. It's never going to zero.
Adam Back's got that famous, he's buying all the Bitcoin at 1 cent or something like that.
Right, and we were all like that. Everybody was like, dang it, Adam, I'm going to get right above you, you're not going to get all of it.
Right.
I'm going to get some, you'll never get mine. And that just led to this idea of salt, which was really because a commodity, which Bitcoin was divisible, and universally all over the planet, and could be used as a currency. And salt historically was used to cure meat and preserve wealth, and was used for salaries and paying for trade.
So that's where the name comes from.
Yeah, for preserving wealth. Really, we like to think that we help
really
people build and preserve wealth.
Yeah.
And it's just such a good analogy, because it's from salt of the earth, and it seemed to be something that was just good all around.
Yeah.
Everybody was enthusiastic. You had a brighter future outlook on everything.
Love that.
Those would be the best days ever. Just talking about what could be, and now we see everybody doing all those things. And it's really amazing.
Has to feel good to see it come to life. Speaking of seeing things come to life, South Africa, I feel like, is about to become Bitcoin country part 2. We have Money Badger enabling people to spend their Bitcoin all over the country. You have things like Machankoro we were talking about, of people being able to use Bitcoin, just a feature phone, like an old Nokia phone. Bitcoin Akazi, other circular economies within the country. A lot of really, really amazing stuff happens. So 2 questions, if you don't mind. One, if you could just give us a little bit of a further overview. And then 2, also, I know you said what you're doing, you're in the nascent stages of it. You're just getting it started. But I'm kind of curious to hear a little bit more. Is there a thirst for it? Are you hearing that, are people saying, like, let's get it rolling, like we want in on this sort of thing? So if you could speak to both of those, that'd be great.
Let's start with the latter one. I like that. Yeah, we're very careful though. So we're sitting across from investors that really want to come in. I mean, we got hundreds of millions of dollars of capital potentially being allocated, but we want to make sure that the folks that we're looking at across the table buy into the human story. That's very, very important for us. So we've been real careful. Could we have done a couple of pipe deals already and bought Bitcoin? I think we could have done that. But we've held back. And we've just said, no, this is not the way to do it. And I just, I think the Bitcoiners have walked into Wall Street with the greatest intentions. We're open, we're honest, we're transparent, the blockchain's open, and we've just climbed into this tank with sharks. And like,
Wall Street and Bitcoin culture are not necessarily symbiotic.
And I think that's what you're seeing. All the guys being, they're getting $100 million in the front door, and at the back door there's $150 million worth of shorts happening up, and that arbitrage. So that's what's happening in Bitcoin land right now, and Bitcoin treasury land. So yes, I mean, the interest is significant. We just want to make sure we got the right capital allocators, people that really buy into the story. So we've moved away from kind of hedge funds and that. We're looking at high net worth individuals, family offices that really buy the story. We've dual listed now In the United States, we're on OTCQB, so the ticker is on there.
Okay.
Acus, we got approval. We're just holding back. We'll launch probably the first couple of weeks of Jan. We just don't think it's a good time to launch. We're live in Frankfurt, and we're going to list across all the African exchanges. So we're in Namibia already. We're going to go to Botswana, etc. So we're opening up international capital to gain access pan-African. And that's what also makes us different is the fact that we're not just South African. It's Africa.
Yeah.
And, you can't do it anywhere else in Africa besides the Johannesburg Stock Exchange. Just the liquidity levels on it, the governance, the maturity, the integration. Example, when we went to Acus in the UK, we were fast-tracked. When we went to OTCQB in the United States, we were fast-tracked simply because of the JSC's reputation and the governance levels that we have in the world. So that's moving along real nice, and we're going to do it carefully. We're not interested in having thousands of Bitcoin. We're interested in making sure we have enough Bitcoin where we can lend to augment the private credit business to have that human impact.
Okay.
We're going to do it carefully. We're going to do it slowly and with conviction.
Okay.
And that's our strategy. And like everyone else around us is like running towards, we're like, no, we're focusing on the human impact. That's big for us. The first part of the question was?
We were talking about just, personally,
adoption.
I'm watching what's happening in South Africa. It seems like
it's amazing.
What you're doing, you're right in the center of a tremendous sort of movement that's happening in South Africa right now. If you could speak a little bit more to it. Yeah.
So the Money Badger guys, I know Caro from Vic very well, and the team over there, they're doing incredible things. So essentially, they've just switched on merchants for Bitcoin acceptance across the country. I think we're sitting between 650,000 to 700,000 merchants that can accept Bitcoin in South Africa.
Wow.
So if you take, that's just what he's done, but if you take all the little guys together, I think we're close on 1 million. And in ratio to population, towards Square, I think we were the biggest in the world in ratio to population.
Oh, right. Yeah.
Even volume of merchants accepting Bitcoin. I think we're the biggest in the world. Before Square made the announcement.
Well, no, probably. How many? What's the population? 60 million in
60
South
million,
Africa.
yeah.
So then you have a million merchants. If we have 4 million potential merchants with Square, times about 300 million, it's comparable. But yeah, I would say you have more. I didn't even think about that.
Yeah.
So South Africa seems like it's behind.
So I would always say people are waiting for this thing to become a medium of exchange or a unit of account. I hear it when I come to these Bitcoin conferences, and I smile because back home, it's a medium of exchange.
There, yeah.
It's a unit of account. There are circular economies where they won't take your US dollars. They don't want your US dollars. Yeah. The surfer kid that's surfing, he doesn't want USD, he wants sats.
Yeah.
Because when he's doing sats, he's got a commodity, he's got an asset that goes up over time, which gives him the ability to focus on his surfing. So he doesn't have to go wash cars, he doesn't have to go clean gardens, etc. He can focus on his surfing, and he can actually afford the ticket that the Australian kid and the USA kid are paying on the surfing scene.
Yep.
And I think what we're going to see from Bitcoin Ikasi with the whole surfer initiative over there, I think the first black male professional surfer is going to emerge from there.
Love that.
And that's going to be because of Bitcoin.
Yep, love that. Absolutely beautiful. I want to get back to, come over back to you, Sean. We've obviously seen things change a little bit in the United States, a lot of it maybe with the new administration. Biden administration, quite antagonistic to Bitcoin. Trump, some people feel like he hasn't delivered enough yet, but obviously the general tone has changed. It's easier for businesses to operate in the United States. But one of the big things, it was something I actually personally asked in the White House, is when do we see something like a de minimis exemption to at least let people spend in smaller increments, $500, $600, because if they are using an app like Cash App actually, I believe, does track your transactions. You do have to pay taxes on it. It makes it a little bit harder. So we want that friction eliminated. Do you think we're moving in that direction? Do you think we'll see this under this administration?
I don't know if we'll see it under this administration, but I would love to. And I think that we're seeing the right movement happen in general. I mean, it's very, you can't applaud it enough, because to go through choke point 1, 2, 3, and all the others where it's just feeling like, why am I even a citizen here? Because I feel like you're just trying to kill me, to it went for being an innovator, like, what did I do wrong? To now where it's actually back to, okay, not only are we going to do that, we're going to be the leaders, which is where I think we should be. I think that is the right mentality, no matter what country you're from, that you would just think that why not do something if you're just going to do it the best you can. And I do think that this is a problem with the transactions. And in a way, it's counter to what I would say if I was only prioritizing what we sell, because we sell a bridge to kind of cover that. A lot of people just don't want to deal with all the accounting because it's.
Do you think that is that the main thing?
There's a lot of that.
Okay.
There's a lot of it goes along with time bias, right? Like you just want to hold for as long as possible because you can't spend it. if you could spend it and you didn't have to worry about all this microtransactions, tax accounting, and tracking different wallets, and all the crazy things that people
It's
propose.
truly insane if you do.
It's truly insane.
Yeah.
It's truly insane what was being proposed and the way you'd have to deal with it, where it was intended to kill it, I think. And so I don't know if we'll see that, but I definitely would love to help advocate, and I think it's the right thing, especially under some threshold, right? Like, it just doesn't make sense once it's under some threshold.
Yeah.
We'll see that eventually.
Yeah, we will see what happens. One of the things that I'm excited about, I speak with Herman from Bitcoin Akazi a lot, and I feel like there is some willingness of politicians, at least on the local level from what I'm hearing in South Africa, to look at something like Bitcoin Akazi, a circular economy, and say, okay, this is really solving a lot of problems. And maybe we should really think about this. And a true open-mindedness at adopting Bitcoin last January. There were a few politicians there willing to listen, sitting down, listening. Some of them spoke as well. Is that what you're seeing as well?
Yeah.
Do you feel like, and how high does that go? Does that go to the federal government? Are they paying attention? Do they want to see Bitcoin adopted?
Yeah, so in my individual capacity, I am an advisor to some of these stakeholders, right? So Reserve Bank Governor. We have a group called the Intergovernmental FinTech Working Group, IFWG. We've got South African Revenue Service, which is like the IRS. We've got our version of the SEC. All these folks are looking at this. And I think they're very forward-thinking. I mean, they allowed a company to have Bitcoin in its name on the JSE, and they allowed us to execute against the strategy. That took a lot of lobbying, engaging, educating, etc. The big challenge that we have, and I think this is probably a global challenge, is when it comes to legislation, rules around crypto, the big issue that we have is that our stakeholders haven't separated Bitcoin out from crypto. It's a massive issue. So that's kind of the last step that we need to take in South Africa, where I'm trying to educate all those relevant folks to say, listen, there's a digital commodity, there's an asset without an issuer. This is very different from crypto.
Yeah.
Crypto is unregulated securities. These things have head offices and developers and, chief marketing officers, CEOs, etc. But this thing over here is a digital commodity. You've got to treat it separately. So what we see happening, example, when we listed on the Johannesburg Stock Exchange, there was a clause. It was like 18.3.1b. And the clause said you cannot issue a security on the Johannesburg Stock Exchange that's backed by any crypto or any reflection of crypto. So we were engaging them saying, hey, you need to take this clause away because we'd like to do this. But you keep it for crypto, but you take the Bitcoin
And
away.
they listened to this?
No, they didn't.
Okay.
What they did was they took the whole clause away.
Oh, okay.
So now suddenly that's become possible. And someone wants to launch Ethereum. So the pendulum went from like absolutely no to over here. To like now, that's a big challenge.
Different story.
Yeah.
Okay, yeah. The narrative, I think it is tough. Yeah, it's it's interesting too because I think in the United States, what we also need is we have market structure coming up. We want to see peer-to-peer rights, and it's weird because on a certain level, we do. I feel like we need to be nice enough to the crypto people because it might not be my thing or our thing, but I think people deserve this right to transact peer-to-peer. But then on some levels, you're sort of like, but we're still different, but we're still over here.
So we were a little bit more clinical.
Okay.
Yeah, because I mean, if you go into a circular economy, one thing about a circular economy, Herman says this:
Yes.
you can't shitcoin a circular economy.
There's no ETH beach.
There
and
is no
XR.
ETH beach. There's no Solana, anything. You go in the deepest, darkest jungle, none of the value propositions like speed and scale.
Right.
No, they want decentralization. They want immutability. They want sovereignty. They want the base level value proposition of Bitcoin over where we are. So
100%.
shitcoining doesn't work. And so we're not as nice to them as you are over
That's
here.
fair. That's fair. Well, we did see something funny. I'm curious to get your thoughts on this. When I think it was Trump, I forget when it was, earlier on, right when he had come into office, he said something about the crypto reserve they were going to create, and the internet exploded, and then very quickly it became a Bitcoin reserve, and then a digital asset stockpile. Very different rhetoric immediately. Do you think that made it, right? Do you think we made a difference?
Oh, for sure. Yeah, absolutely.
Okay.
All the way from all the work that everybody did, the hard work that everybody did to really get the word out about what bad regulation was there in a lot of these bills that had to get dealt with, right? All the way up to, I think, advocating for better administration and really making it known that there are many, many, many good people here working hard, work to be in the American dream. And I think it made a big difference. And that was a really funny one because everybody was just like, what?
Yeah, this is not. But it was actually what was more telling was you had crypto exchange owners. You had the Winklevi come out and say, no, we're doing a Bitcoin reserve. So it actually was sort of like everyone put their cards on the table and said, this is actually what we think of what's going on. And it's fair if you're into crypto and that's your thing. But just at least acknowledge that it's different.
Right,
yeah, it's a different story. Maybe let's 2026. Where are we going? Is the 4-year cycle dead? Is Bitcoin going up forever from here? Is it? what are you looking forward to?
I don't care.
Okay,
We don't care.
Okay.
We believe in it. We think we don't care for cycles. We in it. The addressable market for Bitcoin is so massive in Africa, and I think it's all over the world. I mean, our informal economy in South Africa is arguably 30 to 40 times the size of our informal economy is 30 to 40 times the size of
the formal economy. Could you define that if you don't mind? So how would you define I know what it is personally, but if you could for the audience.
It's the cash-based, pure cash-based rural township economy.
Yep.
It employs 70% of the people in South Africa. It's not measured. We don't know how deep and wide it is, but we know it's significant. People say the unemployment levels in South Africa are 47%, up to 60%. But if that was the case, we'd have anarchy, but we don't. So who's employing these people? Where are they? It's in the rural township. Those economies, someone on our board called Gigi Altcock, he wrote a book called Carsonomics, which goes into trying to kind of frame this informal economy. I mean, let me give you an example.
Yeah.
A lady came to us for a private credit loan. Okay, black lady, she sat down across the table. This lady is turning over, about $5 million. But it's pure cash. She builds houses to put her cash into. Let me say that again. She does not put her money in a bank. She builds a house and she puts money physically in the house.
A hardware wallet is really going to be a revelation.
So when you go to, see what I mean? So that's how big that is.
Wow.
And that is when we have human ATMs, we have human banks. You can knock on her door and you can lend money. You can buy shampoo. You can get a headache tablet. You can get alcohol from her. She's everything in the community. She's protected by the community. That's very sophisticated. So when we say informal, we need to be real careful. Doesn't mean not sophisticated. Yeah. And what Bitcoin's doing is unlocking that. So we, from a private credit perspective, we're going into that SMME base and we're finding these businesses that are over-securitized. I mean, here's the keys to my house. There's a couple million. Now give me the loan so I can go buy the tractor. Or I can go buy the car. Or I can buy the land. Or I can take out this bond, etc. That's what we see happening. And that's all over Africa. And that's a massive unlock for Bitcoin.
Amazing stuff. I apologize. We have to cut the commercial break for a second, but we're going to come back to this. Again, we're getting things kicked off here at day 2 of Bitcoin MENA 2025. We're headed to commercial break. We'll be right back here at the Bitcoin Magazine news desk after this. Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. We're here kicking things off at Bitcoin MENA 2025, Day 2. I'm Frank Corva, Bitcoin journalist, joined to my left by Sean Owen, founder and CEO of Salt Lending, as well as Stafford Massey, executive chairman of the Africa Bitcoin Corporation. Gentlemen, we were just talking about outlook for 2026. Sean, I'll come over to you first, and then maybe outlook for 2026 and what you're looking forward to today here at the conference.
2026, I think, is very exciting. We had obviously an interesting year, 2025. It was also exciting, but it has been, I think, this war around if the cycles are still in existence or not. And I think it's definitely got quite a bit to rebound. There's a ton of companies that are just now getting to the point where they can really do what they set out to do in 2026. There's so much innovation happening around digital credit, digital insurance, a lot of ways of rethinking banking and lending, that these core pillars of what have to continue to grow are continuing to grow. And I think that's very exciting. You see jurisdictions, like I've heard from many people that have been at this conference and the one from last year, that have mentioned that there's so much more adoption and sense of interest from the companies that have all grown over the last year. And in jurisdictions like this that are very much looking to become a new hub of this, that it's happening. It's 2 solid weeks of just nothing but people. And I think we're at the end of the year. It's going to be a really, I think, exciting year next year.
Okay, we're ramping into 2026. I like that. We talked a little bit about 2026, but today I know you're a fan of Michael Saylor. You said what he's done has transcended gravity at this point.
Yeah,
I think that's the way you put it. Are you looking forward to his keynote this evening?
Absolutely. And I think for us in 2026, we're very excited because I think it's where we'll demonstrate what Bitcoin means for humanity in Africa. We're very, very excited. I mean, as a company that does private credit, now galvanized with Bitcoin, if you take a look at our pipeline of opportunities, we're in a continent where the average age is 19.3.
Is that right? Across Africa?
Across Africa, 19. But we're the youngest continent in the world. 60% of the population is below the age of 23. And these folks are gaining access to AI. They're not just getting connected to the internet. And what a farmer in Africa can do when he picks up his soil and points Claude at it and says, hey, what can I do with the soil? Or he takes a look at his animals that have a particular disease and he takes that out and says, hey, how do I resolve this problem? Or give me an idea on what I can do with my land,
etc. Is this happening now?
That is happening in Africa today. And that's the huge unlock for AI. And people are not talking about this. So artificial cognitions meeting latent human potential at that age group in Africa with the resources that we have, I think 2026 is going to be finally when Africa demonstrates its rising. We've always talked about Africa rising. Even I, as an African, am fatigued by that. But I think if you take a look at artificial cognitions, AI, you take a look at perfect money, Bitcoin, and private credit, spinning that up, I'm very excited about 2026. And I think you're going to see examples that are tectonic, and I think we're going to demonstrate to the world the original emancipation of Bitcoin. This is like what this thing is not about money go up. It's not about financial instrumentation only. I'm a huge fan of Saylor. What he's done is extraordinary. But what we want to do is have the human yield impact. As much as he's having the digital credit impact, we want to kind of do something that on a Pan-African basis unlocks something where we see real human problems being solved on our continent. And I think we've got all the assets. I mean, we've got all the rivers, we got all the minerals, we got all the rare earths, we got all the human talent combined in a smoothie with everything I've just described. We're very excited for 2026, and I'm very excited for Bitcoin.
Appreciate that. Does Bitcoin, by default, become the money of AI? You brought it up, so I wanted to touch on this. I know everybody here, a lot of us tend to think that will happen, kind of, but I think there will be, I don't like to be too antagonistic, but maybe some shitcoin companies out there that try to push some other tokens as the currency. Is it inevitable that it ends up becoming Bitcoin? I'll go to you first, Sean.
Absolutely, yes. And that doesing mean it would be exclusively Bitcoin, but I do think that Bitcoin makes an excellent pairing of the opposite side of AI, where much of what you need is just sourcing, facting, and citing truth, and Bitcoin is the truth machine. And so I think there's so much potential that doesn't really get talked about that much because it's almost like it sounds too buzzwordy. Right? It sounds too buzzwordy, but I do think that is obvious, that a digital intelligence and a digital currency would go together, digital money. And there's already evidence of that.
Appreciate that. Stafford, we're cutting back to the main stage in about 30 seconds, so maybe just a yes or no. Is Bitcoin by default, does that become the money of AI?
I don't know. I think we're going to have this technological integration trying to happen, but I think we need to stay at an 80,000 foot level. I think, AI unlocks economic energy. Let's take the Saylor route. AI unlocks economic energy. I think Bitcoin stores that energy and allows you to carry that energy around. That's real in Africa. If I can generate economic energy down there in my rural village, in my soil, with my animals, with my minerals, with my culture, where do I store that energy? And can I convey that energy? And can I transport that energy? At a base level, 80,000 foot, that's the relationship between Bitcoin and AI. One generates economic energy, the other one is its battery, and I'm stealing that from Mark Moss.
Okay.
He said,
shout out to Mark. We usually have him on, so we appreciate you channeling some Mark Moss for us.
But Bitcoin is the battery for AI's energy.
Okay, we love that. Gentlemen, this was an absolute pleasure and an honor. Thank you so much for joining us. We are about to head over to the Falcon stage for the first talk of the day, which is on global growth opportunities in the Bitcoin ecosystem, a perfect transition from what we've been talking about here on the news desk. Ladies and gentlemen, Bitcoin MENA 2025 Day 2 is underway. Over to the Falcon stage. We'll be back here at the news desk after this.
And by the way, don't forget to follow the updates on BTC MENA app. Have you downloaded that already or not yet? You should definitely do that. We want to, by the way, ask you, everyone who hasn't uploaded the Bitcoin BTC MENA app, do this right now, because this is where you will follow all of the updates that are happening. Also, don't forget your wristbands, because this is how you'll be able as well to access all of your sessions, everything that you want to. And as always, don't forget to network, collaborate with everyone, and you know what? Share your experience using the hashtag Bitcoin MENA 2025, all right? But that's not all. We also want to say thank you to all of our partners. First of all, to our audience for making this event possible. Also, we want to say thank you to our partners for making this event possible, and also a big special thank you to Alpha, our title sponsor. All right, ladies and gentlemen, are you ready? We started making history together. Let's continue making history together today. Are you ready? Let's go. I'm so happy to kick it off with a fantastic panel about the global growth opportunities in the Bitcoin ecosystem. Our first panel of Day 2 will be moderated today, and please give her a big hand, by Laura Cornelia Inamedinova, Chief Ecosystem Officer at Gate. Give her a big hand. She'll be joined today by Clarice Hajej, CEO at DFNS, and also Rachel Conlon, CMO at Binance. Give them a big hand and be louder. The floor is yours.
Well, thank you, Maria. I always love when Maria is emceeing, because she's one of the few MCs that can actually pronounce my surname. So kudos to her. And hello, everyone. I love how big the audience is. You know, those true believers and patrons of Bitcoin who are here on the second day, even though I know we had a few good parties last night. So kudos to you. And I'm very fortunate to be moderating a panel that is all women, and it's not about women empowerment or women leadership. Because majority of times, if we have all women panel, it's that. But today, I have incredible, smart, and educated women who achieved a lot in the space. So why don't they introduce themselves? Rachel, why don't we go with you first?
Hi, everyone. I am so happy to be here at Bitcoin MENA. A big thank you to the hosts and to our moderator today. To introduce myself briefly, I am the Chief Marketing Officer for Binance. What that means is my goal and my mission is to bring as many users into crypto in a way that's safe, secure, and ensures that we foster and continue to help this industry thrive.
Thank you, Clarice.
Hi everyone, I'm Clarice. I'm the founder of Defense. Defense is a wallet infrastructure platform. We provide security and a gateway for blockchains. We obviously support Bitcoin, and we provide this infrastructure to banks, payment providers such as Stripe, Zodiac Custody, Standard Chartered, and others. We secure over 5 billion transactions a month, and we've been developing Defense for the past 5 years.
Thank you very much. And I'm Laura Cornelia Inamedinova. I'm Chief Ecosystem Officer at Gate. I focus mostly on strategic partnerships, investments, and acquisitions for the exchange. And today, we're talking all about Bitcoin. So, ladies, historically, we were used to see Bitcoin pump, and usually the altcoin season would follow. But however, now it's not happening. And everyone is understanding that majority of Bitcoin inflows happen by institutions. So the question first, maybe we'll start with Clarice. Tell me, is the bull market still coming, or we should accept the reality that it's never going to be the case?
So we're an infrastructure provider. So what's great is that we see people build and we see people stop building, right? So what I can say first is that over the past 3 months, what's been actually very interesting, and I would say mostly the past 2 months, is that contrary to the previous bear market, no one has stopped building any projects, right? So it does seem to be today more of an adjustment than a deep bear market in which we see people, pivoting, switching business, getting out of crypto at once. Over the past year and a half, we've seen a lot of adoptions for traditional investors, and that's the segments for which we've been, building for the past 5 years. So what it means is that we've seen new use cases being adopted by large players. So if I look, for instance, on the payment side, what Stripe did last year by acquiring Bridge and really pivoting their business, or at least part of their business, on blockchain was sending a signal to all PSPs out there that blockchain was a technology that needed to be used in order to build payments. We start seeing more and more payment providers that are telling us, hey, support Lightning, right? So we see, even from those use cases, from the payment use cases, adoptions and growth potential for the Bitcoin ecosystem. So that's for the payments. On the banking side, we've seen several different use cases being built across the world. And for instance, in Europe, the main use case that you see banks looking at today, it's buy and hold crypto for retail. And that means enabling anyone from their banking app to have the ability to buy Bitcoin and Ethereum and make it very easy to kind of streamline and scale that mainstream adoption. So overall, I think over the past 6 months, over the past year, what we've seen is very positive, and we've seen mostly new use cases for adoptions more than anything scaling back.
So the last 6 months were super hot. There is more adoption coming, more interesting use cases. Rachel, what do you see coming from one of the largest exchanges? Is retail coming, or still mostly driven by institutions?
Look, I think the last 6 months, I would agree with you. I think we're in an adjustment at the moment rather than headed into the doomsday bear, which we see the crypto X narrative dominating on the crypto X narrative. For me, 15 months ago was a major milestone for our industry and for centralized exchanges, where the approval of the ETFs meant that the institutional interest surged. And that happening alongside clarity on policy, what we saw not just in the US, but then start to happen internationally, meant that there was like an extra layer of credibility in the industry. And it was at that point that I started seeing the kind of normies and mainstream retail start getting really interested in this space. And anecdotally, I always base that on how many of my family members and how many of my, my community outside this industry start asking me, okay, is this the time to invest in Bitcoin? Arguably, I think, we're still seeing institutional interest surge, to your point. The ETFs, just hit 60 billion, which is extraordinary. And we're about to see Solana and XRP ETFs approved. And that institutional interest, continues to grow, push the retail adoption. So, we're in a case where we've added nearly 120 million users in 14 months. We hit 300 million users yesterday across 180 markets. And while definitely there's a lot of volatility, and I think the core kind of community is concerned that's in it for trading products, but as we see the use cases proliferate and it become the back end for payments, we see the interest for treasuries with corporations, I think we're only going to continue to see this industry grow. It's just in a more volatile way.
Yeah. I love that you're talking about Bitcoin ETF and institutions, because this is actually what I wanted to ask you next. So, as you mentioned, 60 billion US dollars, that's insane number for just Bitcoin ETF alone. And this actually, for everyone in the audience, interesting piece of statistics, this is one of the fastest growing ETF ever. No other ETF performed that well in such a short period of time. So Rachel, from your perspective, what are the opportunities that we can see outside the US market? Because again, the ETFs are majority driven by that jurisdiction, especially in terms of adoption and infrastructure.
Look, we're in a really privileged position of being the largest local exchange, and we operate in over 180 markets. And I think what we've seen because of that surge in interest in the US ETFs, we're seeing Europe, we're seeing Asia, we're seeing MENA, obviously UAE. We see this week, Abu Dhabi Finance Week is not just traditional finance anymore, it's truly a merge of the digital asset and of the traditional finance space. So I think, to answer your question, we're seeing other regions and other local markets really look at ETFs as viable products in their locations. And that will only continue to help this industry thrive, because that does support the retail adoption.
Could you compare different regions?
Look, I think Asia, we've seen unparalleled growth in Asia. I think it's one of our largest region. I think the second fastest growing is MENA. I've spent a lot of time in LATAM in the last 2 years. And I think where LATAM is really interesting is the payments side. That's where we're seeing the adoption. But I think that we're on track, arguably as we await MiCA and the clarity around that. Europe, unfortunately being a European, that disappoints me. We're seeing the lowest penetration there. But in every one of those markets, we're heading to 10, 15, 20% penetration. MENA is definitely one of the fastest growing though.
So Clarice, coming to you, you can also represent the European side of things. It's so sad we're all Europeans and Europe is really lagging behind when it comes to crypto.
That's why we're all in UAE.
True. So Clarice, how do you see European market compared to others, and especially from all the projects you're working with?
Yeah, I think 2 years ago we were so very happy to be one of the first jurisdictions to have a framework, right? Because at the end of the day, what mattered was having rules so people could operate, so institutions could start investing and building in the blockchain ecosystem. Over the past year, what we've seen is that the US went so fast and with a strategic ambition that is unparalleled globally, right? It is a strategic initiative for the United States, that the framework that we had built in Europe is now putting a lot of weight on institutions, and to some extent, it's preventing a lot of business to expand. It's almost impossible in the current conditions for any bank that is doing Bitcoin custody to start lending against this Bitcoin, right? In terms of risk-weighted assets, it's just a killer. So we're starting seeing a lot of players, associations that are pushing Europe to review some of the framework. It will take time, right? Because, especially in Europe, changing regulations is always a work in process that is not expected to be short. And so what we've seen is that there's different use cases that are being adopted in order to make sure that you can make the most with the rules you have. So today, when we look at globally the markets and where we see most of the builders, I would say that by far the United States is the fastest growing market. There's not one bank in the United States that didn't have a board meeting with all the C-levels saying we need to do something with blockchain. What are we going to do? Are we going to issue a stable coins? Do we start custodying crypto? Do we start offering crypto to our retail clients? So everyone is definitely looking at things. There's also another issue is that because they've been so out of the market for the past 4 years, is that the learning curve is super difficult, right? They don't have the people internally to start building those initiatives. So what we're seeing, for instance, in the United States, and Morgan Stanley, for instance, is a very good example, is that people are catching up by packaging solutions, leveraging infrastructure that is already existing. So Morgan Stanley partnered up with Gerovich, for instance, to starting offering Bitcoin and Ethereum to their private clients. But behind that, there's a willingness to really invest in the ecosystem, right? So what we know is that those players, they are now trying to come up with an offer as fast as possible, because once again, it has become strategic. And beyond that, they are thinking, okay, what is our longest roadmap? And what does it mean for infrastructure? Because at the end of the day, I think what's great today, and mostly because there's emergence of several use cases at scale, is that they're seeing blockchain as a new backend for finance. And I think that's what's very, very interesting in 2025 compared to what happened in 2023, where we had mostly a bull run, or in 2022, sorry, when we had mostly a bull run that was pushed by investors, is that today we're saying, all right, blockchain can enable to transform fundamentally all the divisions, all the services we're giving to our clients, and they are now rethinking about rebuilding very much horizontally. So that's the US market. LATAM, 100% payments, cross-border payments for SMBs is by far the main use case and is growing super fast. Europe, as I said, we start seeing more actually use cases around biennial crypto for banks, for neobanks. Stablecoins is very hard to, the use case on stablecoin is still very hard because most of the primary use cases that are scaling, they are dollar denominated. You don't really do cross-border with euro, except on very specific rails. APAC, we're seeing APAC growing really, really well as well. And there's a mix of both crypto and stablecoin that is, I think, in parallel. We're seeing some real balance. You have countries like Philippines where stablecoins are everywhere, but also crypto is everywhere. You're seeing now regulators in Japan, in Hong Kong, in Singapore, having tightened the framework with very clear regulations. So the know-how is now, it's not a barrier in it anymore, right? And so we're seeing here also very new players coming to the space. So yeah, and maybe last one, Africa. I think Africa, there's a huge difference between the different countries. Nigeria by far is driving the growth there, South Africa, Kenya as well. In Nigeria, 30% of the and Binance is obviously very big, but 30% of the population hold stable coins, not with their banks, with fintechs, right? So banks are now thinking, well, wait a second, our liquidity is actually being taken away from our retail clients. We need to do something. We need to start accepting. Maybe the first step is just accepting stablecoins, so we bring back this liquidity within our infrastructure and within our banks, right? So I think it's fascinating what's happening, and this is definitely long trends. It's not hype that we see.
I love that you mentioned stablecoins because this is where we want to kind of continue the conversation. The question is going to be again for you, Clarice. You really kind of put a foot on it. Rachel, if you would like to, you can add something as well. So stablecoins are definitely like one of the hottest narratives right now. Everyone is talking about either deities, stablecoins, or anything RWA related. And of course, US, with their Genius Act, are one of the driving forces about it. And the interesting piece of alpha for you, that stablecoins right now are moving trillions of dollars each year and is way more than Bitcoin's volume. So with stablecoins becoming the main settlement layer, where do you see possibilities for Bitcoin to fit into that and benefit from this infrastructure?
Yeah. So there's obviously several use cases that are driving stablecoin. Cross-border, we talked about it. Lightning is actually an infrastructure that is being pushed quite a bit in Latin America. You have countries that are really using Lightning as a payment network, and I think it's great because at the end of the day, you start seeing, this is the guarantee for usage, right, on Bitcoin network. So we're starting seeing, not everywhere, but US, Latin America, quite a bit of demand to start building on Lightning cross-border payment use cases. Mostly, I think what I'm excited about in the conjunction of stablecoins and Bitcoin is treasury management use case, right? And in Europe, besides retail biennial crypto, what we're seeing is if banks cannot leverage stablecoin euro to build cross-border, right? They're looking at, okay, how can we optimize treasury management systems, but just using programmable money, right? How do you automatically transfer a balance that you have in fiat euro into stablecoin euro, from there swap it into tokenized money market funds or anything else, right? And there, the beauty for Bitcoins is that it's one of the best use case to show how you can actually leverage your treasury management system by swapping automatically from one asset to another a certain percentage of your treasury in any jurisdictions you want. So I think today maybe that's the main link that I see as innovation. And I think it's something that is going to be super popular. And when you see Ripple's acquisitions of GT, 2-3 months ago, I think they're right on, right? The next step is how do we bring to incorporate this technology now that stablecoins is not just allowed, it's something that everyone wants to touch, right? Looking at, okay, now we embed within treasury management system a layer of blockchain, so we start making money move programmatically. I think this is definitely, such a beautiful use case for adoption.
I think if 2025 was the year of every business and retail users having a crypto strategy, 2025 is 2026 will be the year of everyone having a stablecoin strategy. And I think for us, it's one of our most active settlement layers. Just to give you some context, since the beginning of the year, we've grown from 30 billion to nearly 50 billion in reserves, stablecoin reserves on Binance. And I think what we're seeing, from a marketer's perspective, I see that as an amazing gateway. Stablecoins being used for payments, for the better movement of money globally. We're able then to market to them at that point of the funnel where we're educating them on the other opportunities that exist in this space. So for me, it's that very strong narrative that we can use coming into 2026 to start and continue to bring that next generation of users in.
Yeah, and I want to kind of stay with you, Rachel. As a fellow marketeer, I've been in marketing for probably more than 10 years. I see a lot of different apps, especially from fintechs and banking, starting to use Bitcoin, sometimes only for marketing reasons, because it's hot, everyone wants to launch it, and get the headlines going. Same thing with a lot of large institutions, as Clarice mentioned. Some of them started Bitcoin not because they actually see value in using their technology or using it as additional distribution channel to attract more users. It's just hot. It's a hot narrative. But still, coming back to you, from the marketing perspective, what are still the key growth areas to actually make Bitcoin feel normal as everyday finance rather to use it as just a headline getter?
Yeah, I think it keeps us up at night as crypto marketeers on how do we move, Bitcoin from being on the periphery to mainstream. This year, we've seen it kind of capture cultural zeitgeist. But I do think there's kind of 4 key areas that we need to double down on in order to see that. First of all, we have to continue to educate. One of the biggest investments that we make at Binance is in education. Through Binance Academy, through the 3,000 meetups we do around the world, it's like educating people on what is Bitcoin, demystifying it to those where it still kind of is seen as something that is a scam or something that is too volatile. It's educating them on how to enter into the space in the right and easy way. And I think we need to also still focus a lot, not just on education of retail users, on education of the regulators and on the public sector, where there still is massive gaps in information. You mentioned some countries that have really taken a pioneering approach to this, such as Japan now. We're seeing Kenya, we're seeing Vietnam for the first time ever, which is one of the top markets globally, finally introduce a regulatory framework. But that's only at the pressure of seeing the opportunity and the potential competitive advantage that the US is making. So, I think that's a huge opportunity. And I think that we need to ensure that we are continuing to double down and also educate the private industry. I had dinner the other night with one of the top retail CEOs globally. And it's taken 2 years of discussing the need to have a payment strategy around crypto. And finally, it was this trip. He was like, okay, we're going to double down on this. This is a group that does over 40 billion in revenue globally. So having that integration and us bringing into the norm and making sure it becomes part of everyday fabric is through it being associated with brands that we love and use every day, and that's what's going to make it a part of the fabric of everyday life and help us ensure that we get to that billion user target that we know is where we are mainstream.
Yeah. So we're here talking about Bitcoin ecosystem, Bitcoin adoption, but the problem, well, the biggest problem probably is scalability. There is still a lot of issues when it comes to actually making the payment, the gas fees, how rigid the mining process is. So Clarice, let's start with you, and we have 2 minutes left. What do you think are the top 3 opportunities right now for layer 2s in the market? Let's say someone here is the builder and they're thinking, okay, I'm really bullish at Bitcoin, I want to build something on it. What they can do, very quick answer, top 3 things, and then moving to you, Rachel.
Yeah, I think if I go back to using Bitcoin for payment, I think though we very big supporter of Lightning, there's still some issues on the self-custody nature of Lightning if you want to build custody around it, right? So I think making programmable, having smart contracts or making a layer 2 that enable to build programmability on Bitcoin is definitely something that makes a ton of sense, yeah.
Rachel, maybe from retail perspective.
I think localization matters, and ensuring that every country has a different reason, the user has a different reason why they're entering into this space. So ensuring that we're telling that local story that's relevant. Turkey, it's inflation, LATAM, Brazil, it's more about, or Mexico, it's more about cross-border payments and remittances. So it's making sure that we're building the local narratives and the user experience that support the functional use cases. That's how you build that kind of meaningful emotional connection.
So as we can see, there is still a lot of opportunities in Bitcoin ecosystem where there would be localization, where it would be better, easier payments, or just helping to build mass adoption through institutions coming in and educate them. Because in the end, education is #1 thing, whether you need to educate your grandmother on what is this crypto and what is this magical internet money, or a C-level executive of Fortune 500 company. It all starts with us. It all starts with everyone here who is in the audience coming in on day 2, early morning. Really kudos to all of you here to get the knowledge, bring it back to your organizations, to your countries, to your communities, and be like, hey, Bitcoin is not just a cryptocurrency used for dark transactions, it's the future of finance. And with that, I think my amazing educated ladies are entitled to a big round of applause for all this alpha.
Thank you.
Thank you.
Thank you. Fantastic session to start with. And
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. We are here kicking off Bitcoin MENA 2025, Day 2. I am Frank Corva, Bitcoin journalist, joined to my left by none other than Robin Sayer, host of the Robin Sayer podcast, which has just gone through a little bit of a rebrand. He's going to tell us about that in just a moment. And Michael Markle, the medium of exchange, ladies and gentlemen. Robin, I am coming over to you first. I think you have some news for the people. Tell us some changes, and after 700 podcast episodes, you've decided to change pace a little bit. Tell the people what's going on.
Yeah, really cool. Thank you so much for the opportunity. After 700 plus episodes, and there are about 600 guests in Bitcoin. It's crazy, because I was like, in the beginning, can I even do it like once a day? Can I even do like so many different people? Turns out there's a lot more. I could do with like 1,000, probably like even 2,000 people. Even going around like the conference, there's like, I don't know, 10,000 people here, something like that. You can probably pick up 2,000 people from here and just like make a podcast, and it's probably really interesting. It's really interesting about Bitcoin, actually, because everyone is researching deeply, everyone is doing the actual work here, and it's like in the early adopters, and that's why you can actually pick up most people that are into Bitcoin and just like make a podcast with them. I found that in the early stages, I did that a lot, just like people that were interesting viewers of the podcast, and just got them on the podcast, and they're like, oh wow, you're super interesting, and that's your first podcast.
I love that.
But now after like 700 episodes, it's time for me to change a little bit, time to go from podcasting to live streaming. I think we are in a world where we slowly move towards actually live streaming. I love like formats like that because it's live, it's on the air, it's something like it's raw. If I make if I screw up right now, like everyone will see it, like we cannot post-produce it or anything like that.
Yeah, it
and
happens.
And that's really cool. And that's like basically the move. Like I want to go live. I want to be with the audience. I want to interact. We just talked about it before, how amazing it is to like pull up comments from the audience and then interact with that. So that's basically the move. Having a daily, instead of a daily podcast, a daily live show, and having the guests more strategically towards topics.
Love that. We wish you the best with it. I'm going to shift gears a little bit. I know you like to be with the people as well, Michael. You're over here making sure all the merch is getting sold. Big believer in Bitcoin as a medium of exchange. Maybe you could speak to that a little bit.
Yeah, I love being in the trenches.
That's it.
The merch store does a lot of payments for Bitcoin. I always try to incentivize people to spend Bitcoin. And yeah, we've officially entered, it was in a dream of mine that we are officially in stage 3 of Bitcoin, the medium of exchange era, which is going to be by far, without a question of a doubt, the most impactful time in Bitcoin. If you don't believe me, just think of the concept of time and how that traveled in 4 stages, and look at the history of time, stage 3.
Tell us a little bit about this. Yeah.
Sure.
Yeah,
so like if you think of time, right? The concept of time did the 4 stages, just like Bitcoin is going to probably walk the similar path, with stage 1 being a collectible. So time started as a collectible with sundials, and then stage 2 was calendars, a store of knowledge. Not necessarily a store of value, but a store of knowledge. And then the medium of exchange aspect was when clocks were invented, which allowed for global synchronization, which was a massive for just humanity. And then obviously stage 4 comes with that, the unit of account, hours, seconds, minutes, that kind of thing. So we've officially entered stage 3. It's amazing.
Knowledge, ladies and gentlemen, knowledge here at the live desk. Robin, when you hear something like that, we're in stage 3. Do you agree? Are we getting to this point where Bitcoin will more readily be used as money?
I actually don't agree, and it's funny.
Let's keep it spicy.
And it's funny because I earn most of my money already in Bitcoin, and I spend as much as I can directly in Bitcoin. So I already, like, I'm actually an example for your argument of like Bitcoin is already a medium of exchange.
You're living in stage 3.
I'm living in stage 3. I'm even like slowly going to like, okay, what is the Bitcoin value of it, and trying to do the unit of account thing, but it's like really hard. I'm just like at the forefront of it. And so what I think is like we're living in this world where we see a lot of Bitcoin adoption, where we see a lot of like what's going on with Bitcoin. But reality is like most Bitcoiners, like the 400 million Bitcoiners, most of them just have some exchange account, or they have some self-custody wallet, and they just save in it. And so like most of the users currently in Bitcoin is still the store of value. We're still trying to figure out what's the price discovery. So even though I'm an example of like it's already been used as a medium of exchange, and I'm all for that, like I love that. I have freelancers in Colombia and El Salvador.
Robin, if I could ask you just a favor to hold the thought. We're going to come back after this break. We do have to head back to the Falcon stage, though, if you don't mind. But we're going to come right back to talking about the medium of exchange here at the Bitcoin Magazine News Desk. Right now, we're over to the Falcon stage to hear about real-world assets on Bitcoin. To the Falcon stage, back here after that. We'll talk soon.
People, so let's enjoy and see what they have to say. So guys, for the topic of today, RWAs, Bitcoin, I know all of you well, but if we can start please off with a small intro, what each one of you guys does, what your companies do, and then we get it from there.
Hi everyone, my name is Scott Miller, I'm the founder of SideSwap.
I got it. Hey guys. Testing. Microphone for him.
Not working. All right. You working?
For him. Thank you.
Hi everyone, I'm Scott Miller, the founder of SideSwap. We've built non-custodial swap markets, so we have a non-custodial wallet where users can hold real-world assets within their wallet and swap them atomically or in coin-join transactions for either securities or other assets issued on Liquid. So we're involved in both wallet operations as well as building the swap markets, as well as assisting with issuance and whitelisting.
Amazing, thank you, Scott.
So let's give it a try. Can you hear me? Yeah. Perfect. Mine is working. That's great. Good morning, everyone. I'm Brahim Thais Hadigan. I'm an Austrian economist and entrepreneur. And one of my projects is DZATs. We build on Bitcoin Layer 2 protocol RGB, combine it with Master, and are interested in niche use cases of tokenization that leverage the privacy options and full decentralization that RGB offers and maintain some of the biggest advantages of using Bitcoin and building with and on Bitcoin.
Sorry, Rahim, a quick question. One of the last real Austrian economists, is that true that I read?
Yes, but it's an unfortunate fact. The Austrian School of Economics has virtually disappeared in Austria, as a lot of traditions have disappeared in Europe. And I consider myself the last Austrian economist in that tradition.
Well, I'm glad we have you in Bitcoin then.
Yeah, my name is Yat. I'm chairman, co-founder of Animoca Brands. We're probably known as one of the most prominent investors because we have over 628 portfolio companies and keep investing this year alone. Despite the choppy markets, we've done over 100 deals so far. In all tokens, in all forms of tokenizations, not just specifically Bitcoin. Most recently on RWAs, we have a joint venture in Hong Kong with Standard Chartered and Hong Kong Telecom around a Hong Kong dollar stablecoin, basically, licensed by the HKMA, or about to, let's see, it's all part of the application process. And then we also have a joint venture with Prov Labs on Nuva, which is an RWA marketplace. And happy to be here to talk about RWAs.
Amazing. Well, guys, like when I was preparing this panel, one of the things I was researching was last year, by the beginning of 24, we had $2 billion of tokenized assets. Mainly it was T-bills. As of now, it's 18 billion. So we've gone like 9x. Can we explain what is going on and how did the space go from 2 billion to 18 billion in the last 20 months?
Well, I think it's, from our perspective, very natural development. All of the, shall we say, benefits that you have with blockchain ledgers, where you have a ledger that's effectively operated by the users who control the assets as opposed to an asset operator. If you can bring these efficiencies to securities markets, there's a lot of benefits to be had, and I think the growth we've had so far is very large from a small level, but there's so much more room to grow.
Mm-hmm. I disagree. I have another perspective. I think the main reason is that Tether discovered a kind of shadow banking euro-dollar replacement. If you know the term euro-dollar, it refers to dollars created outside of the US and outside of the US jurisdictional purview. And with the high interest rate environment we had recently, that proved to be quite a cash cow. And so traditional finance, of course, over time realized that kind of cash cow, and with the positive signals with the recent US administration, there was a kind of green line trying to figure out how to get some of that cash flow into TradFi back. That's why we see a lot of money market funds, tokenization, and so far stablecoin is the biggest use case of tokenization. But of course that could enhance the way for other assets to be tokenized, but that I think is the main reason.
I mean, once you take out stablecoins to your figure to 18 billion, that still is an underreported figure. Because RWA reports that, but if you look at things like what Providence Labs has with basically the Helix product, that alone is another $15 billion, and then you've got other platforms that aren't measured. So I would say the estimate is closer to north of 30 or $40 billion worth of RWAs. That said, it's a tiny drop in the ocean when it comes to the actual RWA market. So while it's it's a big figure in relative terms to the industry, finance industry, it's a drop in the ocean. So we shouldn't get too excited, right? But I think the bullish use case is to say that there's a lot more growth to come. And the reason why we think is the last couple of years there's been a strong institutional focus on crypto and tokenization. The other thing is reaching new audiences. So if you look at places like Korea, reason why RWAs is becoming a more hot topic before, even with the regulator, is because the youth do not buy equities. Right? In Korea, I think sort of people under the age of 30, 60% almost exclusively only trade crypto. And if you look at the start of this year, in fact, Korean won trading, not as a stablecoin, but as Korean won trading, actually exceeded US dollars for a moment in time in Q1, right? So just to show you sort of the range. And Korea has many macro reasons, no taxes on trading, no free flow of capital, why that happens. But the thing is that the next generation isn't buying equities, not because they don't value it per se, but it's just not their medium, right? It's just not what they're used to. And so I think RWAs becomes another access point, distribution point to the youth and to new markets that they wouldn't have otherwise known. And that's appealing, right? But it's still the onboarding, but it's also what institutions understand. They're not going to understand meme coins or even Bitcoin, I would argue. They think they would struggle with that. But they do understand that they can take their mortgage-backed securities, or that they can take some royalty product, or they can take something along the lines of those sort of things that they get and tokenize the income stream and then sell that. They get that. And I think this will be a big theme for the coming years, as I think it's very institutionally focused, at least in the near to midterm.
Yeah, that is spot on, and I would like to double down there, and we can start the other way around, which is, as you said, the economy, we're talking about quadrillions of dollars, right? And indeed, it's a drop in the ocean. So what do we need to get to something more significant? Like, what do we need to get to, like, the first $1 trillion of tokenized assets and start being, still $1 trillion is a drop in the water, talking about a quadrillion-dollar or more economy, right? But what do we need to get there?
So, I mean, maybe I'll start with some thoughts. Of course, the audience has a lot of expert opinions, but my view is that in order to really grow the RWA space, we need an asset that can be really revolutionized through that, right? Like, if you think about where Bitcoin started, Bitcoin was a revolutionary asset in itself. It didn't have a peer. It had something new, and it appealed to an entirely new audience, right? It wasn't Wall Street that said, yay, Bitcoin. It was all of you guys here, right? And you created an industry that came from nothing, right? And so what are the industries that need this, I think, is probably the easier point. Institutions will sell, and they will keep growing, and they will add products to it. But if they don't get adoption, like if you're a family office, you can buy a HELOCs that isn't tokenized, right? You can buy real estate through a REIT. Like, you don't really need the token construct. It has value, but it's not why you do it. So you need to reach that new audience, right? And so I'll give you one example that we've been focusing on, which is student loans. So student loans is a $3 trillion market, and we're trying to RWA tokenize that, right? Because students need to receive, there's an infinite demand for student loans. Education is important, right? There can be efficiencies in terms of yield that you generate. Bitcoin is a perfect collateral asset for that type of stuff, right? And so there's a whole range of things you could develop, and it's a new audience that doesn't really know money. Like, think about it. Every student that receives a student loan actually doesn't know anything about money. He just gets a loan. He gets to spend it. But he doesn't actually learn about that. But if you can bring that on, you're bringing hundreds of millions of people into that infrastructure for, basically on the demand side, and then on the supply side, there's yield that is often government backed, right? That's the other thing. There's safety as well. Institutions want to know that if I give money to something, how is it backed? And the problem with pure crypto is, even with Bitcoin, even though we here would agree that it's a strong collateral asset, tell that to a family office. So but what is its value? I'm listening to people like Peter Schiff. I don't know, right? So you've got that type of stuff. So we feel like new asset classes are actually more exciting than real estate, for instance, which is important, but it won't move the needle, we think.
Yeah, I agree. I mean, so far the problem with tokenization has always been demand and liquidity. The challenge in demand is that most people don't see a new feature in tokenization, but added risk and added complexity. So I totally agree it needs, because it seems like you get the risk from crypto, but not the excitement and the upside and the revolutionary kind of ideas. So it's definitely in assets that don't look traditional or give access to people that haven't had that access. And that's mainly a regulatory challenge, I'd say, because that's the reason you don't have access to the more exciting venture kind opportunities these days. And so, of course, tokenization from the beginning and the crypto from the beginning has been a lot about regulatory arbitrage, and I expect that to continue, hopefully through competition of jurisdictions. And there I'm hopeful that with going towards a more multipolar order and stronger economies outside of the Western-dominated world, we have seen that the opportunities will increase, and they'll be learning from more forward-looking jurisdictions, like here in the Emirates, for example.
And sorry, Rahim, doubling down there again, do you think that now with the US I mean, and Donald Trump like spearheading all of this like radical change, let's say. Do you think that now actually countries will begin on this like regulatory race on who's got the best regulation and the best context, or still do you see like some hesitation?
For now it's positive, but it has a huge risk, of course. There can always be a blowback, and if it's all burnt through meme coin-like things, and it looks too much like enrichment of insiders, and there's a political change in the US later on, it could be a worse rollback. So, I mean, Trump has always been an ambiguous figure there, but for now, of course, the positive, shining example of one of the biggest, most important jurisdictions becoming more friendly is a good sign, and let's hope that something fundamental is built and it's not just like burned out and used for enrichment.
Yeah. Maybe just to comment on the US, I think the big trigger that will change next year is the Clarity Act. So the market structure bill is going to set basically the framing, the legal framing as to what is a digital commodity under the CFTC versus SEC, and of course a framing on utilities. We already know that Chair Atkins already has said many things around NFTs are not securities in this framing, and utility tokens, and most tokens aren't securities. However, it's not law, it's an opinion for now, right? And so once it passes law, we expect that every company in the US, big and small, is going to start going, oh, now I can tokenize. Remember what happened when the Genius Act was approved? Then Amazon and Walmart and Facebook and Google, they all said stablecoin, right? Before, they wouldn't even dare say that word. So that means we're going to see a lot more token innovation and token development, which includes RWAs as well, because they're going to understand what framing they sit in. And you're going to see some, I think, interesting innovations that happen, which is really what they want to do, drive here. For instance, maybe it doesn't mean ownership, but maybe you, people are talking about basically sort of tokenizing the income stream, royalties, right? So they're a form of an asset that isn't really sort of the physical asset itself or the ownership, but a version of that they can basically sell on, for instance, right? And then think about what happened in private markets, right? A lot of the secondary marketplaces like Forge and so on, they all started getting acquired because you can see much more activity. And many of those companies, like take all those big, giant, I mean, there's giant private companies now, larger than public companies, right? That are meaningful, right? They may never want to go public. They may think in the future around, you know, maybe 5-10 years, maybe I'll just tokenize the business as a whole, right? Because the thing about RWAs and tokens generally is market access to a broad market. If we announced our merger in the US, why? Because in the US, there's the deepest capital market, right? It's the NASDAQ, New York Stock Exchange, but it's a monopoly to the US market, right? And we're in Hong Kong, London, you could have a stock exchange there, but it's harder, or an American just won't buy the stock in London or Hong Kong. I mean, he can, nothing stops him from doing it, but they may not want to or whatever, right? And it's permissioned, effectively. Whereas if it's a token, everyone can offer it, right? Think of every token, whether Bitcoin that's out there, every exchange can offer it on a permissionless basis, right? And that's basically where the future of markets is going to go. And with that framing, if you have a way of listing your company that way, wouldn't that be better than thinking about a closed loop exchange, right? And so I think that's kind of where it's going. And then think about all the people, you're in Argentina, right? All those people who have crypto, many don't even have a bank account, right? They can now become your buyers, right? In the current framing, they can never even have access to what you're offering, right? So, how do you reach 1 billion new customers? That's how you do it.
100%. And Scott, you here, like you inside Swap, you've got plenty of securities and so on. Like, how is it all looking for you and for the business, and what's your outlook basically?
Well, I think the market, in order to grow, it needs effectively a lot more clarity in two aspects. One is the regulatory aspect, because one of the challenges is because when you tokenize an asset and you transfer these assets between different token holders, since securities require all the KYC and AML requirements, very few jurisdictions actually allow you to update the registry without having a notary public or someone else interposed in between the two parties to the trade. So I think it's important to figure out how you build effectively a central securities depository, and that can be done in many different jurisdictions, but where the premise of the central securities depository is that when you tokenize, that you would be able to transfer the assets in real time between those parties who have been whitelisted. You can have exchanges come in and who have a big omnibus account where their user base of those exchanges could whitelist themselves and withdraw their assets from the different exchanges, but in order to benefit from the tokenization of assets, the end user needs to be able to hold the assets. And right now, I think there's a lot missing on the jurisdictional framework in terms of how to build these forms of distributed securities depositories, if you want, where there's a unified standard. That's one aspect, but then the other aspect is for users to be able to hold these assets themselves, they need to be comfortable holding their own keys. And right now, if you're an end user, such as our users, which are like small individuals, it's maybe fine to manage your own keys and you have your like 12-word seed. But if you're a big institution, like how does it work? Because right now, I mean, it works very well with the securities markets, with the clearinghouse, where you just post margin and then you settle on a T+2 basis, and I mean that's very efficient for them. Like to settle on a trade-by-trade basis in a tokenized swap market, is that where they want to go? Maybe not now. So yeah, I think the market, baby steps getting there, finding use cases as well as regulatory clarity within a few areas, and build from there effectively.
I see, and I want to ask something, and again, I'll begin with you, Yat. One of the points that you were mentioning was accessibility, which I completely agree. And I'm from Argentina, guys. Even if I wanted to have top up my interactive brokers account, it's still a pain in the ass, basically. I still have capital controls. I need to literally getting money into my broker is a mess. Whereas if I just can buy crypto and buy a stock or a tokenized asset, it's in 3 minutes, I have my investment. This is it. Still, we still see in all of these new players on the back, and there's plenty of new players tokenizing US equities and so on, that we still have these certain kind of restrictions, and well, this issuer does not allow the free transferability, and this other issuer they do, but watch out with Europe, or watch out with this, with that. When do you guys think that we will see a moment, an infrastructure, or a context where they literally you can literally do whatever you want, no restrictions, and more freedom within the assets?
So I think, my general view on this, and we have to distinguish between utility and securities. I think the onboarding, if you think about utility tokens, and of course there's a lot of speculative ones, and we won't talk about commentary, what type of tokens, but the point is that I think of utility tokens as the training, onboarding for essentially, eventually to get into securities. I don't think we'll ever get out of the framing on securities law.
In just 16.
Right? We won't ever get into a position where KYC, AML will go away. I think that's something that will always be there, right? So we have to expect that. So that means we have to. But what is the barrier? The barrier is, first of all, understanding the asset class in and of itself, right? I think utility tokens are good training wheels. We saw this with gaming, right? For instance, in the Philippines, sure, there was a lot of speculation on Axie Infinity, but when Axie actually took off, after it sort of calmed down, suddenly millions of Filipinos who do not have a bank account but had a crypto wallet, had some tokens, suddenly started thinking about, okay, well, what else can I do with this? And then they became investors. And more importantly, they started to begin their journey of financial literacy. So when you think of Ondo, I mean, it's great, and Figure and all those guys are doing amazing jobs in RWA, but they still appeal to the same people who want to buy RWAs, right? My mom is a musician. She's not going to buy Bitcoin. Sorry, guys. It's just not what she cares about, right? But when we tokenized the Stradivarius 2 years ago, which is a rare instrument, you might not care what that is, but my mom cared about it because she's a musician, right? And she's like, oh, I understand that that's valuable. I understand that has potential. And so that's what, to me, RWA potential is. We learn about money because our children, because they trade Pokemon cards, not because they buy Bitcoin or they know about the stock market. And then through the journey of trading Pokemon cards, they learn about money. And then some people say, oh, I can make an investment. Oh, no, I can accumulate cash. What does that mean? And then they may become good stock traders later. Who knows? My point is that they learn about money that way. Right? So I see the pathway not as how does it all mix together. We'll still do this, and ZK sort of proof identity and so on can be a way in which you can have that. On-chain KYC AML will work in the future quite well, but we have to train them, right? We have all this financial protection because of the financial illiteracy that's out there, right? Abu Dhabi, New York, Hong Kong, they have 60-70% financial literacy. You go to Europe, a lot less, right? You go to Africa, even lower, right? So most of the world doesn't know about money, and I think that's the journey. So to me, the utility tokens are the ones that onboard people into the space. They learn about it, and then they're ready for the next market. That's how we think about it.
Well, the biggest issue so far, a lot of tokenization has been a sham tokenization for the regulatory reasons. If you need to have a centralized ledger, then most of the advantages go away, and the only way out there is either small club-like things that get these crowdfunding exceptions and so on, or if we really manage to have an accepted digital on-chain kind of KYC token, where you don't expose all your personal information into a central honeypot, but still have a reliable process of whitelisting people that are allowed to. For now, we have a lot of walled gardens, and that, of course, limits the growth of it, and that'll remain a challenge for sure in the next few years. And that's also, I think, why we see a kind of reverse reaction. We have seen much more than getting financial assets on the digital and blockchain space. We've seen a lot of refinancialization of digital assets and more of that, because it makes it easier, it makes it more accessible to your current brokerage and be within the larger walled gardens due to regulation.
Scott?
No, I very much agree with those points. The tokenization so far, very rarely do you have actual tokens that circulate freely out in the public. The utility tokens, which many times act as like bearer assets, which is like what stable coins also do. It's very easy to get them distributed and have them traded and held by the end user. But when you look at the tokenized assets, many times it's an exchange managing the issuance. Rarely do these tokens ever leave the exchanges. So even if they are tokenized, you are effectively in a walled garden, and shall we say, the Bitcoin-based capital markets or the blockchain-based capital markets that you're looking at, which is effectively a new type of clearing structure, a new type of settlement structure, they don't really arise within that ecosystem. So I think there's still a lot of work to do in terms of building the layers so that we can have these tokens held and distributed by the public. So for now, as you said, the utility aspect of having the tokens is a very good entryway in order to get people comfortable, but then you need to have the wallets support somehow managing the KYC assets, and how do you trade them, how do you distribute them, how do you swap them peer-to-peer if you don't need account or a marketplace. So there's all of these questions. So there's lots of growth, lots of questions, lots of things to resolve. It will take years, but it's a nice journey, and I think as long as there is somewhat clarity in terms of where we want to go, it helps a lot.
Amazing. Bueno, RWA possibilities are endless, guys, but our time is not. So thank you so much for this amazing panel, and wonderful to have you here, and big applause for our speakers here. Thank you.
Of a Bitcoin journalist, joined to my left by Robin Saylor, host of the Robin Saylor podcast, as well as Michael Markle, the medium of exchange. And we just had the one and only Michael Saylor walking by us, surrounded by sheikhs. I mean, an amazing sort of symbolic moment here, right? Michael Saylor's first time in the region, in the Middle East. He'll be delivering a keynote. He's been in Kuwait. He's been making his rounds in the Middle East, talking with royal families, sovereign wealth funds. And we just got a little taste of what that must have looked like as he walked by the live desk. Quite exciting stuff. But let us get back to the medium of exchange, which we were talking about earlier. Michael, if you could bring us into a little bit of the background of what goes on at these conferences when it comes to accepting payments, what we do with BTC Pay Server, please, some details if you will.
Sure. So my role is like, obviously when you come as a spectator, you're looking at the talks and all the, you're meeting with the sponsors, meeting with all the Bitcoiners you want to meet. But at the end of the day, like, the conference is a mini case study of what a potential hyper-Bitcoinized world looks like, because not anywhere do you have a mass migration of Bitcoiners coming into one place in person, which is a very important component to medium of exchange elements. And it's cool to see kind of the data on like what that looks like, because my ultimate goal at the end of the day is like eliminating fiat. And I think that starts at the Bitcoin conferences, and that's just not our Bitcoin conferences. That's Bitcoin conferences all over the world.
We love that. A bold goal, if you will. We like that. Robin, you've mostly eliminated fiat. You get paid in Bitcoin. You use Bitcoin quite frequently. What is it like living on a Bitcoin standard?
It's really cool because you see the second and third order effects of that. And
Please,
so, for example, I pay my editor Pablo in Bitcoin, sometimes also in fiat, depending on how he needs it, but like mostly in Bitcoin. And what he told me the second time, like I paid him in Bitcoin, was so cool because he had someone else working for him and doing something for him, and then he was like, hey, do you want to get paid in Bitcoin? This was a completely non-Bitcoin person, and he was also like a little bit in Bitcoin already, but like got orange pilled because he edited 300 Bitcoin episodes.
That'll do it. That'll do it, yeah.
on my show. And the thing is, like, if you pay in Bitcoin, you might just encourage someone else to pay someone else in Bitcoin.
Oh.
And that's a grassroots movement I think that we need. And that's why it's so important that even though I don't think we are yet there, that we need to do it. And we are like we are the forefront of the adoption, so we have to like accept it, and we actually have to demand it to get paid in Bitcoin. Like every partner and sponsor that works with me currently, I only get paid in Bitcoin, all Bitcoin.
Okay.
And so like that has to like kind of get out there to like, okay, I want to also give that back. If I can pay my burger in Vienna with Bitcoin, I will do so.
Okay.
Lightning on-chain, I don't care. It has to be Bitcoin.
Making on-chain transactions for burgers in Vienna, ladies and gentlemen. That's what we're talking about here at the news desk. But we do have to head back to the Falcon stage, where we're going to be hearing about institutions adopting Bitcoin as the rails for traditional finance. Please don't go anywhere to the Falcon stage, and we'll be right back here at the news desk after this.
Ashley, CEO at AlgoQuant. Please welcome them on stage and be louder. The floor is yours.
All right. Well, thank you, everybody, so much for joining us today. I really appreciate it. My name is Brian Dixon. I'm the CEO of Off the Chain Capital. And before we jump in, I just want to do a quick introduction and go down. So our firm, Off the Chain Capital, we're a Warren Buffett, Benjamin Graham style, a deep discount value investor in the blockchain space that's always leaned very Bitcoin heavy. And excited to speak with everybody today. So I'll pass it to you.
I'm Michael Martin. I'm with Bank Julius Baer in Zurich. Bank Julius Baer is Switzerland's second largest listed bank at this point, with a 130-year history. And I am responsible for clients with a digital asset nexus, so both institutional and on the private wealth side.
Greg Carson. I'm the managing partner of Humla Ventures. We are a 5-year-old venture capital firm investing in the ecosystem and in financial markets. We call it the financial markets ecosystem. A couple examples, we invested in Deribit early on, and that was an exit this year to Coinbase. And we invested in Hidden Root Partners, which was sold to Ripple this year. And we're in a few other ones. A lot of stuff around Bitcoin ecosystem, but also general TradFi technologies and markets technologies. Our other specialty is we do secondary investments, where we basically invest in like Series B to Series D companies, and we buy shares from existing shareholders, executives, and early stage investors.
Good morning. My name's Michael Saylor, the CEO of AlgoQuant. We're a multi-strategy hedge fund. We're born out of one of the large... Hear me now?
There we go.
Okay. Good morning. I'm CEO of AlgoQuant, a multi-strategy hedge fund. We're born out of one of the large Bitcoin OGs family offices. We're one of the larger multi-strategy funds in the space. We have 35 investment pods, and we, I guess, are a quantitative add to this panel.
Very good, thank you. So, great. One of the interesting trends that we're seeing right now is this institutional adoption of Bitcoin. And there's a variety of different ways that that's occurring. Everything from ETFs to custody to public market transactions as well now. So I'm curious to get all of your perspective on when we think about the institutional rails of Bitcoin coming into that space from an operational standpoint and from the insight and trend perspective. What are you guys seeing that's interesting?
So what we've seen is that the launch of the ETFs was very successful, also from our side. It seems to take away a lot of the angst of clients having Bitcoin wrapped in an ETF, and within an institutional setup. So we also do offer Bitcoin spot, so it's interesting that we have the ability to observe both. So what are the trading volumes on the ETF side of Bitcoin, and what are the volumes on the spot trading side? And this year, just rough numbers, I'd say ETF Bitcoin volumes outpaced spot trading volumes about 5-1. So that definitely shows how sought after these Bitcoin ETFs really are from a banking client perspective.
Great.
Yeah, I think this is super interesting because we've always been, we've been on the stage many times last 2 years saying, oh, this is the big year for institutional, this is the big year for institutional. I think this was the institutional year. I think what it means is basically the wealth managers have recognized Bitcoin as a real asset, have recognized that it needs to be serviced. The big companies have started authorizing custody for Bitcoin. Some of the wealth managers are even doing a little bit of that. And then obviously with IBIT and the ETFs opening up Bitcoin for all the general American investors is super big. The biggest thing I think is that because the administration has embraced Bitcoin, the institutional, the banks, the investors, the wealth managers have had to make steps to create their product, to change their products around the whole Bitcoin universe, and they're setting up the Bitcoin ecosystem to actually start to do technological things. I think right now it's been more like a psychological year where they're worried about it. They know it's an asset that needs to be in portfolios, that kind of thing.
Absolutely. Michael, how about you?
Yeah, I'd agree with that. I think it's still very early. So we don't have a lot of the large hedge funds entering crypto yet. There's still a lot of recycling of capital. Most hedge funds are $50 to $100 million, which is tiny in traditional finance. That said, I agree with you. I think the infrastructure is starting to be built, which will give these guys comfort that they can actually enter the space. And so we need the Citigroups, we need the Bank of New York Mellons to have custody. That's now starting. You're also seeing something called tri-party emerge, which basically means we can hold our balances in treasuries and then reflect them onto exchanges. The main risk for a trading shop right now is the exchange risk, because we've seen a huge event, 10/10 in October, and it really caused everybody to take stock of the continued counterparty risk in the market.
So we're seeing very interesting things as well in terms of where we've been over the last couple of years versus where we are today in terms of institutional adoption. And I'm really curious from your guys' perspective, 3 to 5 years back, right? What has been the fundamental change in the market over the last 3 to 5 years to where we are today that's dramatically accelerating institutional adoption? Because there's been things such as, people's investment mandates wouldn't allow for it. There's been custody risk. We have the ETFs that are now online. From your guys' perspective, what are you seeing that is really the tipping point where institutions are finally at a point now where they're like, okay, yes, we want to take this seriously. We understand that. Michael, why don't we start with you?
So I think two points. So one's actually happened in the last 24 hours. So the US regulators have said that they want to have tokenized real-world assets, so Bitcoin, Ethereum, as good collateral for derivatives. This is CFTC. That's a huge piece of regulatory news because it basically allows us to use Bitcoin and Ethereum as a base to enter the financial markets. And so I think as we get regulatory adoption, if you will, it does open up a huge TAM, which is still quite small. The other point, I think, is tokenized equities. I think that's the other thing that's coming next year. And again, that's going to be a huge lift. And if we have Bitcoin as collateral, we can then trade tokenized stocks. And so it really gives Bitcoin as a store of value a huge use case, which we haven't had to date.
Greg? I mean, I guess the question is, it's kind of similar to the first one, but it's basically what's changed over the last 3 to 5 years that's set us up. And I think the main thing has been education. You know, basically Michael Saylor has been super, you know, vocal about the concept of Bitcoin is, and I think the transition of basically everyone in Wall Street realizing that Bitcoin is not this kind of like negative narrative, you know, thing only, you know, basically used for criminals and that kind of stuff. And Saylor's done a great job to establish that it is a scarce commodity, and it's a key component to how Wall Street will work from a financial tool standpoint. I think that we've come up to the point where it can now start to be used as rails. I don't think that anyone realizes how close we are to the ability of moving all the stuff that was created in the last 3 to 5 years in DeFi and all the other crypto innovations. And I look at those as, I look at the pyramid of innovation as like all this Ethereum and Solana and all that kind of stuff is where they come up with ideas. And in my opinion, and I said this like on Peter's podcast like 3 years ago, is that those are basically a test platform to eventually end up on Bitcoin. And I think that's where we're headed in the next 3 to 5 years. In the next 3 years.
Okay. Michael, how about yourself?
So from a Swiss bank perspective, the key event was really around 2018 was regulatory certainty. So the Swiss regulator very early on, contrary to other jurisdictions across the globe, we have had regulatory certainty since 2018. So after the 2017 ICO boom, the Swiss regulator recognized, okay, this kind of look like financial assets, so we have to regulate them. They came out with guidance 2018 and said, okay, Bitcoin, that's a payment token. And that, as a consequence, gave the banks and the financial service providers in Switzerland sort of the regulatory certainty and the framework how to operate. So based on that regulatory certainty, we were able to develop an ecosystem of financial services around digital assets and Bitcoin. And that was very, very positive. So Switzerland was also one of the first countries globally to have crypto natives bank in place. And that, again, helped to sort of kickstart the ecosystem around digital assets. So for us, it was definitely the key event was a regulatory certainty we've had in place for 7 years at this point.
And one thing I'll add that I think that we're seeing is very fascinating that 3 to 5 years ago we did not have in the space is basically the securitization of Bitcoin, right? There's all these institutions and insurance companies that can't really buy Bitcoin direct. They can't custody Bitcoin themselves because of their investment mandates and their custody mandates. But when we started to see what Strategy did in the market and now these other treasury companies that are hitting the market as well, it's really opening up a whole new avenue of institutional capital to flow in and get exposure to the space because you can do it in a format that fits with their investment guidelines, right? They can buy public equity, they can buy convertible debt, things of this nature. So that's another very interesting on-ramp that didn't exist several years ago that now that we're seeing that I think is providing these new rails for institutions to get exposure to the Bitcoin landscape. Another really important thing that differs from country to country, but at a macro scale, we see a lot of this happening in the same direction anyway, is the geopolitical situations that are happening, right? Central banks printing excessively, BRICS, things like that of different countries that can really impact the monetary system for where Bitcoin has such tremendous potential. So from your guys' perspective, what is the geopolitical scenarios that you're seeing play out in different areas of the world that are really impacting how institutions get exposure to this space? Let me start with you, Michael.
Tricky question. I think what people start to appreciate from a geopolitical perspective, and when you refer to geopolitical uncertainty, is they appreciate Bitcoin as a diversifier for the portfolio, right? So that's what we're seeing, that people are starting to recognize Bitcoin as sort of savings technology, what it should be, right? And the way we facilitate that at our bank is we provide research coverage on Bitcoin. We're one of the few banks to provide institutional grade research on Bitcoin, and hence we also advise on Bitcoin and recommend our clients to have a 1 to 1.5% allocation to Bitcoin in their global portfolios, just to cope with that.
Not 99%? Just 1 to 2%, not 99%?
No. So I know the story. Then you have to have 49 better ideas than Bitcoin. No, so it's 1 to 1.5%, just again to cope with that global situation.
Okay. Very good. Great.
I think that it's kind of like a metaphoric rails for the finance system, where they've now, with all the education, people realize that Bitcoin is almost a hedge against inflation, against the money printing, and I think the fact that the administration and the Genius Act, the various digital assets regulations, the very clear guidance coming out in multiple jurisdictions, UAE especially, United States especially, is created a whole infrastructure of conceptual and legal framework that allows it to kind of evolve as an asset within that general framework.
Michael?
Yeah, I think from a trading perspective, there's still a lot of regulatory arbitrage. So if you're a U.S. ultimate beneficial owner, you can't access most of the exchanges in the world, and that's where liquidity sits. So I agree, the UAE has done a great job of creating an ecosystem here. You have most exchanges now based in Abu Dhabi and Dubai, but we're still a ways away from having a unified global regulatory rule set.
So even though we've made a lot of strides in institutional on-ramps and adoption over the last couple of years for them to enter the market, we still have a lot of bottlenecks that exist with some of these different organizations. So from your guys' perspective, what do you see as the biggest institutional bottlenecks we still have today? Is it custody? Is it trading? Is it liquidity? Is it investment mandates? What is it from your perspective that you're seeing? Greg, let's start with you, and then we'll do Michael and come back to Michael.
I think the biggest barriers are the consumer understanding of the asset and the institutional understanding of the asset. I think that and also to bring it back to the kind of the main subject of the thing I think we need to touch on this by the end is the chance of the rails to become something. I think we definitely want to, I think just to talk about that a little bit is that I think that we've gotten past custody, that's now in place. Some banks have it nailed down, some do not. But with all these technologies that we had before, there's an opportunity now to start wrapping Bitcoin with technology, to have decentralized yields according to Bitcoin, to start lending against Bitcoin. This is the most important, Rails-related financial asset component of the Bitcoin story. We invested in a company called OpNet. They're actually building an entire programmability on layer 1 in Bitcoin, which is going to allow for native lending, basically, I believe it's going to be the first chance for both USDT and or USDC to issue stablecoin on top of Bitcoin without having a layer 2. And that's going to enable for a lot of this kind of integrated capability of both kind of distributed financial institutions and then the main financial institutions to take advantage of what is the most secure database and most secure ecosystem for finance that's ever been. So I think that that's something that to touch on, that this Rails is most people believe it is conceptual, but I would be willing to predict that within the next 12 to 14 months, we're going to see a very hard application of Bitcoin as a technology, not just as an institutional asset class. And that's where we've come up today. Right now, we're basically at the end of the beginning, which is it needs to become an international recognized asset class that's regulated all over the world. And it's gone so far now, and now it's going to be the opportunity for it to become an actual technology that is going to blow everybody away, because with programmability on place, with the things that like the OpNet guys, and there's a lot of other technologies we saw, like ordinals, all these things that kind of apply. Those were the first little baby steps towards what's possible. And now you have, we've seen all these investments in all these Bitcoin technologies. They're going to get filtered out. I think like 90% of them are going to get cleared out, and there's going to be 10% that have technologies that actually help for this institutional adoption. And institutional lending and institutional DeFi on what I would call the SlowFi network, which is the Bitcoin slow but secure digital rails.
Mike, how about yourself?
Yeah, I guess from our perspective, we sit on hundreds of millions of dollars of Bitcoin. This time last year, if I wanted to borrow dollars of that Bitcoin, it would cost me between 13 and 15%. So if you have a hurdle rate of 15%, it's very hard to outperform that. It basically renders Bitcoin useless as a collateral. Fast forward to today, it's now around 7 to 8%, so it's halved. And I fully expect it to half again next year. If we do see that happen, Bitcoin becomes useful as a collateral mechanism for us to trade with. And that is really a huge leap. And so I think we really need the banks, and not just the forward-thinking banks like Julius Baer, but some of the larger banks to utilize this as good collateral.
Okay. Michael?
So from a Swiss bank perspective, I think the biggest bottleneck is that our KYC and AML always has to be bulletproof, okay? Because if you offer, for example, Bitcoin wallets as a bank, you're accepting transfer-ins, which means you have to do chain analysis. And that process, same as with KYC and AML, when onboarding a client per se, that's a manual process, okay? That's hard to automate. And that slows down things substantially. Same when we send Bitcoin out. In Europe, we have something called the travel rule. So we have to understand where that Bitcoin is being sent to, and the beneficial owners behind those wallets. And again, that's the process which at this point in time is still very hard to automate and to scale. So that's where I see the bottlenecks in my daily activities.
Yeah. Very good. So the last question that I want to discuss with a couple minutes that we have is, I'm a big believer that I think we're going through a massive mega curve of adoption right now, right? And usually when you look at S-curve adoption, it takes the same amount of time that a new technology to go from 0 to 10% adoption that it takes to go from 10 to 90% adoption, right? And this is true of the printing press, automobiles, fax machine, the internet, mobile computing. They follow the same growth curve. I think we're about to reach that mass growth curve section where we're going to hit the 10 to 90%. So if that takes place and Bitcoin becomes the global institutional settlement layer, let's say hypothetically by 2030, 5 years from now, what does that look like? What are the applications? What does that actually look like? Greg, do you want to start?
I think that's a really cool analogy. But I think if it's the same to 10%, or are we about 10% now, is what you're saying? So then we got another 10 years to get to 90.
Get to that point, yeah.
But that means 2030. My big prediction for 2030 is 10 trillion in stablecoin.
Okay.
So I think that for sure we're basically at $10 trillion globally in stablecoins, which means that Bitcoin will be enormous at that point. I know we got to go down. We're probably in a bull market now, a bear market now. We've got to go through another bull, and then one more time we're up there. And I think 2030 becomes like the middle of that S curve. It would be nice if what we're seeing now, where it's kind of toppling, you see it kind of curving off, if that actually becomes an S curve and goes up again, that would be amazing. But I think that in the short term, I'm a long-term Bitcoin maximalist, especially with the rails, things like OpNet, these kind of things. But in the short term, I'm a stablecoin maximalist. And I think that stablecoins are doing 90% of the promise of what Bitcoin is supposed to do in the 50-year plan is going to be happening now. And you're going to see trade finance, massive trade finance in commodities. You're going to see Tether become a massive dominant force on the global stablecoin. I mean, it's already doing $3.4 trillion of turnover per month. That's just Tether with its $150 billion of printed Tether is turning over 3.2 trillion a month. So imagine if we have 10 trillion, what that's going to mean. It's just going to amount, the enormous amount of the economy is in stables. That's my pleasure. Go ahead, Michael.
Yeah, I'll be fast. I think if we do see this happen, we won't talk about Bitcoin anymore. Bitcoin will be the underlying non-seen asset. And I think if that becomes the foundation for everything, it's good boring.
Michael, you finish this off?
I'm not a big advocate of the notion that Bitcoin is going to become the dominant liquidity layer, just because I see how efficient the banking system already operates. The financial markets are incredibly efficient, and that's not to be underestimated. I think Bitcoin plays a role when it comes to, again, being a force of good when it comes to financial enablement. People having savings technology on hand they can access at all times across the globe. Liquidity layer, let's see.
Yeah. Very good. Well, one thing is for certain is we do see tremendous institutional adoption. We're really getting across the borderline in terms of what they used to be, in terms of the custody, the on-ramps, everything that we're seeing today. It's growing at an astronomical rate. People up here are doing great work in this space to assist with that as well. So I want to thank our panelists. Thank you so much. And please join me in giving them a round of applause.
Thank you.
Whoop.
Fantastic. Amazing session.
Back to the Bitcoin Magazine news desk powered by Crypto.com. I'm Frank Corva, Bitcoin journalist, joined by none other than Nassar Al-Ashkar, Chief Strategy Officer at CoinW. Nassar, pleasure to have you here with us.
Thanks for having me. Thank you so much.
Yeah, a pleasure to have you here. You're a wealth of knowledge when it comes to Bitcoin, blockchain, crypto adoption here in the region. You founded the Dubai Blockchain Center, if I'm not mistaken, in 2016. You've seen immense growth since, so please give us a little bit of what this timeline looks like.
Yeah, so I was the co-founder of Dubai Blockchain Center in 2017, actually.
17, okay.
Along with Dr. Marwan Zaraouni, he's my partner at that time. So yes, we witnessed the huge transformation in the blockchain space and crypto as well. So we started very small, just convincing Dubai Future Foundation how important blockchain is and the cryptocurrency and so on. And we started by educating the people about the blockchain industry and the cryptocurrency from a small center. And fast forward until now, look, as you can see, it's a huge transformation
10,000
happening.
people, right?
10,000 people, too many events around, all the huge companies becoming to the region and having their headquarters based here in UAE. That shows big steps has been done so far in the region, and especially in UAE.
Thanks to your work. Also, we were talking a little bit off camera, the region in general, beyond the UAE, who's leading right now? Where should we be focusing our attention aside from the UAE, which obviously we're seeing a lot of development in?
Yes, so let's be fair here. UAE was the first to have this forefront vision to adopt this technology from the beginning. And we have to thank our leaders for this. They have a huge vision to just jump into any technology that's happening worldwide and try to be close to it and to understand what this technology is about and so on. And then they try to find the proper regulatory frameworks for this, because you need to regulate the space in order to bring big institutions and make it easy for the users and companies and so on. So definitely UAE made the first steps. That's why UAE is leading. And that's why, as you can see, all the headquarters are based in either in Abu Dhabi or in Dubai, and different jurisdictions like ADGM or the IFC or the MCC and so on. Bahrain is doing a great job as well. Saudi is catching up very fast.
They're about to have a big meeting, if I'm not mistaken. We had Saifuddin Ammous, author of the Bitcoin Standard, on the desk with us. He said something in Saudi is coming up soon. Are they about to have a big conference on this?
Soon, okay. Yes. So Saudi, definitely they are to start opening up, and they want to regulate the space as well and be part of it. And the good thing that this region is like a mirror of each other, these countries.
Yeah.
So that's why it's called the JCC countries. So it's kind of a replica. If you implement one system in one place, you can easily replicate to another country in a very easy way, in a very easy manner.
Appreciate that. We're going to come back with Nassar here after this. We're headed back to the Falcon stage to learn about insurance on Bitcoin. To the Falcon stage, we'll be back here at the news desk after this.
Sure.
The few options that do exist are fatally flawed because they are denominated in fiat. If the Bitcoin price goes up before a claim is paid, you are left with less Bitcoin. Tragic for individuals and families. For a corporate treasury, a breach of fiduciary duty, replacing the world's hardest asset with fiat isn't insurance, it's forced liquidation. We need insurance built for the Bitcoin standard.
I'm Aaron Daniel, co-founder and CEO of Resolver. Resolver is closing the Bitcoin protection gap by putting insurance on the Bitcoin standard. Existing custody solutions leave Bitcoin holders uninsured. About 14 million Bitcoin are uninsured. That's nearly a $1.3 trillion exposure. If you leave your coins on exchanges or with a custodian, you face the risk of insolvency, phishing attacks, and exchange-wide breaches. In the event of one of those exchange-wide breaches, your counterparty is covered, not you. You are an unsecured creditor. Large institutions and Bitcoin corporations are aggregating all of their Bitcoin into just a handful of these custodians, creating systemic centralized risk. If you do self-custody, you face physical risks of loss, destruction of your hardware wallets, and violent theft. Homeowners, renters, insurance policies, corporate policies like errors and omissions, directors and officers, they exclude digital assets from coverage. And if you do use the industry standard, native, multi-signature, collaborative custody solutions, you still face the risk of kidnapping or violent coercion to force you to make those transactions. So that's the protection gap. Compounding this protection gap is the fact that the existing policies today on the market are priced in fiat. What that means is, if you lose Bitcoin today and the price rallies during the claims process, you're left with less Bitcoin. That is loss of generational wealth through a mismatched insurance product. And it is a breach of fiduciary duty if you are a corporate steward or a trustee. If you're a Bitcoin corporation whose mandate and strategy is to accumulate Bitcoin, you cannot protect your Bitcoin per share ratio if you are insured in a currency that depreciates. Well, today, Resolver is closing that protection gap through BDIC, the Bitcoin-denominated insurance collaborative. BDIC is Resolver's embedded insurance marketplace. It allows Bitcoin holders to secure and insure their Bitcoin wherever they choose. We're not asking you to change your custody setup to get insurance. We're bringing regulated coverage providers directly to your wallets and custodians. Those platforms, in turn, are incentivized to harden their security and controls in order to pass rigorous underwriting and qualify for BDIC's affiliate fees. So in this way, BDIC is aligning incentives to make the Bitcoin economy stronger and more resilient through market-based pricing signals. BDIC's coverage provider partners are licensed to issue Bitcoin-denominated policies directly to Bitcoin holders. The Bitcoin holders, not the wallets or custodians, are insured and made whole in the asset that matters, 1 Bitcoin lost is 1 Bitcoin paid. That is true indemnification. And coverages include not only risk of loss or theft, but also kidnapping and ransom. So these Bitcoin native policies protect your investment for the long term and satisfy your fiduciary duties. So how does Resolver do this? Our purpose-built payments engine settles premiums, commissions, and claims payouts natively in Bitcoin over the Bitcoin and Lightning Network. Not only that, but our payments engine supports multiple currencies within a single transaction. So what that means is Resolver can split off a broker's commissions in dollars if that broker is not yet accepting Bitcoin. This is how Resolver bridges the traditional insurance industry to the Bitcoin economy. Our coalition of founding BDIC partners reflects that merger of two worlds. It includes some of the most established insurance institutions, as well as insurance innovators, and pioneers of Bitcoin infrastructure and capital markets. Among them, the largest risk manager and broker in the world, Marsh McLennan, and the Bitcoin OGs and legends at Blockstream. And I'm thrilled to announce today that our initial launch partner is Liana Business Wallet. Liana Business Wallet is the most advanced enterprise self-custody wallet on the market. With Liana Business, the risk of loss is drastically minimized by time-locked on-chain recovery paths. And now through BDIC, Liana Business is the first insured enterprise self-custody wallet. Resolver and its BDIC partners have put insurance on the Bitcoin standard. Policies are denominated in Bitcoin as the unit of account. Bitcoin is the medium of exchange, and Bitcoin is the store of value. Because BDIC is an embedded insurance solution, it brings insurance wherever Bitcoin is, creating the foundational layer for the Bitcoin economy to thrive. Sign up for a Liana Business Wallet backed by BDIC at lianawallet.com/business and go to bdic.io to join our waitlist and get updates on our future platform partners and rollouts throughout 2026. Liana Business will be available early 2026, followed by additional partners. Policies in Bitcoin on your preferred custody solution. That's insurance on the Bitcoin standard by BDIC. Thank you.
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. We're here in the middle of the day. Things are warming up here at Bitcoin MENA 2025, Day 2. I'm Frank Corva, Bitcoin journalist, joined to my left by Nassar Al-Askar, Chief Strategy Officer at CoinW, and Rahim Tagizodigan, Austrian economist with a Middle Eastern background. I'm going to start with you, Nassar. We were just talking a little bit about what's happening in the region. We also talked a little bit about whether or not retail or institutional is here. Who is coming to Bitcoin/blockchain right now in the UAE in particular?
So if we're talking right now, we're witnessing both retail and institutional. So we started back in time, like 5-6 years ago with retail, but now institutional start coming to the space. So we start witnessing like large family offices, licensed companies, and so on. They start tapping on this as an additional financial instrument, and this is something very important. And they start discovering as well the new, let's call it, especially the RWA, the real world assets as well. Okay. So this is a new discovery that will bring huge institutions to the region, especially the real estate market is big here and so on, and they'd like to tap on this big time.
Appreciate that. Speaking of opportunities like that, new opportunities, Bitcoin in the region, challenges for adoptions, opportunities in the Middle East. Rahim, what are you seeing?
Well, the biggest challenge is the Middle East is actually two very different worlds. Some of the best places to live at in the world, some of the worst ones. My family background is in Iran and Lebanon, two countries that will have the highest need and highest pain points actually to adopt Bitcoin.
For Bitcoin, right?
And there's a lot of interest in the population, but the biggest challenge of these really bad places to live at is it's really hard to do savings. And Bitcoin has primarily been a savings technology so far. There's hope with like remittances going, but there's also a psychological challenge, an infrastructure challenge. Right. People are used to the tools that are working, have been working, they trust. So that's a big issue. In the other world of the Middle East, places like this one where we are at that are really dynamic at the forefront of development, it should be brighter, but actually because it's that dynamic and entrepreneurial, Bitcoin as the most conservative asset within the crypto space or the digital space, I think there's some reluctance, and it seems partly to be too boring, and some of the shinier excitement is on other blockchain projects and cryptos in general. And I think that's a typical entrepreneurial mindset. I'm now based in Zug, Switzerland, and there's been a similar situation with it become the crypto valley, because entrepreneurs always try to be early in something, and with Bitcoin it always seems that you've missed the ball already, which is entirely untrue because we're so early in Bitcoin, but just compared to the population and to the markets, I think people expect more excitement outside of Bitcoin, and the biggest challenge is to bring back this
of that
concept.
knowledge about Bitcoin in particular. I think that's important. I just got word we do have to head back to the main stage, so we're headed over back to the Falcon stage to hear an announcement from MicroBT. Stick with us. We'll be back here at the live desk after this. Didn't mean to cut you.
Our latest update with you. I know, this time is very precious. So we just firstly, we just like to thank Bitcoin media who would just support us to do that. And after that, I would give you a quick brief about our just product in 2025. I know December is the last month of a year. So it's time for us to do reviewing and the plannings. Let's just check what we have right now. I don't know if anyone who attended our new product launch yesterday. It's a big event for us. Yeah, we shared the latest update with our clients. So by the chance, I'm so happy to bring the important part here with you. The first part, I would like to introduce our product by the chance. We have the latest generations, M70s. Actually, everyone knows, yeah, from we established in 2016. We start from M1. And right now, we have M70s. It's so exciting that the performance is quite good. We have M70 series, and we also just have the different types of the models. M70's, the power efficiency is about 15.5 joule per terahash. And of course, we can support hydrogen, air, and immersions. We also have M70S. The power efficiency is better. It's 13.5 joule per terahash. Of course, we have more advanced models. Yeah, we have M70S Plus. Actually, it's about 12.5 joule per terahash. Every step, we like to prove it. We try to help you to make mining perfect and stable. Every time when we just deliver our machines, we would also just help anyone to do the test. So it means our sample is ready. You can easily to find those samples through our sales from our website and just maybe check if it's good or not at your site. And beside the product, I would like to just also share a few parts related to corporations. The first part is joint mining program. Let me just think. Time is money. So if your facility is ready, if you do not want to waste time on such kind of financing and such kind of process to choose the miners, we can offer you miners and work together. Of course, if you just feel a little bit nervous and uncomfortable when you just make the decisions to buy the models, I know the price of the Bitcoin just maybe has fluctuations. So the price of the Bitcoin changes the price of the hardware a lot. And if you are conservative, you do not want to just face such kind of swing. We also just can help you to offer miners and work with you to reduce such kind of risk and challenges what you do not like to face. And the third part, for the standard models, we should just maybe solve the problems and face all kinds of corner cases. That means we have to leave enough margins on our product. So our product is maybe quite stable. But if you want to maximize the performance and if you want to just squeeze the margins, we have a chance to help you. After I just worked with you on a specific site, when we know the details of your site, we can just try to release the customized firmware and help you to just maximize the perfect by the chance. Finally, we have a bunch of industry partners. We could just support you from all perspectives. If you have the problems from such kind of financing, if you have problems from the system, we also have partners for that. So the joint mining program is such kind of good recommendations. We like to work with you from the scratch. I know most of you, if you are skilled or experienced on mining, it's quite good. You can just handle everything. But time's passed 10 years. Right now, we go to refine management. We need to cover all part of minings. We are so confident to help you from all directions. Yeah, I will just give a quick introductions about our joint mining program. Like our product, we always like to keep everything simple and stable. So our joint mining program is also quite simple. It's a classic joint mining business models. We would do revenue sharing. And I will give quick examples for that. If you have facilities, the tariff is about 4.5 cents. We will just maybe try to negotiate with you, and we will just release our standard business models. It means we will just determine the profit shared rate based on the input contest. And right now, most of the time, it's 70 versus 30. And we also like to just help you make more profitable. It means we will just give you half to half after the payback period arrived. If you like to know how we can work together, we have a very clearly time to development process. It's only 3 months. After we know your informations, we will just try to expand our business models and get your informations through the due diligence. Of course, it's only 1 week. We can just know each other's. When we just feel everyone just have the chance, or just it's possible to move ahead, we will assign our engineering team to do the on-site audit. And another week will just help us know each other. Of course, this is not only audit. We will just share our experience and help you to know how to just make everything better and stable. After that, we will go to the agreement. When we sign agreement, it's quite simple. We will start to prepare the productions. And of course, the productions, the leading times for productions is sometimes 4 weeks. And the total just timings for time to deployment is about 3 months. So when you just decided to do joint mining with us, don't hesitate, just contact with us. If we can just have your clearly timelines, it's much easier for us to match your schedules and make everything simple and profitable. So in last year, we get 150 requests on joint mining. We just launched 31 projects. And of course, everyone would be happy on that. So here is 2 examples. All of them currently are in US. The first one, they have some such kind of special case. Their site is close to the sea. So the dust, the humidity will hurt the operations. The stability would be just the key for the minings. If you cannot get the good uptimes, how can you just keep the profit? When we just work with them, we just try to produce the specific machines. We just add the code for the hashboard and help our partners to keep the stable on that. Of course, we can also just share more information to the next part. This is a very urgent case. When we know they will start to do power on, they have to pay the cost of the powers. How can they get machines so quickly? We just try to deliver our product on time. Of course, right now, everyone just want to focus on this program. So you can easily to contact with us through all kinds of ways. but we try to set up directly connections through mining at MicroBT email. If you have such kind of requirement, just let us know. The last part, I would like to introduce our ecosystems. I know ecosystems is very just valuable for the industry, but who would like to just spend their effort, spend their times on that? MicroBT is always a responsibility firms. We like to just share our partners with the whole industry. So right now, you can see if you are suffer on such kind of issues, if you are suffer on such kind of reliable and safety delivery, if you do not just for sure about the systems, which one could be matched your selections well, we can help you on that. We would like to just review our partner's design and make sure it can just 100% support our margins. We can just help you to do the on-site audit, to understand their teams, to understand their delivery capabilities, and their support capabilities. When you just maybe found them, you would not just feel any issues on that. So we call this program ecosystems. We also just named it MicroBT collections. You can see we put every resources around you. We believe this is more. So it means we know everyone would just contribute their effort on your specific case. You will get better performance. This is the deep optimization comes from. It's also a methodology from the chip development, what Dr. Yang found, we call full custom design. If you want to become our partners, we have simple two-step. The first step, you can just contact with us and share the document. We would just help you to review your logic, how you just design your product, and what kind of margins you have. And the next part is about on-site audit. Just as I mentioned, we will help you to just check the capabilities, the teams, the expertise, what our partners has. Of course, yeah, if you have interest in to become our certificate partners, please don't hesitate to contact with us through our email address, marketing@microbt.com. We are so happy. So right now, in last year, we found 4 partners. It's Hiko, Hashhouse, Giga, and Fukashi. I know all of them just become the famous brand in these industries. They also have booths outside. So just come to our and just get the performance. Thank you so much.
Thank
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. We're here at Bitcoin MENA 2025 in the middle of day 2. Things are heating up. I'm Frank Corva, Bitcoin journalist, joined to my left by FA Crypto Kid. To his left, Maurizio Grazioli, host of the Mr. M podcast. And to his left, Rahim Tagezodigan, My apologies. Austrian economist with a Middle Eastern background. Efe, I'm going to come over to you first. We were just talking off camera a bit. Here in Dubai, in Abu Dhabi, in the UAE, crypto is definitely a thing, right? A lot of us, we have to do some differentiating between Bitcoin and crypto. Is Bitcoin, at this price point, is there unit bias? Is it unsexy compared to a lot of the crypto narratives? Is this an issue that you see?
Well, I think the average Joe, they don't get the concept of fractionalization, which I don't think we should blame them, because if you go to the traditional markets, you can purchase one stock and you go to, let's say, Apple stock and it's $240 per share and you can't buy 0.5
Some places
Apple
you
stock.
can, but traditionally I think you're right. Yeah.
Traditionally it's not so available. So when you think about Bitcoin, I think the automatic assumption is that, okay, I need to pay $100,000 to buy one Bitcoin, and then the average returns that you can make on top of that in the next 20 years, they don't see it as going to anywhere much further than it is today. So I think we need to create more educational content and education in general to say, hey, look, there's monetary debasement, money is going to zero, and if you can compound interest, then that's going to translate into a lot of returns. But I think altcoins, yes, they're looking more attractive. It's just in the long term, Bitcoin is the only winner, and that's where I'm going to.
Raheem, I know this is central to your message, Bitcoin being the winner. You preach this. Is it getting through to people? Do they differentiate? Are most people learning that Bitcoin is fundamentally different than crypto in most regards?
Yeah, because it reaches the majority. So what seems like being a boring asset and the boomer asset, maybe it speaks for it as well. And most or many people that want to invest have a very wrong idea about investment. They think it's about picking the shiniest new thing no one has heard about but you. It's like you only in on that deal. And of course we know from markets and even financial size there's something called the recognition effect. It's like it's much better to invest in things that everyone has heard about than something no one has heard about.
I like that, yeah.
And so that speaks for Bitcoin, of course.
Appreciate that. Mauricio, you do a lot of this differentiation on your podcast. You do work with Da Vinci. What's fundamental to the educational process? How do you describe Bitcoin? How do you differentiate it for your audience?
I agree with them, by the way. I think what's interesting also to highlight is 70% of the people in the region have invested in crypto.
In this region,
in
right?
the UAE.
Yep.
So that's signaling something. But also what I believe is going to be, maybe in the beginning Bitcoin was sexier because it was cheaper. Now it's boring, but it's going to become sexy again when it's going to be super expensive.
Boom. So Bitcoin is becoming sexy again, ladies and gentlemen. I just got word that we need to get back over to the Falcon stage to learn about the 3 pillars of sustainable mining. So ladies and gentlemen, over to the Falcon stage, but keep it locked because we're going to be back here at the live desk after this.
We'll be joined today by Hisham Shaheen, founder and co-CEO at NIP Group, and also Faisal Al-Hamadi, managing partner at Further Ventures. Give them a big hand. Be louder. The floor is yours.
So, good morning, everyone. Our panel is about why MENA is primed for Bitcoin mining. So I'd like to challenge a little bit the narrative today. UAE is not, or MENA, or UAE in specific are not probably a normal destination for mining due to weather conditions, due to energy prices, but still, we see a mining topic is becoming a mainstream, and but what's happening is a little bit beyond the mining itself. So the physical mining itself. So we see a lot of international players are considering UAE home for their mining entities, either from the compute side or infrastructure side, and so on and so forth. So the why is it about the regulation clarity, or it's about taxes, or it's about the ecosystem of digital asset in general that UAE is growing and growing tremendously on this space. So this is what we're going to explore with my fellow panelists, that I'll give them like few seconds to introduce each other, each one of them. Yeah. Hisham?
So my name is Hisham Shaheen. I'm the founder of NIP Group. Our business started originally in the video game space. We did that, became the world's leading player when it comes to games entertainment. And then we have been on this journey on how we arrived to AI applications in game. And that led us into a detour, which is the mining space. Given that we had an ambition to acquire large-scale computing capacity to eventually go full circle and end up in the AI application space. So there's still one step missing on that way, but that is a little bit about us.
Faisal? Hi everyone, pleasure to be here. I'm Faisal Al-Hamadi, a managing partner at Further, which is an investment platform based out of Abu Dhabi, and we focus on the future of finance and capital markets. And in my prior role, I played a role in setting up a Bitcoin mining company here in Abu Dhabi that's backed by ADQ, and happy to share more on that.
Perfect. I'll start with you, Faisal. This question is for you both. What makes this region relevant to global mining today?
So, with regards to mining and Bitcoin broadly, at the macro level, the more diversification, the better. And the question was, where in the Middle East do we have significant mining capacity? We thought that the UAE could be a good place because of a few reasons. One is on regulation. So typically the UAE has been friendly towards digital assets for the past at least 8 years. ADGM, VARA, Central Bank. And it's not only that they're friendly with regulations, it's also they've been constant. There's no volatility around, do we like crypto or not? It's been stable, which allows for people to plan and invest here long term. So I think that regulations is a key driver. Secondly, there's also an opportunity to work with the power sector. So obviously, with miners, we've seen a trend where Bitcoin mining becomes very complementary to managing the power grid. And in the US, in Texas, you have a lot of companies working with the power companies there around how to supplement the load. So we did the same thing here. About 3-4 years ago, we sat down with the power company and we looked at the demand curve for energy. And we realized that the UAE consumes 3 times the energy in the summer than the winter. And it made sense to use all that excess capacity of energy to mine Bitcoin. On one hand, you have a company that's accumulating Bitcoin, which is great, as long as you believe in the price thesis of Bitcoin. On the other hand, you have a power company that's getting more demand, more income, which allows for the government to reduce its subsidy in power. So that's a win-win scenario when it comes to Bitcoin and government or power companies that I feel is not spoken enough about. And I think that we'll see more and more power companies looking at Bitcoin mining as a way to optimize for their capacity.
Yeah. Shem? And a little bit of what Faisal is saying is on the regulatory framework, right? We started out in Abu Dhabi doing something completely different than mining. We were doing video games. But then we discovered one thing is the favorable business environment in general, not only for mining companies. So when you're here, operating a business in terms of efficiencies, in terms of connectivity to the world is there. So generally just having a business environment and presence where it's attractive to do any business is very favorable for coming here. Then you start venturing into the crypto digital asset space, Bitcoin mining and so on. And for us walking that journey, we realized that this was probably the most favorable region to do that. What Faisal is talking about in terms of regulatory framework. So for us as a business, we are incorporated and have a subsidiary in ADGM. ADGM actually has a crypto treasury license. You have a mining license, and that framework is extremely stable to operate under.
Without mentioning the custody, the rest of the service, the underlying services of any Bitcoin mining operation.
Exactly. So that stable environment, coupled with we are supported and backed by Abu Dhabi Investment Office. So it is not just that
this was my second question. So I need a little bit of a deep dive into your partnership with Adio. So and what will enable a crypto mining company like yours and AI infrastructure and compute in general?
Yeah. So that relationship kind of showcases the fundamentals, right? Because on the back of that support, we were able in just 9 months' time to build the largest Bitcoin mining company in the Middle East and one of the top listed miners in the world. The support is not just, oh, we have some licensing processes, you can get your license, favorable business environment. It's actually anchored in government entities pushing that agenda and sectors forward, right? So it is not just the UAE saying that, hey, we have favorable business environment, you have the licenses into place. They're actually willing to invest in the space and back prominent entities to drive that agenda through public-private cooperations as well.
So Faisal, on regulatory again, and so further is not they didn't invest into mining, but from your views, how founders are seeing UAE from the outside when they look into this, and what is the main attraction here? So what for them, what is the main attraction? People like Hisham, are you going to second Hisham on what he liked in ADGM and Abu Dhabi or not?
Yeah, so I think it goes back to the point that they're able to plan long term, and if they have access to basically the capacity, they're able to mine Bitcoin based on the tariffs that are available by the power company, and they have that clarity, and I think that's the key factor. There's also the element of a partnership. So, for example, in 2 of the mining sites that are here based in Abu Dhabi, we have Marathon Digital, which is a publicly listed company in the US. That's a equity partner in those locations, and they play an operational role in servicing those sites. So I think the pathway is clear, the pathway is there. It's just a matter of whether they want to set it up privately or to collaborate with state-owned companies in doing so. And we believe that also being able to work with global partners has helped a lot, because it helps to also tackle some of the operational, technical, environmental challenges of mining. So in our partnership with Marathon Digital, we're able to optimize for those factors. Like one example is, what choice of cooling do we pursue, given the environmental factors here? And we've tried basically the top 3 areas, whether it's hydro or liquid or air-cooled. And we came to the conclusion that immersion technology, liquid technology, is the most optimal way to be able to make sure that the ASICs perform the way that they should, without being impacted by adverse weather conditions or dust and so forth. So that's why we think working with global partners can help to alleviate some of those issues.
So Hisham, going back to you from the entertainment business to Bitcoin mining, is Bitcoin mining for you as a company as an entry point for more sophisticated infrastructure and compute and AI infrastructure?
Yeah. There's a couple of dimensions to it, right? We are firm believers in holding what we mine, right? So we sit on what we mined, and we do believe in Bitcoin, right? That business for us and how it came along was, we are looking into the space of AI applications that requires AI compute. But we discovered that to get to AI compute, we needed to do some other sort of compute. And as we got more into it, that was very attractive in terms of a long-term investment perspective, in terms of generating free cash flow in periods that we did need it. Because at the end of the day, it is electricity into a machine, you get coin. And us expanding that footprint means that we sit on a vast amount of power and access to power, which can either be utilized for mining or it can be utilized for other types of computing that we then can utilize with what we're doing on the application side to utilize that compute.
So maybe a question for both of you. So international companies like Faisal's mentioned, Mara or NIP, are basing operation here, or at least the brain of the operation is here. And in your case, the coins are gonna be here as well. So this requires some, Faisal already highlighted about the infrastructure of the country or the ecosystem in general and the digital asset space. But going forward, so we have a lot of virgin Bitcoin, I will call it, from the UAE. So this might be, we didn't see it yet in the market. This might be, I wish Michael Saylor is here, to regarding, are we going to see treasury companies in the UAE? I'll start with Faisal, because you might have insight and I don't, but are we going to see treasury companies holding Bitcoin on the treasury in the UAE?
So I'll touch on the topic of virtual Bitcoin as well, and on the debt. So I think the market has not proved that virtual Bitcoin has a premium yet, but I think long term there is reason to believe that it could. And yes, we have a lot of Bitcoin that emerged, was mined here, and we think that allocation is something that could be preserved long term. And down the line, it will be useful to have basically clean Bitcoin or Bitcoin with no history. As institutions will want to get block space, we think that block space will become more relevant or in higher demand. So we could see a premium to that one day. In terms of treasury companies, the short answer is yes. I do think that some of the public companies will start to hold Bitcoin. I think some have in small quantities. But no one has really pulled off a, like Mr. or like Planet yet. But I do see it coming. I think long-term or sustainable is going to be companies that either hold part of their reserves in Bitcoin, as you would with any assets or commodities. And then you have at the other extreme.
Do you think as further, sorry for interruption, to hold Bitcoin or in your fund and treasury?
We do.
Ah, you do?
Yeah.
Okay. This is a scoop.
Yeah, exactly. So we made the decision to have an allocation of Bitcoin, which we could choose to either preserve it for future growth based on asset value, or we can also use it to service our companies. Back to what we do, we invest in early stage companies that focus on financial services, and all of them in the short term, they need working capital. So we're able to lend our Bitcoin to them so they can use it to settle payments and so forth. So we do think having a Bitcoin treasury, even as a fund, is important, both from a commercial point of view and from being able to support our companies.
So Hisham, he talked about companies. What about government? So are you having any discussion about the UAE government holding Bitcoin? Because I know that government entities like Mubadala, they already they have a big chunk of ETFs, and so they are not yet holding Bitcoin as a digital asset themselves. So are you having this type of discussion, and are you seeing this happening?
So we're seeing it everywhere in the world, right? The topic is a new topic. It is evolving rapidly. With how friendly the UAE has been towards having entities involved in the space, the regulatory aspects of it, having investments which brings them large exposure to BTC, it is not unnatural to assume that there are discussions surrounding a Bitcoin reserve, including that in the reserve and utilizing in that aspect. But at the end of the day, you are already seeing the government here heavily involved in terms of having exposure to it. ILBet being through ETFs, being through Ninjas and Pajamas, which generates a significant amount of coins. You have several mining sites where government entities in terms of the sovereign wealth funds are involved. And there has been an accumulation done, just not directly by the government, but by government either controlled, backed, or influenced stakeholders, which are sitting on a large amount of Bitcoin these days.
And if I may chip in as well, so I think the answer is yes, and I think that they are going to hold Bitcoin directly. I think it's a function of making sure that they have the right counterparts. Typically, those large organizations, they already have existing relationships with large banks, and they use them for not just digital assets, but in general to service them as fund admins or so forth. And a lot of these global institutions are spending time in the UAE because they see the UAE as being a good market to launch new products. In the US, they still think there's obviously much bigger demand, but they think it'll take a bit longer to be able to go to market there. So now they're seeing this region as a way to test their products, launch their products with a quick go-to-market strategy. And I suspect within the next year or two, the big banks will be able to service these big institutions. Because the only thing that's holding them back today is making sure that they have the right counterparty. There's no counterparty risk. There's no risk of hacks or so forth. And I see that happening in the next couple of years.
Yeah.
So, Hisham, you're running mining facilities outside the UAE due to several conditions, and Faisal already highlighted about the type of cooling technique that miners are using. So do you see technology or mining rigs builder are innovative enough to catch up against this, let's say, severe condition of weather during the summer here, let's say. So here now we are in a perfect weather. I'm sure the government have 50% of waiting electricity to someone to buy, but in 2-3 months time, so then we will be at peak.
Yep.
So do you see builders or like companies like Bitmain and rest are building something, are innovative enough to catch up and reduce the factor of weather here?
Yeah. Well, you're seeing technologies such as hydro cooling in machines, right, which gives you an additional offset to harsh conditions, right? But it's also back to how you build your sites yourself. We're currently looking at sites in similar weather conditions and building those things out where we utilize immersion cooling, right, where you essentially dip the machine into liquids and you're able to run it as it was a natural environment and get the maximum performance out of that. So it is being caught up, especially on the site build side. On the machine side, so you have seen attempts to do that, to make it feasible to just place machines and mine in environments like this, and particularly when it's 50, 60 degrees Celsius outside.
No,
so
60, 50 is okay.
Yeah. Some environments we are in half 60. So you're definitely seeing that ability to mine in those conditions even. So that is not something that is unfeasible these days.
So I won't take mining as a piece alone. I see mining and Bitcoin mining in general as part of the whole ecosystem, where UAE made a leapfrog advancement in terms of regulations, in terms of clarity, institution adoption, banks taking. This is all together. The ecosystem is moving so fast. So what is, in your opinion, and I'll be concluding with this question probably, what is, in your opinion, needed in the next 3 years to see UAE leading globally, to maintain its position, and to innovate more and more in the digital asset space? Faisal?
So if we think about what are the core factors that will lead to that, And to your point, it's not just the mining, it's the ecosystem around it. And I think if you look at the past 3 years, we've seen a lot more clarity around how do you custody the Bitcoin, how do you insure it, how do you manage it as part of your treasury management strategy. Even a simple thing is like doing a financial audit. So if you're holding Bitcoin on your balance sheet, how do you get the top 4 firms to be able to audit you? That itself was a learning curve. I can tell you that. And even some of the auditors are not comfortable today. They say, no, I don't want to touch it. So as those auditors, as those service providers become more comfortable on the process and regulations, I think that will lead to more institutions holding. So the short answer is, the more providers there are here, the more that they accept the asset class, the more that institutions see the value and demand it. I think that's what's going to increase the ecosystem.
Hisham? I think in general it is, I echo what Faisal say in terms of having it as a pure Bitcoin play, right? I think it will start, and it has already started in other areas, where you're able to incorporate it as part of your business strategy, right? We're essentially we're running a very diversified business which spans multiple verticals. We have the Bitcoin mining and treasury component of that as part of the broader strategy. As long as we use it as a diversification play, that is easy to operate these days, easy to navigate. Now it's the next step on how you carve it out to not be part of a wider business strategy, because the way we're doing it and having it in our business essentially mitigates risk, reduce risks, and so on. So having it regulated as an asset class on its own and being able to run it as a pure play is probably the next phase.
So in a country where the digital asset ecosystem, or how fluent our audience here and in UAE in general about digital asset, maybe this is the only place in the world where digital asset people are not minority. So probably 60–70% of people I meet every day, they are all exposed somehow to digital asset. So UAE mining is one of a big scene. We didn't focus a lot on access to capital. We didn't in this panel, but I believe the mining aspect of here is evolving. But from the other end, we will see the digital asset space. UAE is becoming a cornerstone of what's going to happen next. So I would like to thank you for listening, and I would like to thank my fellow panelists for bearing with me. Thank you, guys.
Thank you, Walid.
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. I'm Frank Corva, Bitcoin journalist, joined to my left by FA Crypto Kid, to his left, Mr. Maurizio Grazioli, and to his left, Mr. Rahim Tagizodigan. I'm getting better there. Austrian economist with a Middle Eastern background. We were just talking about a very light topic. Once we see hyper-Bitcoinization, will the money fix the world? Will we fix the money and inherently fix the world? Or will we still have human problems to deal with? Rahim, I'll start with you.
Well, of course there'll be human problems. No, I don't believe in utopias, and the original Austrian school was not a utopian at all, but very realist, and realism leads you to shift the phrase around and say, well, of course also money is a symptom of the world, so you can probably fix the world first if you want to fix money as well. So there'll be all the issues, and all the issues we have in this world are not created by money. They are enforced and leveraged and distorted even more buy bad money. So it's about breaking a vicious circle by using Bitcoin and then have some escape opportunities from bad systems for more people, but it won't solve our problems. And a lot of, or almost all the problems will still be there, but hopefully to a smaller extent, to a manageable extent, and we'll break out of the vicious circles.
I love that. Nice realistic approach. Maurizio, utopia? Are we going to utopia? What's happening here?
I agree. I would say very controversial thought. I would say fix yourself, and by doing so, you'll fix the entire world.
What, does the money play a part in this?
I think so.
Okay.
I think if you focus on your own and changing what you can do, what is in your power, then you are indeed changing the world.
Okay, and Bitcoin does enable people to do that, right? It gives,
100%.
especially if you're unbanked or something and you're disenfranchised in a way, Bitcoin gives you that opportunity. Mr. Crypto Kid, your thoughts?
I think as soon as we see a point of hyper-Bitcoinization, we're going to see the banking of billions. I think there's 1 billion people in this world that can't participate in the financial system due to where they're from or their political bias. And as soon as that's fixed, I think the gap between the very rich and the very poor is going to shrink down and sort of everybody starts living in abundance. My only question is, if we get rid of the credit system and go back to a standard where we don't have hyperinflation, then how are we going to create capital in an exponential way to grow our technology in an exponential way?
You know
That's
what
my question.
I love this question because we have an economist sitting with us. So are we going to live in a world with no credit? Obviously, if Michael Saylor is in charge, that will not be the case. He loves issuing credit on top of Bitcoin. What does it look like in your mind, hyper-Bitcoinized world, or just a world where Bitcoin is more ubiquitous, or is credit still going to be a thing?
Of course.
Okay.
I mean, Bitcoin in the best case becomes the unique settlement layer number one, and you will have real network effect and it'll be the real neutral global money settlement layer. But if you look at history, it's always been a layered system, and that's needed. I think, of course, there'll be different claims, different preferences about risk and volatility. There'll be businesses, and there'll be claims on the future. So there'll be credit contracts. You won't have, hopefully, this kind of distortive fake credit that's not based by real economic activity, and it's just a Ponzi scheme. We'll have less of that, hopefully, but more sound credit, and I think there's nothing bad about credit.
Credit is a thing. I think a lot about this. Will credit be you're maybe putting up a little bit of Bitcoin as collateral and you're taking out a loan, a Bitcoin loan on top of that, or do you think fiat continues to exist, Maurizio?
I think it will continue to exist in some form. I don't think there is like a reset button completely, or at least not where we are now. There might be a time in which it will fade on in some ways, but I don't think we can remove it like a switch.
Yeah.
But I also think capital will find a way. When money is good, society flourish. So whenever there is some sort of a good money at the base of it, it will find a way to exchange hands. People are going to reuse it, resell it, and there's going to be a way for us to make it work. It's not going to be an easy switch, but hey, I believe in it.
All right, we're looking at a world with good money at the base of it. We're seeing some positive changes as a result of that when we look into the future. And right now we need to look over at the Falcon stage where we're going to hear from Irene Gao, Bitmain's Irene Gao, but also keep it locked because we're going to be back here at the news desk after that.
Hi everyone, I'm Irene Gao from Bitmain. I'm the president of mining. I'm so glad to be here and sharing my talk today, 3 pillars of sustainable mining. So Bitmain committed to produce the most advanced machines and push the boundary of mining technologies to bring the most efficient miner to clients and industry to ensure our clients' success. And as of today, we found mining profitability is not about a simple decision or simple product. It's about 3 key elements. First one is about the miner. Miner efficiency is the engine of return on investment. The second thing is about the power availability and the finance resilience. So first of all, Antminer, after continuous optimizing the performance, which is the engine of your mining profitability throughout the past few years, the efficiency of the miners is 210 times compared to the first generation of our products, and hash rate efficiency up to more than 3,200 times compared to the very first generation. And the efficiency below 10 jar per terahash miners is the new benchmark of the mining industry. This keeps you to went through the, no matter bear market all the bull market and keep efficiency as much as possible. So our U3 S23 Hydro enable you to have 9.5 joule per terahash and deliver 1,160 terahash per unit. And you can use the most advanced hydro cooling technology as well as incorporative to the heat usage and other kind of applications to maximize a mining business as well as other applications to ensure you get the best return on investment. And as a new miners to the industry, you might find it take you more than 18 months to build the whole loop from sourcing the power plant to have the land acquisition, having the permitting, as well as build the entire mining data centers. But nowadays, our solutions to enable you to have the hash rate immediately and get the BTC mined just with a quick transaction. So this is a double benefits, not only for miners, but also for our power partners. For mining companies, you can easily to assess the unracking hash rate with the solutions Bitmain been developed in the past few years. And for our power partners, you can work with Bitmain, it's a big company, for a long term. And throughout our platform, we'll connect you to all the leading mining companies, and they will be your resilient clients for many, many years. And with them, with the collaborations, you can expand the power plant with more capital and having the clients for long term afterwards. So this actually brings more activities to the industries and ensure the sustainable mining throughout the years. And beyond the mining efficiency and the power availabilities, we find in traditional markets, clients easily close access to capital through banks and other institutions. But in mining industries, only Bitmain can support clients with multiple financial solutions. So in the past few years, our clients always make tough decisions. First is when to buy Bitcoin. And the second one is when Bitcoin price is low, whether I should buy more Bitcoins or buy miners. And nowadays, you can do both. So we allowed you to use your cash to buy Bitcoin and have Bitcoin as collateral to buy miners, and which means your Bitcoin assets help you to mine more Bitcoin. And this is available for our long-term premier clients. And instead of having like 65% or 70% of LTV with other institutions, your BTC collateral here with Bitmain is more than at least 100% or more. It depends on the products you want to acquire. And we will give you more than 6 months pledge period so that you can use your miners to mine more Bitcoin during that period of time. And you can treat this process as your Bitcoin help you to have really high interest rates in Bitcoin. And that's what we are offering now. And also, for clients who want to build the hydro cooling infrastructure, we allowed you to pay the constructions, the infrastructure in 12 months. So the upfront CapEx cost just reduced 50%. So this plug-and-play solutions as in investment upfront give you as much efficiency as it can be. That's the other way available for you to easy to get into this industry. And this is also a good solution for power partners. You have the electricity equipment and system already. You just need to build the low voltage transformers and connect with this containerized solutions. And it's plug and play. You don't have to pay any upfront cost. You can utilize the electricity to pay the infrastructure. And this is really perfect way for energy company to enter to this industry. And BitMENA is the only platform, only company can have this mining ecosystem. And why is this ecosystem important? Provide the best-in-class miners, ensure you have the best engine in return on investment. And power development programs shorten dramatically the development of the construction and the lead time of the project. It's also give you more certainty of and by the way, so you can harvest the cycle profit. Don't miss the time. And the modular infrastructure allow you to plug and play with, you don't have to deal with all the designing things. And we have a group of engineers is behind you to support you whenever you need it. And we have flexible financing solutions, so you can best take advantage of your cash flow and avoid the downturns. And we have AndCare Global Services. We have a good team, work globally for you to have a shortened turnaround time so that the uncertainty of maintenance is limited with our team. So why this matters? I would like to say that it used to be very difficult for a new miner enter into this industry, and you have really longer learning curves, and the risk is a little bit high. But now, if you want hash rate, you can get access to the hash rate. If you want to be an infrastructure partner, as far as you have good power resources, we can collaborate. We can help you to build the infrastructure and find the customer. So your risk is minimum throughout the whole process. And that's our goal. That's why we build this ecosystem. This integrated ecosystem aims to ensure the long-term competitiveness for everyone who wants to access to this industry. Mining is no longer only for the mining companies, the big public course. It's for everyone. If you want to access the hash rate, access to the power business, access to the infrastructure business, is all open to discuss. So we're here, and we're happy to build this industry together with everyone. Thank you so much.
Thank you. Thank you so much, Irene. It was very, very insightful. By the way, keep your seats.
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. We're here at Bitcoin MENA, day 2. Vibes are high. Bitcoin's price, maybe not as high, but we're going to keep those vibes high. Frank Corva, Bitcoin journalist here. Susie Violet Ward, host of Roxham TV's My Two Sats show, as well as the CEO of Bitcoin Policy UK, and none other than Lucas Duchko, chairman of Blink Wallet. Lucas, I'm coming over to you first. Blink Wallet is an extremely important tool for people around the world. A Lightning wallet makes onboarding people very easy. Please tell us a little bit about the work that you do.
So Blink was founded Bitcoin Beach. Usually it was called Bitcoin Beach Wallet.
That's
originally.
Right.
So
yep.
it was created close to the adoption, like basically helping the pupusa sellers sell their pupusas in Bitcoin and figuring out how they can use Bitcoin in a smoother way than on-chain. So it was early Lightning days, 2020, and it was the inspiration also for El Salvador to adopt Bitcoin as legal tender back in those days. And then since then it grew from El Salvador across the world. Now it's used in 175 countries on a monthly basis. It's about 80% of the use is outside of El Salvador. So it's really expanded. A lot of use in Africa we see.
Yep.
And yeah.
Amazing stuff. We appreciate that work. Susie, from what I understand, you like the idea of Bitcoin as a medium of exchange. You like the Lightning Network. This is what I've been told. Do you want to talk a little bit about that?
I do. I think that obviously it's a peer-to-peer cash, isn't it? So I think obviously the store of value thing is a necessary part of Bitcoin's evolution. And I think we're kind of in between store of value and medium of exchange. But unless it becomes a medium of exchange, I don't think Bitcoin's going to fulfill its promise.
Yeah, I think we need that, right? Even from a mining perspective, right? We need, because we're going to have our block rewards continue to decrease, right? When it comes to Bitcoin and the amount of people that rely on it around the world, we all do to some degree, but we know that certain people, maybe the unbanked or people who are financially disenfranchised in other ways, it's a lot. Blink is playing this incredibly pivotal role. What are some of the things that you really have to pay attention to make sure you can continue to provide this service to them?
I think that as the landscape is changing around the world, I think most of the use is going to move into the new self-custodial solutions, and well, we already know that there's some first movers that have moved in that direction, and we already know it works well. So I think there's going to be a lot of decentralization of services from the original, maybe simpler, like technical setup, into the more decentralized lending, decentralized, all these protocols on top of Lightning that are interoperable with Lightning. So we're seeing a big move in that direction. Yes, the challenge is to still keep a great user experience. Yes, and not overcomplicate, because as soon as you talk about self-custodial, non-custodial, people are like, oh, we need to explain the 12 words and like how to store them, and like no. You still need to onboard people in a smooth way first. You need to give them the experience of permissionless money, digital money, not start with all the complications that in the beginning that keep people unbanked.
Yeah, we don't want to make it too intimidating when we're onboarding people. I think Blink in this way, download this wallet. Maybe the person who downloads it sends them a few Bitcoin. It's a good place to start. Obviously, more education is necessary. I just got word though that we need to get back over to the Falcon stage, where we're going to hear from none other than the man himself, David Bailey. He'll be talking about Bitcoin's role in a tokenized future, ladies and gentlemen. Over to the Falcon stage, and we'll be back here at the news desk after this.
This conversation maybe in a completely different direction. So I apologize if you came to hear about tokenized securities on Bitcoin. We'll talk about that a little bit, but we're going to talk about some other topics because we're joined by someone that I've known for 13 years, maybe. One of the oldest Bitcoin OGs, Yanni, and I think we can talk about a lot of interesting things. So Yanni, maybe start by introducing yourself.
Hi, I'm Yoni Asya, co-founder and CEO of eToro. 18 years, founded in 2007, so pre-Bitcoin, trading securities first, and then fell in love in Bitcoin very early, and started buying Bitcoin for eToro's treasury, probably one of the first companies to do that at $5 and $10. And I think first time we met was in the San Jose Bitcoin conference in 2013.
Which was the inspiration for the Bitcoin conferences that we host today, so full circle. So, Yanni, I think one of your claim to fames, if we are going to talk about the topic we're supposed to talk about, one of your claim to fames is that you are one of the authors of the Color Coins white paper all the way from 2012. Share a little bit about what Color Coins are. Who were some of your co-authors? Just share some history here.
It's interesting now because they're actually coming back, right? So there's a comeback of ordinals and colored coins, but when when we first saw Bitcoin and eToro, we looked at it and we had this aha moment saying, this is the future of finance, right? So this was like pre the term blockchain and everything got blockchain. And we said, we can use the Bitcoin protocol to actually tokenize real-world assets like gold and dollar and actually peg it to Satoshis. And we wrote the white paper and published it on Bitcoin Talk. And there's like a Google group that's all public with all of the OGs of 2012. And funny enough, Vitalik picked it up and sent me like a ping like, can I join the team and write the code for the client? And he said then in eToro's offices. And actually, funny enough, this was also, I think this was the start of Bitcoin maximalism, because when Vitalik started talking about creating a new blockchain, basically the Bitcoin maximalists sort of said like, blasphemy, you're not allowed to, there should be only one blockchain, and then he spun out to actually do Ethereum. Yeah. And only 12 years later, now with version 30, they actually increased the op return, which was suggested, I think, in 2012 in the Colored Coins protocol.
Yep. No, I mean, I've always thought that one of Bitcoin's superpowers is that you can send Bitcoin anywhere, anytime to anyone. And so a future state, if we're rebuilding the financial system, is like anyone should be able to launch a company, anyone should be able to issue a security, anyone should be able to raise money from investors around the world, build a product and service, make money, pay dividends to investors all around the world. Like, that is the permissionless financial system we want to build.
So, I mean, everybody talks about the narrative of Bitcoin as digital gold, right? So I even had that quick dialogue and heard people are still arguing whether or not Bitcoin should also be that layer for tokenization, right? So on digital gold, Bitcoin is king. I don't think anything can ever replace Bitcoin on that narrative of digital gold. But obviously over the past 8 years, everything that's tokenization, and everybody's talking about tokenizing, you know, basically $100 trillion, or I heard even $400 trillion of assets becoming digital, and whether that space is Bitcoin now that it opens up to it, or is that still the space for Ethereum and Solana and XRP or others? I think that's still debatable. With a lot of the core Bitcoin community, it seems still like fighting the narrative for just digital gold and thinking that maybe adding all of those assets on top of Bitcoin will hurt Bitcoin. I actually think it should be the main network. It should be that permissionless. If it is digital gold, why not build on top of the Bitcoin network everything else? But you constantly hear that narrative. I think Michael Saylor is very much against having Bitcoin also become something else, like the network for tokenized assets.
Well, I think, you know, if you polled the community or the developer scene, they'd say these things can exist on Bitcoin, but they need to exist on a second layer or on, you know, some abstracted layer from the core protocol, which I think is you know, a fair argument. I think one of the things that's gotten convoluted in the discussion around like tokenizing securities is that most tokens and crypto coins that have been created are securities, but in order to avoid the regulations that were very onerous for securities, we figured out ways to redefine them so that they weren't securities. And in doing so, we kind of walked away from the idea of creating a company that makes a profit, that pays a dividend, like things that securities definitely do. And so we've seen all these tokens come to be that are worthless, but if we actually just really kind of embrace that these are securities, we should make products that make money, I don't know if the Bitcoin community would see them in the same way that they currently do. Like you know, the Bitcoin community is supportive of public companies owning Bitcoin. Well, what's the difference?
I think, again, when you look at, I think people are talking about like the, let's call it the meme coins phenomena, right? So there's, I think, 20,000 new tokens issued a day.
Wow.
Right? So a crazy amount of tokens being issued every day on all of the different networks. I think we're north of 20 million different tokens on all of the different networks. So that size and scale, I think that's very debatable whether you want that on the Bitcoin network. I think now, with regulations maturing across the globe, and I think you had a big part of that, by the way. Thank you for bringing Trump to that conference. I think with regulations maturing, I think now the world of real-world asset tokenization, whether it's companies, public companies, whether it's private companies, whether it's real estate, I think that is the real play of digital assets, but that requires actually the right regulation, not exactly the opposite, which was what until now we had, which is everybody going to meme coin and explaining why it's not a company and it's not a security, and actually issuing real-world assets on top of blockchains and therefore on top of Bitcoin, which is obviously the most secure network out there, makes a lot of sense. So real estate doesn't need to trade in 1 second microseconds, right? It can actually trade at the 8-minute blocks of Bitcoin. So I think it definitely has a place. And I think now with regulators, whether it's regulators like here in ADGM that are very sophisticated around digital assets, and the UAE saying they want to be the crypto capital of the world, and the US saying they want to be the crypto capital of the world, I think between now all of the regulators, we're coming to a place where we are going to see real tokenization of significant assets. You have BlackRock already tokenizing assets. You have Franklin Templeton. So trillion-dollar asset managers are already tokenizing money market funds, and all of the asset managers are talking about tokenization. I don't see a reason now, post V30, it won't come to Bitcoin as well.
Well, you know, I was always very skeptical of tokenizing real-world assets as like a Bitcoin maximalist myself, because these assets, they exist in the real world. And so it's like, okay, as long as you exist in the real world, you can't be permissionless, because there's always a regulator that exists in the real world who can go and apply the laws to that real-world thing. You know, I think one of the lessons I've learned the past couple of years is like, if you get big enough, you can brute force a change in the law to accommodate, you know, I mean, we used to think stablecoins, one day they'll be banned and shut down, or, you know, you just reach a critical mass where the regulations have to contort to you versus the other way around. Talk a little bit about that change. I mean, you've been dealing with the SEC for a decade. I mean, how has that changed over time?
Right. So first, like the vast majority of our business, so we have about 40 million registered users worldwide, about 4 million brokerage accounts that trade both crypto and stocks on the eToro platform with about $20 billion of assets. And we're regulated everywhere. So Europe, UK, Australia, Singapore, Abu Dhabi, and the US. So we've been dealing with regulators and talking about digital assets and crypto assets since 2013. So we were the first European regulated broker to actually list Bitcoin in 2013. Unfortunately, just a month before Mt. Gox collapsed. So we listed it after a year of work at $1,200, seeing it drop to $150. But we've been working with regulators for, you know, ever since to explain blockchain, to explain crypto. But I think just, you know, it's just coming to maturity. And the US obviously was I'd say the jurisdiction where you had the highest amount of uncertainty under the last administration, or people said it's not really uncertainty. They were very negative against crypto.
They were certainly negative.
They were certainly negative about crypto. What was uncertain is how do you actually get regulated? So they were blocking everything in the US, right? That they were basically suing everybody in the US. And, you know, the minute administration changed, and now you have the most friendly administration you could possibly think of for crypto. So you have the chair of the SEC saying all US capital markets are moving on chain. That's a huge statement coming from the largest capital markets in the world. This is, you know, when we went public this year, we met investors, all of the investors that, you know, that manage $30 trillion. So we had 180 meetings meeting investors that combined manage $30 trillion. So it's crazy to think of how, you know, how large US capital markets are. and they all already understand Bitcoin, they understand blockchain, they understand the concept of tokenization, and now you have the US government and the US regulators saying, we're not only supporting this, we're pushing to move all capital markets on-chain, and you really feel that change in the entire industry, right? Companies going public. You have now stocks trading 24/7 already on-chain. So like the pace of innovation now in crypto is, I think, accelerating because basically the US regulators are saying we're open for business. And that's a huge shift.
It feels like that can't be unwound either. Like it feels like we've kind of crossed the Rubicon where once you issue enough of these assets to enough investors, to undo it would be massively damaging to the public.
I think crypto generally is already too big to fail, right? You know, there's always a statement, you get to a certain point where it's too big to fail and you can't unwind it. So Bitcoin is definitely there. But I think, again, tokenization is already there as well, because if you have BlackRock and Fidelity and Franklin Templeton tokenizing things on Ethereum, and you have like the largest regulated entities in the world already going into that space and launching things, then it's, I think, beyond the ability to sort of rewind it. But but as you know, there are limits to what regulated companies can do. So they actually need the ability to reverse transactions or block transactions, things that are a bit taboo in the Bitcoin world of permissionless and everything decentralized. So I think we'll always have the wild, wild west of crypto and the unregulated space of crypto, and that will continue. And in parallel, we'll have the world of regulated digital assets that will eventually be bigger, right? Because it's real-world assets than just crypto, but the crypto space will always run faster than the regulated space. You can just run much faster when you're talking about non-custodial global adoption.
Well, you know, I need my Bitcoin to be permissionless and decentralized, but when it comes to securities, I'm slowly starting to understand why the security laws we have were created, and you know, the benefits to some of them.
You also run a public company.
Yeah, and I want to get to that. So we're going to talk about that in a minute. But first, you know, talk about, okay, let's say we've crossed this Rubicon. We can't unwind this tokenization event of securities. Then where's the money to be made in this process? Like, who's going to make the money? How are they going to make it?
Well, we're making a lot of money. So brokerage space, I think, is a good space to be in. I feel we're public, so our numbers are public. The last 9 months, the last 12 months was roughly $900 million revenues and $300+ million profit. So I think the brokerage space, and you can see it here in your conferences as well, will always be a significant space. And again, because we see two very big shifts in parallel, which are both related to user experience. And one is, the largest generational transformation of wealth in history. So us, Gen Y, are becoming the richest generation on the planet gradually. But still today, 90+% of wealth in the world is with people who are 60+-year-old. So less about crypto and permissionless. But that's $100 trillion moving from older generations to younger generations, to Gen Y and Gen Z. And that's a huge secular trend of $100 trillion moving from one generation to another. And our generation expects everything to be with the latest technology, on mobile, on real time. It's quite amazing. I bank now with some of the largest banks in the world. They don't even have a mobile app, right? So that is a huge transition. And at the same time, there is $100 trillion plus moving into digital assets on the back end, right? And it's both about the user experience. And the user experience is people who experienced crypto just demand for their assets to be 24/7 tradable, right? They demand their assets to be almost real-time transferable, and they require sort of digital interaction with their assets and potential self-custody of those assets, right? So that's a user experience demand coming from users to basically, in my view, all assets in the next 20 years. And I think the younger generation even, which now we need to cater to Gen Z as well, and I always feel old talking to them, I think their expectations are really crypto native, right? So they tell us they started with crypto. We need to explain to them why investing in stocks makes sense. And they're starting in crypto, by the way, usually, sorry, but in the wrong crypto, in meme coins. And then we need to explain to them to de-risk meme coins into Bitcoin. And they're like, you're old.
Yeah. Well, you know, from the perspective of an issuer, you know, like I've had many rodeos in crypto. Like, there's some things in crypto that I wish existed with legacy assets. So you mentioned 24/7 trading, which is a big one. Very annoying to be shut down over the weekend. Very annoying to be shut down when a foreign market is open that you care about. But you know, it's really nice to also have a block explorer where you can see in real time who owns your stock, how much do they own. You know,
it's crazy that you don't know as a public company who your shareholders are.
Yeah, no, absolutely.
It's like that you know it in a 45-time delay. Like as a private company, you always talk to your shareholders. And as a public company, you basically, not only the retail, even institutions. I do think, by the way, that makes a lot of sense for capital markets to move on chain. So assuming this happens, and if they're saying it's happening in the next 2 years, we're going to get a lot of the benefits of basically blockchain and digital assets as public companies as well.
You know, we had the same issue. We just completed a financing. We had to transfer shares to the investors in the financing. It was a huge pain in the ass to do. I mean, we have some investors that have been trying to get a transfer to happen for weeks. And you compare that to an airdrop that exists in crypto. I mean, I would love as an issuer to have every person who comes to the conference just get airdropped $50 of stock in my company. Like, that would be cool. But you just can't do it with the existing system.
Yeah, we can airdrop to our customers stock. We do that.
Okay.
So we actually, when you bring if you deposit your crypto into eToro, we'll actually airdrop you 1% of a stock into your eToro account. Okay. So we can work on that for you.
Okay, cool. Well, so now I want to pivot the conversation a little bit because I need a little bit of therapy and a little bit of advice up here. So we recently took our company public. You've recently taken your company public. I've been getting my ass kicked as a public company. How has your experience been so far?
So far, so good. But I think we've been able to really mature the company to a point where we have significant revenues, double-digit funded account growth, and significant profitability. So when we first look at public markets, our strategy was basically growth at all costs. Right, so we were increasing revenues but losing actually money when you look at net income. And then we looked at going public through a SPAC, and because of that, we've had that experience of actually working and meeting a lot of the big investors in 2021, and actually sort of reconciling the different views from private markets, where you have a VC telling you revenue growth, I don't care about profits at all, and you know, if you lose money, it's fine, we'll give you more money, to public market investors who are like, okay, we need to understand how your P&L looks like, not your EBITDA, your actual net income. Yep. What's your cash conversion to your balance sheet? What is your balance sheet and what's your cash flow, right? So a lot of things that, again, private investors are less focused on, VCs are less focused on, but public markets are. And then when 2022 came along, which was a great ass-kicking to the entire industry, with obviously crypto declining, I think
What happened in 2022?
But I think what we did there is actually we switched in a very bad year of crypto to profitability, right? So we moved to profitable growth strategy. And I think that when we got to the markets now, after showing we're actually profiting and adding $300 million into the balance sheet and growing the user base and the assets of our customers, then you have a much wider range of potential investors, not only the growth investors in the US, but the value investors in the US, the tech investors in the US. So I think that process for us was very good to come to the markets as a public company in a much more mature way.
Do you all have any Bitcoin on your balance sheet?
Yes, we have crypto assets on our balance sheet, which are actually part of basically working capital, right? So when customers trade in eToro, so we bought about $50,000 worth of Bitcoin at like $10 average. It went to $50 million, and that balance sheet actually is what kept us being able to trade during the 2017 rally, where we saw our business grow from $60 million to like $400 million very, very fast. And we actually use the balance, so we use our balance sheet for working capital, both for enabling leverage to customers. So if you want to use $1,000 but want to buy actually $2,000 worth of Bitcoin or $10,000 worth of Bitcoin, depending on your expertise, you can do that, and we'll use our working capital on our balance sheet, which is in crypto, to do that.
Well, not to put you on the spot, but how many Bitcoins do you have today?
That I cannot share as a public company, but I think you have about 6,000, right?
Yeah, that's right. So I don't know how many you have, but you got to pump the numbers up. So what do you think, you operated your company as a private company for many years. Like, the transformation to a public company is new. Like, what do you think is the biggest superpower that you unlocked as a public company? And like, what can you do now that you couldn't do previously?
I think the biggest thing is, like, we have now $1.8 billion balance sheet, $1.2 billion of cash and short-term investments. So we're able to deploy more capital, whether it's on organic growth or potential acquisitions, right? We have basically the shares that are a public currency and capital, and what you learn as you scale, and of course everything takes time, but the depth of public markets in the US and public markets in general mean that if you want to do something really big, you have access to that capital to even scale that up. So I think the opportunities for us to expand into new regions, again, whether inorganic or organic growth, I think that unlocks a lot of potential superpowers, again, for a company that has been in capital markets, in the stock markets. And the second is trust. So it's always about building trust with our customers, growing from $20 billion of our customers to eventually $100 billion or $1 trillion. That requires us to grow with our customers and for them to trust us. And I think as a public company, they can see our balance sheet, our share price, they can become shareholders as well. So that's another great superpower.
How many of your users do you think are shareholders?
I have the numbers, but I can't disclose them.
Okay, so we're out of time, but I have one more question. So for the people in this room or who are watching on the live stream who are building a company, what would be your advice to someone who is interested in eventually taking their company public or running a public company? Like, what would be your advice?
I would generally say like investor relation communications. That's very consistent. I've been running the company for 18 years, and for the past 18 years, every quarter, I provided a shareholder report with an update on strategy, P&L, balance sheet. And I used to send it to my private investor. Again, I have those 18 years of quarterly shareholder update, and I was always surprised. So my wife here is investing in private companies. So she invested in about 100 different startups through her company. And she told me, you don't know how unique that is, that a lot of startups actually don't send their shareholders, here's an update, here's my P&L, here's my balance sheet.
Shareholder letter?
Every quarter, a proper shareholder letter with an update. And I think building that cadence and investor communication early is very important as a company.
Okay, well, I am taking that advice. That's a good idea. So, all right, well, thank you all for listening to this session. We're going to wrap it up there. Cool.
Perfect.
My God, such an insightful session, please.
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. I'm Frank Corva, Bitcoin journalist, joined by none other than Susie Violet Ward, CEO of Bitcoin Policy UK, as well as the host of the My Two Sats show on Roxham, and Louis Duchko, chairman at Blink Wallet. Lucas, we were just talking a little bit off camera about really cool projects that we're seeing in Latin America and Africa. What are some of the coolest projects that you're paying attention to right now, just as someone who's investing in these projects, but just generally interested in them?
One of my favorites is Money Badger in South Africa. They rolled out 650,000 merchants with existing QR technology for fiat payments, and they integrated in the background. And they're having technology that they can implement all over the world. So I think it's going to be the future of Bitcoin payments, just integrating with the fiat QR codes that are already in place. Yeah?
So we're seeing stuff like that with Tando in South Africa, in Kenya as well, where you're paying in Bitcoin, but it's getting settled in the local fiat currency, allowing people to live on a Bitcoin standard, even if the merchant doesn't necessarily accept Bitcoin.
Yes, and there's a lot of, actually, we were just in the Mauritius Bitcoin conference, and everybody's building these mobile money to Bitcoin integrations.
Yeah, the interface.
And there's open APIs, so they're using all of the open APIs, and then they're vibe coding it with AI.
Yeah.
So there's like tons of startups.
Tons going on. Susie, I have to ask you not to hate me, but I'm being told that we need to get back to the main stage. So we're heading back to the main stage, to the Falcon stage. Short rip here, ladies and gentlemen. We're going to hear about the future of Bitcoin in Pakistan and beyond. Stick with us. We'll be back here at the live desk after this.
A big hand and be louder. The floor is yours.
Thank you. It's officially good afternoon. I'm very excited to be here with my good friend Bilal. So Bilal, Pakistan is in the center of Asia, and 400 billion economy, 250 million people. It's so exciting in 2025. To see how Pakistan thinking about the space and thinking about how to be involved. So to start the discussion, would you please share with us how the Pakistani government think about Bitcoin, digital assets, and all the innovation around it?
See, Pakistan is not chasing the future. Pakistan is trying to build a new one, a country with 240 million people and 70% under the age of 30. Cannot rely on an old economic model. It needs a new engine. And digital assets give us that engine. We see Bitcoin, digital assets, blockchain, not just as speculation, but as infrastructure. Not as noise, but as a foundation of a new financial rail for the global South. And my message is simple. If El Salvador can do it with 6 million people, imagine what Pakistan can do with 40 times the population and one of the fastest growing digital forces in Asia. So this is the vision that the government of Pakistan have, is to turn Pakistan from usually being a late adopter into a frontline innovator when it comes to digital assets and blockchain, and turn our youth from consumers into builders, into creators. Turn our economy from sort of constrained to borderless, and create this as a case study for the global South.
No, this is very exciting, and clearly Pakistani government and leadership is not just talking about it. They appointed you about 7 months ago to actually lead that transition and have concrete projects and steps towards executing on this mandate. Can you tell us more about your role and what are your focus areas?
See, I have only one job. I was brought in with one mandate, which is to take one of the largest unregulated crypto markets and turn it into a globally respected, compliant, and investment-friendly ecosystem for the youth of our country. So the concrete steps that we've taken and are put into motion as we've established the Pakistan's virtual asset regulatory framework and authority faster than most countries in this region. We are rolling out provisional licenses for major exchanges, so Pakistani users can finally get a safe onshore pathway. We are also planning to run pilot sandboxes on mining, tokenization, fintech that can unlock billions in investment over the next couple of years. We are also building talent pipelines, because a country with millions of freelancers can actually or should actually become a global factory for Web3 developers. So my mandate is not essentially to manage an industry, it is to unleash a role model for the world, for emerging markets from Morocco to Malaysia, to see how digital assets can prove a catalyst, a lever for economic growth.
No, thank you for sharing that. And I attest also to all your contribution and support and all the initiatives you are working in the market with. So thank you for that. But we cannot talk about Bitcoin without talking about energy. And I'm not sure how many of you know here, but Pakistan probably #1 country in the world with excess energy, probably over 20 gigawatt actually. Some sources say more than that. So, and again, it's hard to talk about Bitcoin energy, not to talk about AI as well. I just wonder, with putting all those factors together, how does Pakistan think about Bitcoin, energy, AI, and optimizing, utilizing all those resources for better present and future as well?
I'd say Pakistan has a paradoxical situation. We pay in capacity payments for electricity we don't really use, which I believe is like wasted economic oxygen. Bitcoin, mining, and AI can convert that oxygen into fuel. And think of it in this way, that every sort of megawatt that is wasted today could be a megawatt that mines Bitcoin, trains AI models. And every unused sort of electricity becomes digital export for Pakistan. Every solar field perhaps can become a compute field. For decades, Pakistan has exported rice, cotton, manpower, but now we have a chance to export compute, the most valuable commodity of the 21st century. So this, I don't think, is just an energy plan for Pakistan or what we are pursuing under the PWAR. I think it's an industrial rebirth for the 21st century.
This is a great. And talking about investing and building and participating in the Pakistani economy, a lot of the audience here are builders, Bitcoin OGs, institutional leaders, product managers. Usually the first question comes, what is the regulatory and licensing regime in Pakistan, and how could we be there and contribute to those efforts?
You see, Pakistan is...
or what could be coming ahead as well?
We are not choosing fear. We are choosing architecture. Pakistan's approach can essentially be broken down or is built on 3 main pillars. First is clarity, because clarity attracts capital. A licensing regime that aligns with the global best practices, so serious players can operate legally and proudly in Pakistan. Secondly, I'd say it's sequences. We regulate in phases, not in panic. Start with exchanges, custody, and expand into mining, tokenization, settlement, once we have the foundation stable. Then I'd say third is supervision through technology, real-time on-chain monitoring, automated risk alerts, and digital compliance dashboards, regulations that move essentially at the speed of market, not at the speed of bureaucracy. So the message essentially from Pakistan's leadership is very clear. We are building a system that protects users, and it does not sort of suffocate builders, a system that bridges activity onshore instead of driving it underground, and a system that says that Pakistan is ready for business, Pakistan is ready for innovation.
Thank you for sharing all of that. And going back to the foundation, to Bitcoin, why it exists, I reviewed a lot of stats that are millions of Pakistanis actually hold Bitcoin. So from your perspective and speaking with people, government, innovators in Pakistan, investors, companies, what do you think Bitcoin, what kind of problems Bitcoin is actually solving for the Pakistani people?
And that's a great question. I think for many Pakistanis, Bitcoin is not theory, it's a relief. it solves problems that traditional systems have not solved for decades. First, I think, is savings. When your currency has lost over 50% of its value over the past 5 years, you don't need a lecture. You need a hedge. Why should you be penalized for somebody else's monetary policy? Bitcoin gives people a way to store value outside the volatility which is created by politics, printing, and inflation. Second, I believe, is access. Millions of Pakistanis, over 100 million Pakistanis, are still unbanked. And Bitcoin gives them a financial identity without waiting for an account that they might never be offered. And I would say that third is cross-border earnings. Pakistan is home to one of the largest freelancer nations, and Bitcoin and blockchain rails allows them to get paid globally, instantly, and transparently. I think for many young people in Pakistan, Bitcoin is the first time they felt that their money belonged to them and not to any specific system.
No, I mean, this is the typical story of Bitcoin, but it's really great to see also a country like Pakistan where the government and the people and Bitcoin is actually helping to offer solutions. So to wrap it up with a more big picture question, from Ant Alpha perspective, we service clients in a lot of emerging countries, and I can attest from my seat that I see actually Pakistan to be one of the leaders in that space in no time. Just I haven't seen such alignments top down on this space in this short time than actually what I have seen in Pakistan. But from your perspective, where do you see the broader emerging markets fitting in the big digital asset innovation that has been really dominated where the capital is mostly like US, UAE, and Hong Kong and beyond? What's your perspective of emerging countries, how they fit, and where they will contribute in the coming 5 to 10 years?
I think that the next chapter of Bitcoin or digital assets will not be led by Wall Street. It will be led by countries where the pain is real and the potential is massive. I believe in the next 5 to 10 years, emerging markets will drive majority of digital assets, Bitcoin user growth. It will create case studies on some of the most competitive energy-backed mining operations. And the next generation, of course, of open source developers. Imagine, a billion people from emerging markets use digital assets, Bitcoin, rails for savings, remittances, trade settlement. Imagine young Pakistanis, Nigerian, Philippines, Argentinians building protocols that the rest of the world sort of uses as case studies. Imagine South Asia turning surplus solar power into the world's cheapest compute markets. So I personally believe that this is where the ecosystem is moving, and Bitcoin perhaps one can say was born in the West, but its destiny belongs to the global South.
Thank you for sharing that. I truly believe as Bitcoin community, our duty is not just education, our duty is beyond that, is to help actually countries and initiatives like what Bilal is leading to flourish. I really encourage everyone to talk to Bilal because I have learned so much from him in the last few months, and it gives us different perspective about why we actually in this space and how we can contribute and focus our use cases. So please help me to thank Bilal for his time, and
thank you so
it's
much.
for the best
Thank
for
you
our ecosystem. Thank you.
Thank you so much.
Thank you, Bilal.
Thank you.
Appreciate it.
Bitcoin gave it back. I'm so excited to welcome on the stage, and please give him a warm welcome, Tony Yazbek, founder at the Bitcoin Way. Be louder, please. Tony, the floor is yours.
Thank you very much. Hi, everyone. Some of you may have already heard my speech at Bitcoin Prague just last June. What I said back then wasn't just history. It was a warning for the future. And today, this warning is even more urgent. The stakes are high, but the opportunity is huge. Can a few lines of code alter the course of history? And can one act of defiance ignite an idea whose time has come? You all know the legend, Satoshi Nakamoto. A hidden genius launched Bitcoin into a world destroyed by 2008's financial betrayal. A trustless and unconfiscatable alternative to governments and banks that have failed us for centuries. And here in Abu Dhabi, where innovation leads, Bitcoin isn't just our future. It was my lifeline when Lebanon's banks stole everything from me overnight. Let me take you there. A story of despair turned defiance, of a collapse that almost broke me, but a discovery that completely rebuilt me. Because for all of Bitcoin's promises, what happens when that seed lands in a place like Lebanon, where corruption doesn't just threaten your money, it erases your entire life in an instant? That's when Bitcoin stops being a story and starts being survival. I'll never forget the moment it hit me. It was 2019 and I was standing in a bank line in Lebanon, a country I'd always called home, one of resounding beauty, yes, but one also hiding a rotten core. The banking system had imploded, corrupt and ruthless to its core, an entire house of cards that finally fell. I had worked for years, disciplined savings and sacrifices. Hang on, the slide's not working. We have a problem with the slide, guys. To build a future for myself and my family. And then overnight, it was all gone. The banks froze the accounts and the government shrugged as millions, teachers, parents, doctors, farmers watched their entire life savings disappear. Years of sweat and hope gone in an instant. I stood there with thousands of people, sea of desperate faces, old men with trembling hands, mothers clutching onto their kids, and young folks that had just started to build their futures. We begged for our own money, money that we had earned, and they just looked at us through that bulletproof glass and said, sorry, there is nothing we can do. So one day I had a future, the very next I was homeless with nothing but rage and shame. That moment broke something very deep inside of me, but it also woke something up. I could give up, become another casualty of their greed, or I could rise and fight back and find a way to reclaim what was stolen. Not just from me, but from millions like me, and I chose to rise. That choice ignited a quest, a burning need to find out why this happened, how this was even possible, and what can be done to prevent it from happening again. I dove into the history of money, the lies we've been told, the mechanics of a system that was created to steal and keep us down. And that search led me to Bitcoin. At first, even I didn't get it. Digital cash, no central authority, sounded too good to be true. But the more I read, the more I learned, the more I understood that this wasn't just a tool. This was a revolution. The only revolution that matters, because you see, Lebanon wasn't the exception. It was the rule. Just last year in Turkey, inflation hit 75%, savings vanished. In Iran, capital controls still blocks families. Even here in the UAE, one of the most advanced economies in the world, where approximately 25% of residents own crypto, pays zero taxes on personal gains, your savings are still plugged into a system that is built on risk, leverage, and debt. You see, the problem isn't one government or one bank. It is the entire system, a corrupt and outdated infrastructure where those in power print money out of thin air, devaluing our time, our wealth, and our future while they live for free. So when I say Bitcoin saved my life, I am not talking about price charts or profits. I am talking about freedom, dignity, and agency. and I'm not alone. Foreign banks gamble with your money every single day. When they win, they keep the profits, sure. The bonuses, the private jets, the yachts. But when they lose, who pays? You do. I did. We all do. They call it a bailout, but it's nothing more than theft with a fancy name. A system where your savings aren't even yours. They are fake digits on a screen that can be seized or confiscated whenever they decide. And here's something else they don't tell you. When your world collapses, no one is coming to save you. Not the IMF, not the local bank, not your government, especially not your government. When Lebanon fell apart, I didn't just lose my money. I lost an entire belief system. You see, I was raised to think that if you work hard, stay honest, and follow the rules, everything will be okay. That is the lie we've all been fed, because the rules were never made to protect us. They were engineered to extract from us. So again, when I say Bitcoin saved my life, I am not talking price charts or profits, talking about dignity, freedom, and agency. And I'm not alone. Millions across the globe, from Argentina to Turkey, are living my story in real time. Crushed by inflation, robbed by capital controls, and punished for simply trying to protect their savings. These are not speculators. These are people who turn to Bitcoin out of desperation. And when they hold that seed phrase for the first time in their hands, you can see the shift. It is not just financial, it is spiritual. It's the moment they stop being victims and start being free people. That is what Bitcoin gives us. And that is why the legacy system is petrified of it. Because they cannot tax it at will, they cannot control it, they cannot inflate it, and they sure as hell cannot stop it. Bitcoin is the separation of money and politics. It is the game changer. You see, Bitcoin is not controlled by a company that you can shut down. It's not managed by a government you can bribe, and it's certainly not managed by a bank you can bail out. Bitcoin is money for the people, by the people. It is trustless, permissionless, and unconfiscatable. For the first time in history, we can opt out of a rigged system and reclaim our time, our wealth, and our future. Protecting your wealth isn't about shifting it around within the same broken system. If one bank fails you, moving to a better bank is not the answer. The answer is to opt out. Become your own bank where you and you alone are in full control. But there is a catch. You have got to do this right. Owning Bitcoin is not enough. If you don't hold it in custody, you don't own the Bitcoin. You must hold the private keys. If you leave it on an exchange, trust it to someone else, or worse, another institution, you are right back in their system, susceptible to the same theft, the same loss that I went through. Let that sink in for a minute, because this is not just a technical detail, it is the heart of the matter. Custody is everything. It's that quiet, invisible power that completely changes the way you walk in this world. You are no longer begging for permission, you are no longer at anyone's mercy. And in hubs like ADGM, self-custody thrives alongside the license safeguards, locking in that freedom without compromise. And once you feel that freedom, really feel it, there is no going back. After Lebanon, I dove into Bitcoin head first, but even I made mistakes. I trusted platforms I shouldn't have. I lost more, not to the market, but to my own ignorance. But it lit a fire in me. If I can make these mistakes, so could millions of others. And I couldn't let that happen. That is why, after many months of painful lessons, I founded the Bitcoin Way. Our mission is simple: to educate and empower anyone who wants to opt out, to teach Abu Dhabi investors, Dubai entrepreneurs, families from Amman to Riyadh, how to protect and secure their Bitcoin and get it right the first time. Because the next collapse isn't if, it's when. And when that day comes, you can either be its victim or you can be free. The choice is completely yours. Do you remember a time when a paycheck used to pay for a decent home, school fees, and still have savings for a big family? A time when no one woke up choking on debt, interest rates, or inflation. What happened to that time? I'll tell you what happened. We traded that freedom for convenience. We trusted their system. We believe the lies of the fake politicians, the golden promises from the banks. Don't worry, we're regulated, we're compliant. Your money is safe with us. And while we were busy with our lives thinking it was, they chained us with debt and lies. That is the trap we are all in, from Beirut, Lebanon to every city on earth, no exceptions. That is why a young couple today can't dream of buying a home without a 30-year chain. And it's why young parents continue to miss bedtime stories, working 2 or more jobs just to keep the lights on. And it's why more nations crumble while the elite print more and laugh. Bitcoin is here to break these chains. It is a store of value, a medium of exchange, and a unit of account all in one. We have never ever had anything like this before. Gold stores value, but it's extremely hard to move and is nothing more than a relic in a digital world with AI. Cash may still buy today, but will fade tomorrow. Bitcoin does all three. One system, one tool, one standard, built for the internet, built for us. Understanding the macro of Bitcoin is also important. Yes, you must see the big picture, the money printing, the corruption, and the inflation. But the way you win in Bitcoin is by understanding the protocol, the keys, the custody. This isn't just an investment. This is a skill set, a mindset, and a discipline. If you don't learn how to do this right, you will get wrecked, and Bitcoin will not care. Which brings me to another important point. The legacy institution will tell you that Bitcoin is just digital gold, an asset to hold and never ever sell. They might even tell you it's too risky for you to hold it yourself, but they'll happily offer to do it for you. Don't fall for it. This is nothing more than a shameless prey on your ignorance and fear to keep you dependent on them. You don't need them anymore. Satoshi did not create a white paper about a shiny trinket. Bitcoin is money, a tool for freedom, a replacement for fiat that no living soul can manipulate or corrupt anymore, and it is working. There are thousands of merchants who accept Bitcoin today, coffee shops, tech stores, markets from Amman to Riyadh. In the UAE alone, with over $56 billion of crypto inflows and luxury establishments like the Palazzo Versace accepting it, the adoption is soaring. It's not everywhere yet, but every day thousands wake up. And here's the beautiful part, guys. You don't need to be a tech genius to join this revolution. All you need is the willingness to learn and the right teacher. That is what we do at the Bitcoin Way, because Bitcoin isn't just for the elite. It's for all of those struggling to make ends meet. It's for the students with big dreams and empty pockets. It's for all 8 billion of us. So just imagine a MENA where Bitcoin powers trade without borders, and savings no corruption can touch. And here in Abu Dhabi, events like this conference are rechanneling back that cypherpunk fire, bringing together adopters from all across the region to share stories about using Bitcoin peer-to-peer. This isn't about number go up, yearly returns, suits, or spreadsheets. This is about sovereignty and freedom. I often think back to that bank line in Lebanon, the anger and the betrayal. And then I look at where I am now, standing here with all of you, part of something that is unstoppable, and I feel hope. Bitcoin isn't a magic fix. It will not heal every scar overnight, but it's a spark powerful enough to ignite an idea whose time has come, and this idea is already turning into wildfires. Folks, what we do in life echoes in eternity. So I ask you, are you ready? Are you ready to step up, learn, and fight for a life worth living? Because Bitcoin is here, now, waiting. It is a real chance to reclaim what is rightfully yours and to build a future that they cannot touch. My brothers and sisters, Bitcoin is not a Western solution. It is a human one. Here in MENA, we are not just early adopters, we are leaders. So again, just imagine a world where Bitcoin protects wealth, lifts millions, and has savings that no corruption can touch anymore. This is not a dream. This is Bitcoin, and it's already happening. If you're curious, inspired, and want to learn more, please come find me at the Bitcoin Way booth. Because you see, this isn't just my story. It's ours. And together, we can make MENA the heart of Bitcoin's revolution. Thank you very much.
Thank you. Thank you so much, Tony, for such a powerful message. Once again, give him a big hand and be louder, please. Louder. We'll be back because we have such an exciting fireside chat coming right up. Definitely come up. Definitely don't leave. Keep your seats warm. We'll be back in less than a few seconds.
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. I'm Frank Corva, Bitcoin journalist, joined to my left by Eli Ben Sasson, CEO, chairman of Starknet Industries.
Of Starkware.
Starkware, I keep saying it wrong. My apologies, everybody. Anyway.
Starknet is the chain, Starkware is the labs.
Ah, now I got it. Now we're good. Okay, privacy-focused solution for Bitcoin, but maybe broader than that as well. Please, Eli, if you could give us a little bit of an overview of what you're working on.
Yeah, so Eli Ben Sasson, I used to be a mathematician. I invented a lot of the ZK that is out there right now, co-founded Zcash, then co-founded Starkware. Starkware produced Starknet, which is the financialization layer for Bitcoin, on which Bitcoiners today can stake, generate yield in the STRK token, use that to operate the network, and there's a bunch of opportunities there that, you know, Bitcoiners, you should check out.
Okay, we've been talking a lot about financialization of Bitcoin, but a lot of that is sort of wrapped or a part of the old system, right? We're hearing about major institutions coming to Bitcoin. We haven't heard as much about different solutions, L2s, that will now be also offering maybe exposure to real-world assets or ways to do this in more of a crypto-native fashion. Is this something that you're working on?
It's something that we have already launched, and it exists today. So people, you know, Bitcoiners can try it out already today and come and support the network. But I completely agree with you. You know, 99% of Bitcoin today is being just hodled and is a static asset. But I believe that, and I know this from my Bitcoiner friends, that under the right terms, people will want to make their Bitcoin a productive asset. And what are the right terms? First of all, it has to be like Bitcoin, you know, you own your coins. It has to be something very safe, self-custodial. It has to have good UX, dirt cheap prices, has to work very smoothly and be a mature technology. All of these things are ticked by Starknet. We've been live with this technology for over 5 years, settled on this technology stack more than $1.5 trillion of volume. And as of 2 months ago, there is the ability to generate yield on your BTC on Starknet. You generate yield by operating and validating the
transactions on the network.
Yes, on the Starknet network. You generate yield in the STRK token, which is the token that will power the Bitcoin economy, which is expanding on Starknet every day.
Okay, very cool. Why Bitcoin? So you said you worked on Zcash, now you've come back to Bitcoin, you're building something on Bitcoin. What brought this move back? And if you don't mind, I just got word we're going to go back to the main stage in about 60 seconds. So just wanted to set you up. Why are we back to Bitcoin here?
Well, because now Bitcoin allows this thing to be built on it. Bitcoin needs it. You know, people want to do more with their Bitcoin while holding on to it safely. So Starknet is the place for that.
Okay, that is the place for that. Ladies and gentlemen, we are going back to the main stage to hear from none other than Simon Gerovich, the chairman of Metaplanet, alongside Dylan Leclerc, Bitcoin Magazine alumni, and also higher up man making the magic happen over at Metaplanet. We're over to the Falcon stage. We'll be back here at the live desk after this.
Focus on Metaplanet, the biggest Bitcoin company in Japan and one of the biggest Bitcoin holders in the world. Please welcome on the stage Dylan Leclerc, head of Bitcoin strategy at Metaplanet. Please give him a big hand. He'll be joined today by Simon Gerovich, president at Metaplanet. Please be louder and give them a big hand. The floor is yours.
Thank you.
Check, check.
Good afternoon, everyone. I'm Simon Gerovich, the president of Metaplanet, and I'm joined today by Dylan Leclerc, our head of Bitcoin strategy. By now, I think many of you have heard of Metaplanet and know the story. But for those of you who are new to the story, perhaps I just start with a little bit of our genesis story. And so I founded a hotel company back in 2010. Metaplanet's original journey was as a hotel company. We built up our platform to be all across Southeast Asia and Japan. We had 30 owned and operated hotels. The business was going swimmingly well until a single event happened in 2020. A health scare that captured the world, brought us to our knees, known as COVID. At that time, hotels were forcibly closed, airlines were grounded, and our revenues literally went to zero. And as an entrepreneur, it was an incredibly difficult time. A lot of soul searching, a lot of time on my hands, wondering what to do next with the business. And I was listening to podcasts. And an amazing gentleman known as Michael Saylor was telling us about his own journey and how he decided that Bitcoin was the asset that he wanted to hold on his balance sheet. And that resonated really well. And I brought that back to our board, and we made that ultimate pivot back in April of last year. It was a very exciting time. Lots has happened since April of last year. It's really only been 18 months. And Dylan and I were on this stage literally 12 months ago. Dylan, do you want to tell us a bit about our progress over the past 12 months since we were literally here?
Yeah, we've been busy.
12 months ago we had about 1,000 Bitcoin, and today we have 30,000. So we're the 4th largest Bitcoin holder in the world and among publicly listed companies. So in 2025 we have raised about $3 billion of equity capital of common stock, and we just did our first preferred deal. But just in terms of the scale of the Japanese market, I think we've more or less issued 10 times the amount of equity as the 2nd largest common stock issuer. And so this was a company that we were $15 million total in size in April of 2024. And so to go from there to raising 200 times the size of the company in equity, I think speaks to the vision that we were championing in the Japanese market, and that vision is to be a Bitcoin treasury company, to denominate our economic calculation in Bitcoin. And so what the vision we're selling is we're denominating everything in Bitcoin. We're thinking in Bitcoin per share terms. Right? Bitcoin's very volatile. Of course, the volatility to the upside is more fun than volatility to the downside, but we're embracing that. We're not shying away from it. And so I think we were the 2nd company to adopt the Bitcoin standard, but behind Michael Saylor. And since then, we saw an explosion of interest in the United States and abroad, as well as in Japan, with a few companies following our lead. And so I think ultimately, we think every company in the world will have some Bitcoin. But in terms of Bitcoin treasury companies are going 100% all in with confidence and certainty, I think it takes a special company and a really kind of committed board, committed executive team, and a committed shareholder base. And so it's been a long process. We've had 5 shareholder meetings. It took a lot of time to get here, but we're really, really excited for what this capital base, what this 30,000 Bitcoin position can unlock for us. And I think the equity issuance isn't just a means to an end, or isn't just happening in isolation. There is a purpose to it, and that's really what we think is kind of the big idea. Maybe you want to expand on that.
So the goal for us really is to be the bridge between $7 trillion of cash in Japan sitting on the sidelines and the Bitcoin economy. And we're able to do what we intend to do now because we have a large, pristine balance sheet of digital capital. And so that is the first step for any company looking to now go to that next phase. And what is that next phase for us? It's really to be the premier issuer of digital credit in Japan. And you have to have a substantial balance sheet of Bitcoin to be able to do so. If you only have 50 Bitcoin, 100 Bitcoin, it's a bit of a challenge to be able to issue preferreds. In the traditional world, how do fixed income issuers promise their investors they will repay capital? They promise based on future money. They promise based on future cash flow. But we have an opportunity to really transform the markets in Japan and offer an instrument that is backed by the capital that we have. And that's digital capital that is outperforming the cost of capital. And so we have, in the past couple of weeks, announced our first perpetual preferred instrument. And that is our version of Strike. And that's basically a perpetual preferred that has convertibility into equity. It has a 4.9% dividend that's paid in yen, which converted back into dollars, with the carry is about 6.5%. And it has an embedded call option, a call option which perhaps is the most valuable, cheapest call option on Bitcoin that exists out there. And so we're very excited to bring this to the Japanese market. We've done a pre-IPO so far with institutional investors, and the goal is to get this listed in the second quarter of next year. But in a market that is incredibly yield-starved, in a market where people are used to earning zero on their cash, here is an opportunity now for people to earn a yield which is far superior to that. And so we're very, very excited about that opportunity. As a next step after that, we think the best product market fit is actually issuing our version of Stretch. We're calling it MARS, which is Metaplanet Adjustable Rate Securities. That will be a stable price, variable dividend product, and we think of that as a high yield bank account. And so to be able to offer the Japanese market a way to earn a yield which is far superior to what they're used to, I think is that incredible opportunity for us as a company in Japan.
Maybe to step back, I think we're getting kind of in the weeds in financial products and capital structure. The benefit of a perpetual preferred equity And Bitcoin is kind of this cutting edge new field in finance. Typically, preferred equity is the opposite. It's like this sleepy corner of finance that no one really cares about, and it's the chapter in the book on value investing that you skip, right? But the reason that we think preferred equity, we're so excited about it, is if you just compare and contrast it to a traditional kind of debt financing model. So let's just say, for example, traditionally with debt, you would borrow $100, you'd pay $5 a year in interest, and let's say in 5 years, you'd pay back the $100. With perpetual preferred equity, you get the $100, you say pay $5 in dividends a year, but you don't pay back the principal, right? And so for a company that is a Bitcoin treasury company like Metaplanet or a company like Strategy in the United States, our intention is to be long Bitcoin forever, right? And so Bitcoin is volatile, and we don't want that refinancing risk, that refinancing cliff, right? And so the perpetual preferred instrument is a perfect instrument for us and for our capital structure. And it acts like debt, but it's technically not debt, right? And so we think the big idea for us, the biggest market ripe for disruption in maybe the world, but definitely in Japan, is the fixed income market. Japan is yield starved. Interest rates were negative for a long time. They've just recently raised rates to about 0.5%. Maybe interest rates go to 1%. So we think a 5% instrument is a huge unlock, and we get to, with that capital, buy Bitcoin. And so that's the opportunity for us. We can sort of tranche varying levels of risk and return. So we are essentially borrowing money at 5%. And if Bitcoin is outperforming at 10, 20, 30, 40% a year, that value difference accrues to the common stock, right? And so a lot of investors, they love Bitcoin, but they can't buy Bitcoin. They need to buy an equity. And so they want volatile, turbocharged, amplified Bitcoin exposure. That's our common stock. But some investors don't want volatility. They want stability. They want fixed income, right? And you think of different sort of investor preferences. And so our goal is to architect a capital structure that can serve various investors' preferences. Do you want a stable price and monthly income? Do you want a fixed income with Bitcoin upside, or do you want full Bitcoin upside, right? And so I think our goal is to kind of offer a product and really an instrument that can tailor to each of those investors' needs. Maybe we can touch on Bitcoin, the volatility, and how it sort of upends the traditional financial norms, and how most operators or maybe public companies think about volatility.
Now, volatility is something that I think in the traditional markets people want to shy away from. They want the knowledge and of the earnings stream. They want to know exactly what their costs are. Volatility is an enemy of a traditional company. But volatility is something that we've been able to harness. A Bitcoin treasury company is able to harness. Bitcoin is inherently a volatile asset, and a Bitcoin treasury company, as a result, also has a volatile stock. And so specifically, over the past 18 months, the way that we were able to accumulate most of our Bitcoin was through the issuance of equity through a financing structure in Japan, which is akin to an ATM equity offering. In Japan, we call it a moving strike warrant. But because our stock was volatile, the financing partner of ours was able to utilize that volatility to enable us to raise capital effectively at the market without having to pay away a lot of margin. To give an example, many other companies in Japan that use the same financing structure, they have to sell their shares at a significant discount to the market price. But because of the volatility of our stock, our financing partner sees value in that volatility and therefore able and happy to acquire shares at the market price. Perhaps a little bit too esoteric, but the point being that volatility is something that we're able to embrace. We have now, as one of our core strategies, what we call our Bitcoin income generation strategy. And what we're doing there is we're capitalizing on Bitcoin's volatility. We're a seller of volatility, perhaps one of the largest sellers of vol now in the market. That's enabled us to generate substantial cash flow for the company. We've had 4 quarters of performance now, and that cash flow is important because it can service the dividends that we have on our perpetual preferreds. So there's no need for us to sell equity, no need for us to sell Bitcoin. We can use that internal cash flow to be able to support those dividends, which makes it actually very strategic for us to be able to generate revenue. And so we like to think about the value of revenue to us as a company. Every $1 million of revenue that Metaplanet is able to generate on a recurring basis can support about $20 million worth of prefs. $20 million of prefs paying 4.9%, which is what the rate is on the prefs that we've just issued. And so that means that every $1 million of revenue enables us to buy $20 million of Bitcoin today. And so that amplifying effect actually is incredibly significant. And so, we have ideas as a company for our next phase, Metaplanet 2.0, to become the Bitcoin vertically integrated platform in Japan. We have purchased about $3 billion of Bitcoin over the past 18 months. We have figured out how to safely custody our Bitcoin. We have generated a yield on our Bitcoin through the selling of Bitcoin volatility. And we have dozens of Japanese companies across Asia that reach out to us and say, how do I buy Bitcoin? Where do I store it? How do I earn a yield? What can I do with my Bitcoin? And so we would like to be able to service those customers, be able to internalize that flow, be able to generate recurring income. And again, that income is so we can support the issuance of our prefs, to be able to support the purchase of more Bitcoin, to be able to increase our Bitcoin per share sustainably over time.
Yeah, I think, touching on the volatility component a little further, we just issued Mercury, which is our convertible perpetual preferred, which is a mouthful, but to kind of break it down, essentially it's a bond or a fixed income-like instrument, which are usually very low volatility, boring instruments, and we're combining that with a 10-year call option on Metaplanet stock. Right, so you can think about it it's sort of like a $200,000 Bitcoin call option combined with a bond. Right, and there's no in the world you can buy a $200,000 call option on Bitcoin for 2035, right? And so about 2 weeks ago when we announced this deal, market conditions were quite bad. Bitcoin had fallen from $100,000 to about $80,000 in the span of a couple weeks. Sentiment was terrible. The kind of operating companies that were in the Bitcoin landscape were facing a lot of pressure, and we raised about $150 million, which, depending on who you are, it may sound like a lot, it might sound like not a lot relative to maybe the $3 billion we raised so far this year. But I think it was a strong signal for us that there is real strong demand for Bitcoin-backed instruments, and there is really strong demand for a kind of a Bitcoin native call option in an operating wrapper, right? And so maybe we can provide some color on the institutional dialogue we've had, maybe the pros and the cons. How has that transpired over the last 12 months for us, but also just the landscape more broadly?
So we've had the good fortune now over the past 6 to 8 weeks to really meet some of the biggest pools of capital in the world. We completed a public offering about 2 months ago. It was a secondary offering, a follow-on offering, and then about 2 weeks ago we closed a pre-IPO of our perpetual preferreds. So we spoke, I think, to about 100 investors in about 10 different cities. It was quite the affair, traveling from city to city, difficult being away from home. But we were in the room with some large pools of capital talking about a wide-ranging sort of scope of topics. But I think the one big takeaway for me is that a lot of these pools of capital now have made the effort to go out and find individuals who understand Bitcoin. And so the difference to 4 years ago is when you had a discussion with a potential investor, traditional investor, Bitcoin was something that they wouldn't touch. It was something that was dirty. It was only used by terrorists and whatever else you can think of to describe Bitcoin. But now it's completely different. And often there's a person in the room from a country like Venezuela, a country that really understands the value of Bitcoin. And so the discussions are very interesting and very different to what they were years ago. But what I would say is that now is substantial interest from institutional investors in Bitcoin. Up until now, there wasn't really a way to play that story. Investors still can't buy Bitcoin generally for their funds or for their balance sheets, and so a digital equity like a Metaplanet or a strategy is now something that resonates really well with them. And so I think we're very excited about the future of Bitcoin, how it's become very normalized among the institutional investor base. We're very pleased as a company that there has been substantial interest in Metaplanet. Of course, there are lots of Bitcoin treasury companies out there, and we want to encourage as many companies around the world to add Bitcoin to their balance sheet. But the name of the game now is you need to have a substantial balance sheet. You can't use equity issuance as your sole source of capital raising. You need to have more tools in your capital market toolkit, and digital credit is that next phase. Companies that can issue digital credit are those that have substantial digital capital, and the future will be seeing other ways that companies like ours can raise money. Our focus, as I said earlier, is being able to generate sustainable revenue. Sustainable revenue can support the prefs, and that enables this flywheel to continue.
Maybe some color on the Japanese landscape for Bitcoin adoption. Where is that relative to the U.S. or the rest of the world? Is that an opportunity? Is that a bullish or bearish for us? Has that changed in the last 18 months? For someone that isn't familiar with Japan and that landscape.
Sure. So Japan was actually really early to Bitcoin, and so all of the Bitcoin movers and shakers, CZ of Binance, Roger Ver, they were all in Tokyo at that time, talking about the laurels of Bitcoin. If you were lucky enough to be in a bar with Roger Ver back then he would have gifted you some Bitcoin. We then had an unfortunate hack on Mt. Gox, which set Japan back by many, many years. The regulator came in, clamped down, really focused on protecting users and investors, but it never banned Bitcoin like many other countries have. And so we're now in an environment where Japan is probably 3-4 years behind the US. Japan looks fondly towards the US as the innovator, and Japan is now following in the US footsteps. So now we have a stablecoin, JPYC, which was launched just a short while ago. And so Japan really is moving in the right direction. Bitcoin itself is still not a financial asset, so it's in this bit of a strange no man's land. And so that's one of the benefits that we had as Metaplanet, that we became the most efficient way for Japanese retail investors to get exposure to Bitcoin in a tax-efficient manner. Now, we expect over the next year or so that Bitcoin will become a financial asset. The opportunity, the Bitcoin world will expand. More companies will be able to invest in Bitcoin because it will be more normalized. And Metaplanet, we stand at the center of that. We are the company in Japan with the largest amount of Bitcoin. We have 92% of all the Bitcoin held by corporations in Japan. We own the bitcoin.jp domain. We look forward to hosting this Bitcoin conference in Japan in 2027. We hope that all of you are there to visit us and experience Bitcoin on the ground. We have shareholder meetings in Japan, which are sort of like rock concerts. We have thousands of people that attend. And so we're very excited to be at the center of the Bitcoin ecosystem in Japan. It's really just the first chapter in a long journey, and we're really looking forward to the coming days, months, and years ahead.
One of the talking points or thing that's making the rounds the past few months is there's a lot of expectation for high price targets, the 4-year cycle, and instead Bitcoin dipped from about 120 to 80. Has that shaken Metaplanet's conviction? How are we dealing with this? Of course, I know the answer, but we get plenty of emails and inbound IR inquiries of, are we panicking? Are we going to sell Bitcoin? How are you thinking about this as kind of at the helm of the ship?
I mean, it's great to be on a Bitcoin standard because that is your hurdle rate. And so, of course, we want Bitcoin price to be higher, and we want our share price to perform well. But those are things that we can't control. We can't control Bitcoin price. We can't control our own stock price. What we can control is doing everything we can to accumulate more and more Bitcoin over time. I'm often asked, what is the one thing that worries me the most? And I like to joke and say, it's that Bitcoin, I wake up in the morning, the Bitcoin price is much higher. I'm afraid that we don't own enough Bitcoin yet. We have to do our best to chase the leader strategy. And the gap between them and everyone else is just beginning to expand. But I think that we do have a very good opportunity in Japan to do our best to catch up. We have a very special moat in Japan. We're the only Bitcoin treasury company in Japan. As I said earlier, we have the majority of the Bitcoin held by corporations. We're in an environment with a very low cost of capital. And so our cost to issue our preferreds will be the lowest in the world. We'll be able to use that capital to buy Bitcoin. And so we'll be able to capture more of that spread between our cost of capital and the compounded annual growth rate of Bitcoin over time. Strategy has now set the standard for the rate that must be paid for a Bitcoin-backed security. I think any other company that comes after Strategy in the US that issues a similar security in US dollars will have to contend with Strategy as being the risk-free rate, and will have to issue at a higher yield. But we're lucky. We're in Japan. We're completely devoid from that comparison, and we'll be able to compete against the issuers of fixed income instruments in Japan. And those issuers of fixed income instruments in Japan are offering a yield which is far lower than we seek to offer in Japan. And so that is the big opportunity for Metaplanet as a company. I think we're strategically positioned really, really well. And 2026, I'm fully expecting to be a very exciting year for Bitcoin and for Metaplanet.
So we got about 3 minutes left. Maybe we can end on kind of a similar note. We've often described this as a digital gold rush. And as you know, in the gold rush, there's a few winners. One winner is who accumulates all the gold. Another way to win is selling picks and shovels. What is the plan regarding selling the picks and shovels? And maybe there's a call to action to potential partners, service providers in the international or domestic Bitcoin and broadly digital asset community.
So I did share that we are the Bitcoin company in Japan. We now have 212,000 individual Japanese shareholders, and that actually makes us one of the most held stocks in Japan. Many other companies in Japan have, say, a crypto exchange, or they own a securities firm, yet they have fewer shareholders than we do. And so somehow we've managed to capture the hearts and minds of the Japanese retail investor. Many of them didn't know about Bitcoin before they bought our stock. And when they come to our shareholder meeting, which has thousands of people, they get to connect with others that are on this journey together. And so I think we do have that opportunity to do a business in the picks and shovels. People are already reaching out to us and asking us how to do all the things that we're doing. And these are people that we can service. The call to action, I suppose, is if you have a business anywhere in the world and you would like to target Metaplanet shareholders, you'd like to offer our shareholders something of value, that is something that we would be happy to facilitate. We do want our Japanese shareholders and our shareholders from around the world to be on this journey together with us, to see all the possible options that Bitcoin really has to offer. And we stand really at a very unique position in Japan to capitalize on that.
Very nice. Well, it looks like we got some time added. What have we touched on? Anything we missed?
No. Normally they're kicking you off the stage, but now they give us more time so we can stay for longer.
We're doing so well. Well, I guess, I don't know. I don't have anything else.
Any questions from the audience?
Yeah, sure. Yeah. So the question is, what is the strategy, regarding our stock and the relative valuation of our common stock? So at a 1x MNAV, or traditional terms, price to book, the strategy changes, right? And so the simple math is, if you issue common stock at a premium to your book value, you can increase Bitcoin per share. And we've done that to a great extent this year. Our Bitcoin per share has increased 6x, 500% year to date. But as you noted, if price to book or MNAV is below 1, then selling equity is destructive to Bitcoin per share. And so in that sense, the preferred equity is a really powerful tool, right? And so this allows preferred equity is completely uncorrelated to your MNAV or your price to book. in terms of your valuation, right? And so we're looking at the preferreds as a way to kind of diversify or have a different tool in our toolkit to be able to capital raise and acquire more Bitcoin regardless of the market condition. And I think that's what Michael Saylor has shown so well over the last year, is having different tools regarding different circumstances. And so our vision is we're going to have our common equity tool, and that will be a very valuable, strong tool for us. But if the equity markets aren't enthusiastic, then we can really lean on these fixed income instruments. And we want these to be liquid, we want these to be listed. And so that's our vision, and it's something that hasn't been done before in Japan. It's something that hadn't been done anywhere in the world until about 10 months ago. But that's what we're pretty laser focused on going into 2026. Well, sure, 30 seconds left. Yeah, so the question is regarding stock buybacks. We have a $500 million authorization for share buybacks. It's a tool for us, it's an option. Ultimately, as an operating company, you want to have optionality, right? So you never want to be boxed into a corner about what you can or can't do. And so if the market's dumb enough to send our stock to prices that are ridiculously cheap, we could buy back stock, and we will. But ultimately, we're really excited about accumulating Bitcoin, and that's what we're pretty focused on now.
Well, thank you all for being here, and thank you for your support of Metaplanet.
Fantastic. Thank you. Thank you so much.
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. I'm Frank Corva, Bitcoin journalist, joined by two very special guests, two gentlemen from Strive. To my left, Jeff Walton, Chief Risk Officer at Strive, as well as Ben Workman, the Chief Investment Officer at the company. I want to start with you, Ben. We were just talking a little bit off camera. Strive offered the market something new a few weeks back. I think they were touching on something similar that Metaplanet offers in Japan. Can you tell us a little bit about it?
We absolutely did. Yeah, we have the privilege of being the second issuer of digital credit ever. And we got to be honest, we were watching Metaplanet and we were wondering whether they were going to beat us to the market or not, but we did get our perpetual preferred equity into the market called SATA.
Okay.
And that puts us on the board here. So we're very excited about it. Digital credit, as you're seeing at all these conferences and the way the conversation's escalating, it's becoming the future.
Love that.
And we're happy to be at the forefront driving that.
Exciting times, almost building out a yield curve on Bitcoin, right? Offering people different products with Bitcoin at the core of it. When you think about this, Jeff, does this factor into a risk so that you're not just focusing so much on equities? Does this diversification of products that you offer, is that part of a risk strategy?
Yeah, absolutely. One of the most unique things here, particularly with our instrument SATA, is you can compare it to Strategy's products, and it's different, right? It is senior in our capital structure. We don't have convertible debt. So it provides a different risk-return profile relative to the Strategy preferred offering. So we're really excited about that. This is really appealing. We're excited to sell it to different areas of the financial world. I think this is something that could be really appealing to insurance companies that do liability matching. And there's opportunity to think about the risk and calculate the risk 24/7, 365, which is a novel concept in this world. You compare this to anything in the physical world, and it's, you don't have physical risk, you have digital risk, and that is really attractive when you compare them.
Amazing stuff.
Yeah.
Ben, back to you. When it comes to treasury companies, of which we've seen many come to the market over the course of this past year and a half or so, I know a lot of the conversation at the Bitcoin for Corporations Symposium was around different strategies, what these different companies are doing to differentiate themselves amongst one another. What is it that makes Strive unique in this market?
Simplicity. So there's a huge benefit to not being the one that goes first. Strategy's been blazing this trail for us for a long time. Jeff and I in particular have spent a lot of our time tracking every move that they make, and we got to take the expertise that we learned from Michael and Fong and Shirish and that entire team and apply it to us. And what we learned is the market really loves simplicity. And so we only offer two products. We have amplified Bitcoin through our common equity, ASST, and then we have our structured yield product, right? SATA, 12% variable rate dividend. That kind of matches Stretch, what Strategy put out. And so for us, the conversation's very simple. Do you want the high-octane Bitcoin exposure? If so, we've got the common equity that's going to meet your needs. Or are you focused on cash flow and you don't want the volatility and you don't want the risk? And we've got the right product for you there too. So we're keeping it simple.
Like that. Keeping it simple. Good stuff. One thing we definitely have to think about when it comes to Bitcoin is risk. Obviously, this is quite a volatile asset.
Yeah.
But what's happening, I think a lot of people are kind of perplexed. We have some people saying we're seeing a bottom right now, which would be kind of strange because usually at this point in the 4-year cycle, we would tend to see a broader drawdown. People seem to think because there's this more constant bid in the market amongst the treasury companies, other institutions that are here, nation states that are here, things are different. How do you think about this as the chief risk officer?
Yeah, I think the plumbing of the market has fundamentally changed, right? 5 years ago, there wasn't a Bitcoin ETF. There weren't digital credit products. There weren't companies that held $60 billion of this stuff, the publicly traded companies, right? So, I think the structure, the architecture of the market has fundamentally changed, and that's put us in a really unique position. And you think about what's happened in the last year, 2025, and we didn't really have a euphoria moment.
Yep.
So, is there a potential additional drawdown on the horizon? Yeah, absolutely. That can always happen. But really, the market seems incredibly healthy right now. There's not a ton of leverage in the system. Strategy has a 12% leverage ratio, a 25% amplification ratio, and I think there's opportunity to build, and things seem really, really healthy here. So. And you look at business cycles and where we're at, and we haven't seen massive credit expansion, potentially interest rates in the U.S. coming down on Wednesday, so 2 days from now. So we'll see how that impacts the rest of the market. But things seem healthy here.
Okay, that was my next question. Actually, interest rates about to come down. A lot of people think this is going to be great for risk assets. Bitcoin, while some people don't necessarily think about it as a risk asset, they classify it as uncorrelated. It does tend to trade like a risk asset. How do you think about that, Ben?
Yeah, it really has shifted over time because there's been periods of time where it trades very uncorrelated. You saw that during the period where the tariffs were coming into the market. And then there's other certain times where you see it pegging right back with the risk assets again. So the answer is we're not going to know yet. I think Bitcoin's still in that maturing phase. The market's still expanding. We're getting that market structure out there. You're getting more corporations coming in to buy. You saw a central bank put it on the balance sheet for the very first time. We're starting to see that bid that's going to underpin this market start to build, but I think it's still going to take a little time. We might still have some volatility here in the near term, but I'm expecting that over time you start seeing this much more like a structural institutional bid where it starts grinding up and to the right and it starts really making everyone bored because we're all used to the wild ride.
Yeah, that's right. That's right.
I just add on that. I mean, AI has been a really big topic, and there's been an explosion of interest in the equity market, in artificial intelligence. And you look at multiples in the rest of the equity market, and you compare some of the debt in the rest of the debt market. Those are enormous markets relative to Bitcoin. And if you start to think about the risk profile of Bitcoin relative to everything else, some of these other things look significantly attractive. So there could be a scenario where there's positive basis risk, where the equity market or bond market could fall, and Bitcoin captures the difference because of the relative risk profile.
Yep.
And if people start to wrap their head around the math associated with Bitcoin, these things look really attractive.
Yeah, I agree. I think one of the other things that we see this a lot on X, a lot of the M2 versus Bitcoin, and it hasn't exactly done what people thought, right? Everyone thought Bitcoin tends to follow M2, which is the broader money supply in the world. Has this been surprising at all to see that this trend hasn't sort of remained intact, Ben?
When you start to see a trend like that follow so closely for so long, you do get surprised when you see the divergence happen.
Yep.
But when you look at this, you've got to look at it over a really long time frame. And we just came out of a period of quantitative tightening. Quite frankly, Bitcoin performed quite well during a period of quantitative tightening. And now if we're starting to see QE on the horizon and you're going to start seeing more of that money entering the supply, we're going to really start to find out, if Bitcoin truly is going to be that debasement hedge. And if so, then I'm expecting that it'll catch up and it'll make that ground up.
Okay, appreciate it.
If you just change the axis, it doesn't. You can look at any horizon and the correlation kind of goes away.
This is true. One of the last things, and we do have to jump over to the stage in just a minute, but I want one final question for you, Jeff. The one thing that a lot of people are saying, we have this about $8 trillion in money market funds right now. Some people say it's going to look for a home once these once rates come down a little bit further. Are you a believer in this philosophy? Are we going to see some of these trillions move into Bitcoin?
Yeah, I absolutely think so. It's again going back to your earlier topics here. This is risk on. I think we're getting close to a risk on period. We're in the business cycle.
Yeah. Getting close to a risk-on period in the business cycle. You're going to want to pay attention to what Strive does in such an environment. But first, we're going back to the Falcon stage to hear about Bitcoin innovation through regulation in the UAE. And we'll be right back here at the live desk with Ben and Jeff after this.
All right, are you ready? As I told you earlier, we're going to discuss right now in the next panel discussion one of my favorite topics. And you know which is it? It's yes, of course, but also regulation. Okay, so the topic of the next panel is about panel innovation through regulation in the UAE. I'm so excited to welcome on the stage, and please give a big hand to Nolan Bowerly, host at Roxham TV. Please welcome him on stage and be louder. Louder, please. He will be joined today by Serena Sebastiani, founder and managing director at Donex, co-chair of digital assets at MENA FinTech Association, and give a big hand to Paul Boots, head of sector development, Virtual Assets Regulatory Authority, or VARA. Give them a big hand and be louder. The floor is yours.
Welcome, everyone. Thank you. I'll start just with a bit of transparency here. I was asked to fill in about 5 minutes ago. So normally I would never bore a beautiful audience like you guys with introducing the panelists, but I need the introduction because I jumped in here just a few minutes ago. So I'm going to start with the old question. Please introduce yourself because I really need it. So please.
Hello, everyone. Thank you. Thank you for jumping in last minute. Really appreciate it. Thank you, Bitcoin MENA. So I'm Serena Sebastiani. I'm the founder and managing director of Donex. It's a boutique advisory firm specialized in fintech, digital asset, and the future of finance. I'm also the co-chair of the digital asset working group for the MENA FinTech Association, and previously the head of digital asset for PwC in MENA for 15 years, and so helped out Vara a little bit with their setup. Thank you.
Very good. So my name is Paul Boots. I look after what we call sector development on behalf of VARA, the Virtual Asset Regulatory Authority. Sector development, what does that mean? For us, that means how do we make Dubai and the UAE as a whole, globally, a great place to be for virtual asset companies. As a regulator, we have a big role in that, of course, to make sure that we attract the right kind of entities, that we enable them to do the right kind of business. So I'm very excited to be here. I've been in the UAE 18 years, all the way kind of originally building the diamond industry here, and then doing some fintech startups, and now virtual assets. So here we go.
Amazing. So when I first saw the title of this panel 5 minutes ago, my original reaction was something that I heard from Michael Saylor yesterday, where Michael Saylor was talking about the UAE and USA, and he made a contrast saying, America had adoption before regulation, so it had mass adoption in its own way, before any regulatory clarity came. Whereas here it was kind of the reverse, where they tried to really lay the foundation before mass adoption was there. And I've noticed that indeed, for example, the little carve-out, the playground they have for legal jurisdictional changes already showed that you could make, for example, like my company at Roxham, where Bitcoin-denominated markets, that was already possible. You already had a law that said you could denominate a market in a virtual asset, not the DRAM. I mean, that would be impossible in America. It would have to be denominated in dollars. So was that accurate, what Michael Saylor said? And I'll ask you first, what did we really create this really good base of predictable regulatory environment in order to induce and attract that mass adoption?
Well, that's definitely what we set out to do, and actually Serena was part of that team back in the day. But and I'll tell you maybe the origin story a bit of VARA and how we came about, because Dubai as a center, right? We rely very heavily on trade, on events, on tourism, and so on. And during the COVID period, suddenly those three industries were nowhere, and we didn't know how long that was going to take. Yet we still have very ambitious plans around what we call the D33 agenda. So Dubai 33, which is about doubling our GDP by the year 2033, and the digital asset industry as a whole was definitely one that we identified as being a big contributor to this. And then the question indeed became, how do we attract digital native firms? How do we attract virtual asset companies? And how do we do that in a responsible way? And we started to look globally, and from in those years, and this is now like we're talking 2022, let's say, when we really started to conceptualize the details of this, there was not a lot of regulation out there. There was not something that we could copy. There was not an existing regulator that was kind of able to take this on as a kind of side gig or whatever you want to call that. So we decided to establish a regulator from scratch, specifically and only dedicated to virtual assets. Mm-hmm. And to your point of foundation, that's when we were able to build a regulatory framework that is built for the industry and in a lot of ways by the industry. And that's what we're building on now. So where we are today is, as a regulator, we have now regulated 40 virtual asset service providers, which makes us globally, by the way, as a regulator, the largest one who does, like, for these full regulations. So this is not just a registration regime. This is where you go through a full regulatory framework, and we're very proud of that. And we have a very big pipeline of many more companies to come in.
Now, I want to follow up with, you've got this foundation, and you know, a predictive model that I've used in this industry for a long time to sort of understand where we're headed is human capital migration. So when people physically move somewhere to do something, it's a pretty good sign that it's real. Like, you kind of know you have product market fit when someone physically does something to go engage with a product, right? It's usually a good sign that the thing is real and can happen. And we saw the human capital migration in Bitcoin. We saw, you know, real industries come in. Wall Street came in, and we're seeing, of course, energy sector come in. And you know, for myself personally, when I look at Dubai, and even from a media point of view, we created a studio recently in London. And to be honest, it's very hard to get content made over there these days because there's not a lot of people there anymore. Whereas if I come here and if I had a studio here, you've already got this human capital migration. Do you guys think of this as kind of like that product market fit where you actually see footsteps? You see people moving to come here? Was that in the design originally? Is that what we're seeing? I see it from the media angle, but are you seeing these human capital benefits?
I love speaking about these things, thank you, because human capital is actually talents, right? The talents is one of the most important, the foundational layer of the industry, any industry, but ours in particular, because our industry is based on innovation, and we need brilliant minds to innovate. So I just want to do a step back in history. The first, let's say, first regulatory sandboxes, fintech strategies, national fintech strategies are dated 2016, very early stage with Cyprus, and then 2018 with the UK. We followed with Saudi Arabia 2020, part of the Saudi Vision 2030, FSDP, and we did a fintech strategy. At that time, and again, I'm going back to 2018 in London, right? At that time, one of the main pillars of any fintech strategy was talents, attracting talents. And in this region particularly, because we had a major issue in attracting talents, that's why we were at that time, maybe not anymore right now, right? But at that time, a major, interesting expat hub where people were moving in mainly to make money. Now it's totally different, right? So that foundational layer expanded and was actually nurtured even locally. So now not only we have international talent and we have people coming from Wall Street, as you said. I mean, I was at dinner yesterday with BlackRock. This is a major, I mean, BlackRock moving here, like people, actually regional heads living here, right? This is a major shift in this region. Not only that, but we are also nurturing local talents. And this is in Saudi Arabia, this is in the UAE. Now we have incredibly good and connected schools and university. We have excellent programs, and we have incredible opportunities to learn.
So when you say universities, I like that you mentioned that because, you know, I've been programming events in this industry from CoinDesk to the Bitcoin Magazine events and others, and I've always thought of them as sort of replacing what universities weren't able to keep up with. It's kind of too fast. So I've thought of these events as kind of like a compacted university experience. You know, what you get in 4 years or a year, you can get in a couple of days. The networking to get the jobs and all of that kind of happens at these events. But I'll say, you know, years ago when I would consult with a lot of companies saying we want to do an event, they would say Dubai. I would say the signal is not great. It looks like, you know, you're going after people who have a lot of money but are not committed to the industry. That has completely been blown out of my vocabulary, worldview. That was one of those things, like you said, about pre-COVID. So about these events like this one, how much importance does the regulator see these events? Because again, there is kind of a delta to seeing these events as just a shill fest versus really university, picking up the slack from universities who can't keep up with this industry. So does the regulator, obviously you're here, but just a bit of context on UAE and its embrace of these events and how successful it's been.
And it's a very good point. So I am here because we want to support these events as well. It's about education. It's about us educating, that there is a regulator for virtual assets and all these kind of points. I was looking at it the other day, I think, and I don't know over the entire UAE, but I know in Dubai there's more than 50 virtual asset-related events every year. And that's all the way from, your very large ones to smaller roundtables and so on. And we try to participate in as many as we can to keep our ear to the ground, to keep the market educated, because we see ourselves as a very innovative regulator. We are in an industry that's very innovative, so we need to know what's happening and what people are talking about, so that our regulatory enablement team, who is there to update our rule books, knows what's coming, right? So that allows us to design pilots, to work with our licensed VAS to understand what they want to do. So these events become extremely important, not just from us educating the market, but the other way around as well. And then to your point of talent, we're always looking to kind of promote what a regulator does and kind of what the importance of compliance and all these kind of things is, because we're growing an industry, and the region here is great at attracting talent, but it's never enough. I mean, as I mentioned, we have so many entities that are fully licensed now. They all need compliance officers. They all need the general managers and CEOs and other staff. So we're trying to also use these events to really explain what this region is all about and what the benefits are of not just visiting here for an event, but actually moving here.
I would add something on this, actually, sorry, because I'm particularly proud to sit next to Vara. And as part of my story, I supported the early stage of the setup of Vara. We really had very long nights together, and this lasted a couple of years, so I'm very proud. And I want to say something that maybe it's quite underestimated about this place, right? And these regulators. This is one of the few regulators in the world that has a sector development team that is represented here by Paul, that leads the department. Sector development for a regulator. I remember early stage conversations when we were setting up the direction and the line of Vara, and we were saying we need to build, of course, proactively, but we also need to be reactive to market and to innovation, because we have the responsibility to protect consumers and to protect the industry and to protect from systemic risk. But eventually, we need to let the industry grow, nurture, because the ultimate goal for Dubai is to become a crypto global hub, right? We are not El Salvador. I mean, you mentioned El Salvador. We are not El Salvador. This is not Bitcoin country, right? And maybe it's not what we are aiming to. We are in a nation and in a region where digital assets and Bitcoin are becoming the financial sector, are becoming the new financial industry. And this is an embedded proposition that this regulator actually embodies perfectly.
And I want to add, just to build on that, I did my show last night after what we heard yesterday from the UAE representative, who's from I forget his name, but he was from the security service. And that struck me as kind of peculiar. They didn't send someone from tech and innovation. They didn't send someone from a financial background. They sent someone from national security. And when I think of what's going on with cryptocurrencies and the energy question here, and people ask all the time in America, AI, is it a bubble? Is all this a bubble? And I say, it's not like what we saw with the .com. It's more like aerospace in America in the 1950s. It is a national security question. And when you saw the president visit here back in May, we saw alignment of a lot of this regulatory stuff. We're seeing it come out of the US administration. And do you guys take that same perspective? Do you guys now have that kind of mandate to think about this as national security and to participate with foreign bodies as a matter of survival, not just wealth generation, but really navigating the way the world is changing today?
Yeah, well, definitely. But it's also, a lot of it also comes down to leadership here, right? Like, to your point of vision and things like that, like, we are trying to cooperate, and we are in an industry that moves very quickly, that has its risks and has reputation that, you know, in some areas where we're trying to say, okay, what can we as a country do to facilitate that business from happening, because it has a lot of advantages. The people in the room here are all the ones innovating on these platforms and on this technology, but we need to make sure we protect investors. We need to make sure we protect the nation as well from potential, you know, issues. And as a regulator, we play a big role in that, but we also play a role in making sure that we don't stop innovation from happening. And that's where we very much kind of spend a lot of our time thinking, because, you know, we see TradFi entities coming into this with all sorts of new ideas that we've never seen before. How can we as a regulator stay as close to that cutting edge as possible so that we can responsibly allow that to happen, right? So yeah, this is
that's exactly what you have to avoid, because no one knows if they got it right yet. You kind of have to do A/B testing all the time. It's almost like entrepreneurial product creation, but from the regulatory side, because you need to have that feedback loop, because we don't know what the right cocktail of rules are yet. We kind of have to toggle it up and down. But again, you know, what I wonder though is definitely having that flexibility, but going back to this all-encompassing, let's call it all in, right? Am I right to say that regulatory-wise, UAE is all in? They're ready to do whatever it takes to make this thing work?
I think yes, and just to go back to the title, we have a title somewhere.
Regulatory
right?
acceptance to build.
Exactly. The title of this, I think,
leading with regulatory.
The headline of this panel was innovation, Bitcoin innovation through regulatory change, right? Something around these lines. Now. We call this industry very innovative. There is something weird and I think very fascinating about Bitcoin specifically, not crypto and not digital asset, but Bitcoin specifically. Bitcoin is the one and only incredible tech innovation of this era that is particularly not very keen to change, right? It's very, I mean, it's non-innovative by definition. Fixed supply, 21 million. Fixed code, fixed rules. You cannot innovate Bitcoin. It's immovable. It doesn't move, right? It's decentralized by definition. So we are speaking a lot about innovation, but innovating what? We are not innovating the instruments and the products that are enabling the industry, right? We are innovating the ecosystem around it and the financial infrastructure. And the time that we understand this, we also understand how the regulators should play and how, as you said, regulators in Dubai are all in. Why they're all in? Because they play a role at ecosystem level. At ecosystem level, meaning enabling industries, enabling new activities to flourish, listening to market players, and to what do they want to build on this immutable infrastructure that Bitcoin represents. Then we can have a debate about, you know, all other crypto. Other crypto are smart contracts, so that's a different stories, right? But we have a foundational layer that is immutable, and we can build a full financial and finance and payment industry on top of it. That's why regulators are here to enable the industry in a safe and considerate way, right? And we have, even a few too many regulators in the UAE to help us doing that. Sometimes can be a bit controversial and a bit difficult to navigate. But I think we are lucky enough to be in one of the few jurisdictions in the world where you knock at the door of the regulator and the door is open and you are listened to. So you can always ask and and discuss.
So for our last minute, can you give us a bit of an outlook for 2026 and what we can expect from regulatory innovation here? Any cats you can let out of the bag?
That's always a difficult one, but I think what we're seeing a lot of, right? So we have a very large pipeline of entities that are coming in that are looking to operate from here. And that's partly because, you know, our regulations are not product or technology based, we are just principles based. So we're able to cater to the activities that entities do. Now, from that activity point of view, what we're seeing a lot is the RWA kind of tokenization side on all aspects, right? That's all the way down from real estate to commodities to all sorts of other things. And as a regulator, we're looking at that very closely to see how we can enable that, where our role is with that, and which entities we can support. And then the other one is just the convergence of TradFi and, you know, virtual assets is huge. And that comes all the way down to TradFi players looking to enter the space, as well as kind of people who worked at TradFi players who are coming into the space to build some really cool stuff in the back end.
Excellent. Well, thanks a lot, everyone. We're out of time, but I appreciate everyone's attention and time. And please give a warm hand for our great panelists.
Thank you. Thank you.
Fantastic. Once again, give a big hand to our amazing panelists. I believe that everybody will agree that regulations in the UAE are actually inspiring other countries to follow suit.
Back to the Bitcoin Magazine news desk, powered by Crypto.com. We're here winding down the day 2, the final day of Bitcoin MENA 2025. It's been an action-packed day, but we still have Changpeng Zhao, founder of Binance, as well as the one and only Michael Saylor to take the main stage. But before we get there, I have two gentlemen to my left that I want to talk with over here. Ben Workman, Chief Investment Officer at Strive, as well as Hunter Albright, Chief Revenue Officer at Salt Lending. We were just talking off camera a little bit about some of the conversations you heard about the UAE gearing up to maybe get a bigger stake in Bitcoin. We're hearing these conversations with sovereigns around the world. Companies are more interested in Bitcoin. Sovereigns more interested in Bitcoin. Hunter, what does this make you think? Should the U.S. be paying a bit more attention to some of these conversations that you're hearing?
I think so. I think it's a fun way to wrap up the year, to hear the enthusiasm, have the conversations, talking with people, sort of walking through the conference and on the floor. Right, they're excited about Bitcoin as an asset class, excited how they can invest in it, they can own it, and in particular, I think the common theme of digital credit coming out of this, about how they can get access and exposure to Bitcoin in multiple ways now.
Yeah, appreciate that. Ben, any major takeaways from BFC? I know we talked about a few different highlights, but when you're walking away from this, we talked about each one of these things. There's sort of a new narrative. There's something new developing. What would you say was the biggest narrative when it came to sort of the institutional involvement with Bitcoin?
I think what I'm starting to see is we've got a world in transition. And you're seeing that based on all the different regions when you go to these conferences and the conversations that are happening around it. And I think that really got highlighted when Saylor gave his talk on the enterprise stage yesterday, where he walked people through his bigger and biggest ideas. And what he was really highlighting was that there's going to be a transformation of the banking system, and who's going to position themselves as the Switzerland of the digital age.
Yep.
And this region in particular is uniquely covering that capability. They have their own countries, they have their own banks, they've got the ability to influence the regulation around that. What they need is a digital credit issuer that they can use to back that. And so the biggest idea that he put out there was a fund that you build that's 80% digital credit, 20% currency, 10% reserve, and that's what's backing your digital bank accounts, and this is the region where that can happen.
Did it seem like that was well received, or were people like, what's this guy talking about? Is it like, why is he proposing these ideas here?
Well, he kept getting invited to every country in the region,
That's fair.
so I got to
That's fair.
imagine it was going somewhat well.
It worked out. When we think about Bitcoin as pristine collateral, Hunter, you're in lending. I know we have to cut back to the main stage in a second, but just maybe a final thought on that. Is the world really coming around to looking at Bitcoin as pristine collateral, something like a buoy, something sort of rock solid to base a business off of?
I think so. I think for the thing that I really like about the digital credit conversation is, for me, digital credit is both converting the asset into income with things like Strive and others are doing, as well as then allowing people to borrow against the Bitcoin that they own. I think we're making it a more inclusive ecosystem and for people to come into. And now it's a little bit of sort of a same drum we're beating, is that education is the challenge to help people understand it and understand how they can get in.
Appreciate that, Hunter. We're headed back to the Falcon stage to hear about institutional gravity, how market structure is pulling Bitcoin into the core. Sounds interesting, ladies and gentlemen. Over to the Falcon stage. We'll be back here at the news desk after this.
everyone. We've got some time today to really talk about the institutionalization of Bitcoin and how we've seen the market structure change over the past year. So, but before we get into it, you guys represent some great companies, have been in the Bitcoin space for a long, long time, doing all sorts of stuff. But let's hit it with a quick round of intros. Tommy, if you want to kick it off.
Sure. Hey guys, super excited to be here. My name is Tommy. I'm the head of DeFi investment at Crypto.com Capital. We're the venture investment arm for the Crypto.com exchange. The total fund size is $500 million, and so far we've invested in over 100 projects across blockchain infrastructure like layer 1, layer 2s, applications, DeFi, etc. And before that, I was working at investment banking, mostly covering like TMT sectors in APAC. So yeah, great to meet everyone.
Hey, I'm Bjorn, the CEO of Aurelion. We're the first NASDAQ-listed Tether gold treasury. So we buy digitalized gold and generate yield on that. Before focusing on gold, I've started Penguin, which is one of the biggest Bitcoin miners in South America.
Hey all, Dave, co-CEO at Kraken, OG crypto exchange, now the coolest crypto platform out there.
Great. Well, our topic today is really about institutionalization and market structure. So we've really been calling 2025 the year of institutionalization of Bitcoin. The suit coiners are out in full force here with the approval of the spot ETFs in the US kind of kicking off this theme. How have you guys seen really the market structure and that institutionalization play out across the year? What looks much different today than it did 12 months ago?
Yeah, perhaps I can go first. I think the single most important contributor is the regulatory clarity. In the US, like this year, we have the Genius Act, right, which defines like the stablecoin regulatory framework, and then we are expecting like the Clarity Act, right, on the pipeline. And in Europe, we have the MiCA, and also in Middle East, we have a lot of like progress in the regulation. And also in Hong Kong, right, we have the stablecoin framework by the HKMA as well. So a lot of these regulations, they might not be directly tied to Bitcoin itself, but actually gives a lot of confidence to the more conservative and traditional institutional investors in the industry as a whole. Because if you think about Bitcoin, it is the first cryptocurrency, and this is the staple of the industry. So there will be like always a gap or delay between like these more conservative capital to deploy into like the latest like regulatory like clarity assets. So right now we are seeing like the stablecoin, we're seeing the investment vehicle being defined, but for the investors, now they are the time to deploy into Bitcoin. So that's why we are seeing that there's so much capital flowing into Bitcoin in these 2 years.
Well, I think we're in a very interesting time right now where a lot of the OGs, original, kind of like start to lose interest, get out of it, right? And it becomes more apparent that it's a marathon, not a sprint for Bitcoin to really conquer reserve asset status. And I think right now it's still, arguably trades like a tech stock, right? And I think it really has to get there to be this defining asset class by itself. And my personal view on that is that we probably need to go from a market cap of just below 2 trillion where we are right now to a market cap well below probably 30 trillion where gold is, right? So it's a long way there. It means that we need to get to a million per Bitcoin and maybe to 10 million a Bitcoin. And I think if we look at the historic growth, right, arguably many people thought it's exponential and set up expectations that we're going to hit a million soon, things like this. And I think now we're kind of like all trying to figure out, hey, why we're not moving upwards, right? We always hope that Wall Street will come in. Now Wall Street is here, right? And we're dealing with a very interesting issue, right? Which is now that Bitcoin is part of the mainstream financial idea, I guess, not fully adopted, but on the way to it. We're now seeing something I would call paper Bitcoin, right? And just like what we had in gold, an issue, right, that we really, has been around for a very long time. Paper gold will probably now have something like paper Bitcoin. We'll have to deal with it, and it's not immune against it. So I think we're somewhere in the middle of this. I think, Bitcoin price has been historically growing with a power of 6 over time, I think. If we continue on that trend, we'd be somewhere at 20, 30 trillion market cap, 2035. So I think we're seeing this path, but it's definitely a longer journey than you would think today.
So I've been over at the FinTech Week hanging with all the TradFi guys for the past like 24 hours or so. Here comes Tyler who wants to talk about institutions again. I was like so excited to be here with all the Bitcoiners, and here I am having to talk about institutions. Look, I think it is actually pretty meaningful. I mean, the long arc of history, we've been, kind of talking about like when are the institutions coming, when are they coming, what's gonna trigger them to jump in. The reality is, if we kind of like think about it pretty broadly, across, since roughly around when I got in 2013, we've seen different groups of institutions come in throughout all those years. So the first group were like the venture capitalists. This is a little bit of a loose definition of institutions, right? The VCs, they came in, call it like 2013 or even before. Investing companies, some like starting to actually own tokens. The next group were the high-frequency trading firms. They came in around like 2015, 2016, and all the big guys got in around that time. So you had the kind of the tokens coming to being, the exchanges launched, you started getting activity, these high-frequency trading firms came in, that was like step 2. Step 3, around like the run-up into 2017, not much else happened beyond those 2 pieces. And then after 17, you kind of got some TradFi guys, unexpectedly, the fintechs, they kind of came in. That's when like Square and Revolut, PayPal, all these guys kind of came into the marketplace. And that takes us up to 21. And then 21 was like a meaningful one. We actually had the first kind of like buy-side institutions. Remember this Paul Tudor Jones, those like, things hitting the media. That was kind of like, some of those guys were actually buying, on the back end. And so that was meaningful. And then you also saw your first kind of like corporates as well. That's when MicroStrategy got going. Tesla, Square, a few others kind of dipped in, but it was all of those pieces there, the hedge funds and the very minimal, just barely scratching the surface. And then finally we come to 24 and this year, 25, we see a lot more institutions come in, and frankly the biggest mechanism that brought a lot of them in was the ETF. The ETFs launched and you had meaningful adoption among hedge funds, meaningful adoption among RIAs, their client bases, and then a number of other funds, a few sovereigns dipping in and so forth. And so we now like actually see, now ETFs are pretty narrow from a product standpoint, but that's like the next, that's like the most meaningful kind of uptick on the buy side. What's going to happen in 2016 is all of the sell side banks and brokers, the biggest ones out there, they're going to now come, who basically serve these guys as customers. They're all working on building in their first like crypto Bitcoin plays. They're all going to launch, I'm talking the biggest banks, the biggest brokers, the sales and trading desks, they're going to all launch, and that's going to like in turn drive like another wave of institutions on the buy side to come back around once they're like, oh my gosh, this is familiar, right? Am I same custodian? All these different pieces.
Dave, you just touched on some of this this adoption arc we've seen, but some of the large players we've seen come into Bitcoin, some sovereign funds, a lot of hedge funds, some big pension funds. How much do you think these folks are actually coming into the ETF because they buy into the Bitcoin story and the value proposition, and they're sold on Bitcoin, versus just seeing it as another asset class that Wall Street can trade and can basis trade and can build structured products and can generate fees around?
I think it's mixed, and it depends on the firm. I would say you'd like to believe the former is the bigger chunk, right? And I'd say that is probably true as far as like number of firms out there, because remember all the like trading firms and HFTs, they've been in for a while. A lot of those guys are the ones that are arbing across the ETF versus the underlying and all that kind of stuff. So I think for the most part, the funds that are in, they're coming in because now look, they're just developing their thesis on it. They're building their views on the asset class. A lot of the hedge funds that come in aren't necessarily the really long-term guys. They're horizons of 1 month to a couple years type investor, which is different than like an endowment, a sovereign, a pension, who are like more, 5+ year time frames, right? So you kind of have that, and so that type of institution is in now, who are thinking a little bit shorter term. And look, that next cycle, I think we get all, big influx of the longer term guys, and be another big tailwind for us.
Let's hope. Hope we get some long-term investors in here. With that kind of adoption arc and that investor profile you mentioned, like, how have each of you seen really the market structure in Bitcoin change as a result? Obviously, we've got a year with much more muted volatility compared to what Bitcoin's seen historically. And we've also got, a phenomenon where Bitcoin dominance has been rising over the year, or at least more steady, where it's been a bigger center of gravity. What are you guys seeing from your exchanges, your companies, the counterparties, and investors you work with?
As a venture capital investor, right, we see a lot of startups and projects. So we're supposed to be the first one to understand the market trends and where we are heading. I think there are two major things that I want to add on this is that, first, we're seeing a lot more companies focusing on the equity values, which means that they could be building some kind of payment service, or just a service providers that have a more traditional business model that are generating revenue through USD or some very traditional revenue model. So which means that right now, a lot of investors, they're focusing more on how can this company generate cash flow, generate profit, instead of when are they launching a token, when can they get on all the biggest exchanges. So I think this is the first biggest shift, and this is actually contributed by the adoption of Bitcoin, because now more of the traditional investors are into the game. They want to be a part, and they value a lot of these equity value of the companies. And the other thing is that we are also seeing a lot more IPO activities, right, in the traditional stock market, which means that as an investor, you have much more exit opportunities and things that you can make money off, right, instead of just waiting for your portfolio to launch a token. And the second thing is that a lot of projects right now are doing RWA or tokenization, which are very popular among builders. And a lot of these are about how do we bring on the pre-existing real-world asset on-chain. So these tokens, it could be tokenized T-bills, it could be money market funds, it could be even stocks. And these are not natively on crypto. Because when we normally talk about Bitcoin dominance, we are normally referring to, okay, the market cap of Bitcoin relative to the whole cryptocurrencies, right, including all the layer 1, layer 2s, all the DApp coins, or even some of the meme coins, right? But right now we are seeing a lot more of the old existing assets being put on chain. And I think this is actually a healthy and progression of the industry.
So it's very interesting, right? A lot of investors have been accumulating insane amounts of resources by betting on Bitcoin and Bitcoin going up. And what we're seeing, right, as a gold treasury company in particular, is that a lot of companies and our investors are now looking into, okay, is Bitcoin forever going to go up? Where is the cycle, right? We're all looking for the cycle, obviously. Is it a 5-year cycle now? Is there no more cycle? And so I think it's very interesting to look what some of the bigger players do. So if you look at Tether, right, they've accumulated an insane amount of gold. In fact, they've probably bought more gold than any country or any other institution in the last quarter. And I think now they're actually the biggest holder of gold, aside of around 30 central banks, which is pretty meaningful, right? And they came out of nowhere doing that. And so before, of course, they bought a lot of Bitcoin, and now they're like, okay, we're having this size now. Right, and there's a lot of other companies in the crypto space that we're having conversations with that have the same kind of thought, right? We've lived on the volatility. We've gone through all this kind of hodl pain, and now going forward, is it the right thing to do, right? Or does it make sense to diversify? And I think one very underlying, very important thing that continues to be very strong is the debasement trade, right? Everyone, I think, in Bitcoin to some extent at some point has been happy about the debasement and be like, hey, I'm long debasement, and I think it's probably a trade that will continue to be very meaningful and very important. And the three most important things probably is Bitcoin, gold, and land, right? But if you look at Bitcoin and gold, they profit from it very differently, right? And I think I think that is something that we're seeing more and more institutions that are long-term players in the Bitcoin space starting to adopt and move to some extent into gold and starting to develop an interest in it. And maybe also kind of following up on the RWA topic, I think this is extremely important, right? Because thanks to real-world asset tokenization, we now have tokenized gold. And I think that is really something that brings that transparency to the gold that before, it wouldn't make sense for a crypto person to start buying gold bars. That wouldn't feel right? But now that the gold starts to live on the blockchain, I think it's a very, very interesting situation, and we see some very smart players in the industry making some very big bets on this.
To keep going on the gold theme here for a little bit, like, how do you see kind of the Bitcoin market structure evolving compared to gold? And obviously with the common criticism of gold that you mentioned, where gold is physical, it's very expensive to custody and settle, and so we've relied on central counterparties like the London Metals Exchange, where prices are set based on paper gold derivatives, where the prices are set at the margin. Do you see that same market structure coming to Bitcoin, or does Bitcoin's market treatment, settlement, execution, clearing look differently, or is it just going to be another asset class packaged by Wall Street in the exact same way?
I think it's interesting because we get all these names for Bitcoin, right? Digital gold. What's in the white paper, like digital cash or whatever it is, right? The reality is Bitcoin is kind of all of these things in a way, right? So it is this, deflationary, inflation-resistant asset that is an incredible store of value. It's also a currency, which is, that first piece tends not to be true for almost all fiat currencies out there. It's also a currency that's used for payments and all these various different types of things, settlement, part of the financial institution. It's also kind of like a new technology, so it behaves in a lot of ways like, risk asset, like equity or, large tech company or whatever, where it's like a innovative technology and the use cases grow for this technology and the adoption grows. So it kind of has properties, at least today, and this, will ebb and flow over time, or, maybe potentially more people use it for payments as we move forward. And so I think all these different pieces really impact what it looks like from a market structure standpoint, how that Bitcoin's going to behave through all these various different cycles, and it will shift. Back in the day, Bitcoin was like, we used to always talk about like it's this innovative financial thing, and it's totally uncorrelated with any of the other markets. We used to say that all the time, where we're like, this is like something that's like new, and it just has never been seen before. Well, of course, it's correlated now, and that's really a big part of that is the kind of like that last prong, which is the tech side of it, behaving more like a tech company, a risk asset, from a trading and investing standpoint, because in a lot of ways it is this innovative technology you can build upon and all these types of things, much the same as, an actual tech platform built by a company. So I think that, who knows, maybe it could actually develop some other, attributes such that it, even takes on other dynamics within financial markets. So I think it's actually special, but I don't think it will gravitate towards any one thing in the near term, because right now it's all of these, and I don't see any of those going away.
To follow up on that, I think a good asset is something that is I think the panel is called something about gravity, right? Isn't it? And so when we think about gravity, we think about physics, right? And I think good assets have something to do with physics. Bitcoin is an amazing asset because it's backed by energy, right? It's proof of work, and it is truth. Physics is the science of truth. And so is gold, right? Gold is proof of molecules, if you want. And it's very difficult to produce gold molecules out of anything, just as it's very difficult to produce Bitcoin without energy, right? And so I think that's the first very, very important property that good assets have to have that eventually will evolve and have a very long life. And in gold case, we have 5,000 years. In Bitcoin, we have, I guess it's soon to be 17 years. Is that right? Hopefully, 16, 17, something like that. So it's a teenager now, right? Not like a millennium, like 1,000-year-old monster. And so I think the very important thing here is to the extent that this holds true, right? That Bitcoin is based in truth. It will serve society and it will serve humanity, and we've seen what can go wrong, right? And I think that by no means, I mean, Bitcoin is more transparent, right? But it's not immune to this, because fractional reserve is a concept that is an inherently human concept, just the way humans are not perfect, right? That way we have this idea that we have something and we're greedy, we try to make more out of it, and maybe, you know, hope that the future will be great, and so we start to do this fractional reserve thing, and I think Bitcoin is not necessarily, we often say it's immune to this, right, and we hope it is, in fact, right, but I think time will tell if that is really true, or if some of these, you know, layer 2s, which you can argue Wall Street is really another layer 2 as well to Bitcoin in a way, are gonna, so to say, paper over Bitcoin as well, and it becomes the system that in the end, you know, all the OGs are gone, some institutions and regulators are taking a hold on it, and it will go down a very similar path than gold. And I think just as much as like there is now a movement that tries to bring gold back, right, and says, hey, let's, you know, do fully allocated gold on the blockchain, I think this is also a very important concept to keep in mind in Bitcoin, not to start with this in the first place, and for the community to continuously engage in this. And in a way, it's the same battle that, you know, both communities are fighting. So when there was this famous duel, I guess, between Schiff and ZZ in Dubai, right, last week, I think it's foolish that the gold community and the Bitcoin community are fighting against each other. Instead, I think those two communities should really fight the same fight, right, which is sound money and not fractional reserves, and not allow that to happen to Bitcoin, and to get gold back from that. And I think that is the real, you know, the real pathway to prosperity.
Well, as we're running out of time here, I wanted to get each of your reactions to this big news we heard out of the US yesterday with the CFTC and specifically Commissioner Pham announcing this pilot program to let US regulated derivative exchanges use Bitcoin itself as a form of...
Mostly the regulators, they, you know, in a lot of ways move at a glacial pace. But, you know, when you get these, I mean, to her credit, you know, Acting Commissioner Pham is, or Chair Pham is not one of those, and is actually moving fast and getting a lot of shit done, which is fantastic. Leaning into innovation, you know, not just crypto, but that's of course a big piece of it, but more broadly, which is fantastic. So I think, you know, the more of these steps that we can see, and the more points on the board, it's awesome. I mean, it just, you know, increases the you know, the value utility of being able to trade and you know, hold these assets.
Yeah, I agree. I think like, be it in like DeFi or CeFi, right? Like having the asset as collateral actually unlocks a lot of utility of that asset itself, right? I think the first stage is that, okay, how do you get people to understand about Bitcoin? How do you get people to start trading Bitcoin or holding Bitcoin? I think we're already past that stage, right? We're still far from like mass adoption, but we are somehow there, right? I think the next stage is how can we improve the efficiency of like holding Bitcoin? How can we do more with that? I think this is what like the whole industry should go through. And I think all different regulators will have different flavor, they have different pace in doing the regulations. But I think overall, we're definitely seeing more of these like Bitcoin-friendly like regulations that will unlock like the next phase of Bitcoin in terms of adoption.
If you would have to put Bitcoin and you know, dollar on a scale, probably Bitcoin is in one extreme and dollar in the other, such as that Bitcoin is probably the most performing asset, and continuously probably going to be it as adoption continues. And dollar, you know what you have, right? It's like always one, and somewhere in the middle is probably gold. So I think it's amazing. I think it's a sign that the adoption continues, and I think Bitcoin is a great collateral, and I think it probably will become an even better collateral in the future. And in the meanwhile, having a lot of margin loans, especially as a Bitcoin miner, actually, back in that, I moved some of those over to be now backed by gold, by XAUT, actually, not a joke. Because, of course, like when Bitcoin comes down, right, then you get all these margin calls, and that's pretty sad, especially if you need to sell, because you know you really don't want to sell, right?
All righty, gents. Well, thank you very much. That's all we have time for, but please join me in thanking our panel.
Fantastic. Once again, give a big hand to The floor is yours.
Good afternoon, everyone. Who's feeling a little bit, who has jet lag kicking in right now? Raise your hand. No one. John, you're the only one. Well, we've saved all of our best content for last, so we're going to be on a run here. So let's get that blood pumping, okay? So, John, welcome.
Thank you for having me.
Let's get started by you sharing a little bit of background on who you are. You know, I have to say, I've been in Bitcoin a long time. I'm new to the traditional capital markets, and I'm kind of always blown away by how big and how legit traditional finance is versus Bitcoin and crypto. So talk to us a little bit about how the old school market works and your background.
Sure, I guess you could call it old school. I grew up in Chicago in the Midwest. I went to school out east. And right out of undergrad, I went into one of these big training programs on Wall Street with Merrill Lynch. And at the time, probably the hottest market was high yield or junk bonds. And my first project that I worked on was I helped finance the Taj Mahal for President Trump. That was our first deal where we took clients with helicopters from the World Financial Center and took them over with prospectuses in hand down to Atlantic City, and we sold the first $1 billion high yield deal in the air, basically.
Nice.
And so that was my first taste right out of college, just a few months from being playing football and being in a fraternity, and my view to Wall Street, and that's what they did back then. They threw you in, and
it's a nice sales pitch to get put on a helicopter to close the deal.
Yes, and ironically, there were a lot of Japanese investors at that time in the high yield market, and so they'd be Kaduna-san, I'd take 30 million.
Nice.
Kaduna-san, I'd take 40 million, and we sold most of the deal, and then I went on to be the CEO of a Japanese bank afterwards. So my trajectory on Wall Street, which is more traditional or old school, as some of the Bitcoin people would say, is I went on, and I was very fortunate to be able to see or predict where the ball would be, and we're in more of what I call like the hot markets. Mortgages became very, very, very trendy back then. I got involved in those a lot, and then derivatives as we know them, and then I went from Merrill Lynch, where I started, to a firm called ABN AMRO, a Dutch bank, where I worked my way up to running all of fixed income in Americas. And we got bought out by Royal Bank of Scotland in the largest bank merger in the world. And I had to stay for a year. And then I went on to a firm called Mizuho, which was at one point the largest bank in the world, a Japanese bank. And I was CEO of Americas for about 8 or so years, and finally went to one of my clients, a traditional asset manager, where I am today, to run it, called Calamos Investments. And we have just over 47 billion in assets, and John, my founder, was one of the founders of the convertible market. We're still heavily involved in convertibles. We're the largest buyer in the United States, second, I think, in the world. And but we've become a lot more, we've looked at our roots, which is innovation, but we're also very good risk managers. So what we've done is we've created a lot of products in what we think is something in the future. Bitcoin is definitely something that we've looked at.
So $47 billion is, you've built a behemoth. Talk to us about Calamos. Like, what does the business look like? How do you all make y'all's money?
So we have one of our flagship funds. It's what we call a market neutral fund. And it's convertible arbitrage, hedged equities, and it's got some a merger arb as well. And it basically delivers approximately SOFR plus 350. So if market's up, using interval fund wrapper. So we did a private credit, private equity, and a hedge fund that we launched all in the last, call it 16, 18 months.
Wow.
So we're continuing. I know I don't want to say the word that everybody says, democratized product, because with our private equity, you invest the minute you put your money in. You don't have to wait 2-3 years for drawdowns. There's no K1s, and there's quarterly liquidity of 5%, up to 5% for the entire fund. So mom and pop, for as little as $2,500, can invest side by side with the likes of Carlyle and BlackRock and Blackstone and Apollo and all the funds that we draw upon and co-invest with. So it's truly revolutionary that we're actually bringing this type of stuff to the product. And then there's Bitcoin.
Yeah, so give us a little bit of the background on how you got into Bitcoin. I mean, I feel like the story you just shared, the career trajectory you've been on, the business you've built, you've kind of touched all the different parts of TradFi that are out there. How'd you get into Bitcoin?
It was always interesting, and we always looked at it, and I had a group that was following it. I got to tell you, for a long time, but June 28th, 2015, I was with my family in Greece, and it was during the time of the crisis, and the Greek government put capital controls in place. So this is not a third world country. This is an advanced country in the Western world where at the time, no matter how much money you had in the banks, you could only take a maximum of 60 euros out a day.
Wow.
You could have millions of dollars, and that's when it triggered. I said, this is terrible. Luckily, I didn't have a lot of money invested in Greece, even though I'm of Greek heritage. But for a government to tell you that you can't touch your money or a bank to say, no, I'm sorry. So, they wanted to prevent the runs on the banks and stuff. And then I realized as Bitcoin came out and the use of Bitcoin and the fact that it's really the true capitalistic product where you have complete control of your money. And I thought that was right then and then. That's fantastic. People don't think it could happen till it happens. That was just 10 years ago, right? It lasted to 2019. So, I mean, it was a while. Now, it got less and less, and then they were able to take more, but full controls were not off till 2019. So that really opened up my eyes and said, okay, we have to look at Bitcoin. Now, you look at Bitcoin, the last 12 years, everybody here knows, best performing asset, annualized, what, 109% or something like that, right? Last 12 years. But the volatility is crazy.
Yep.
And especially for the market that we're in, which most of our products is for the advisory market, for retailers, as we call it, right? So we wholesale our products, and they're out on Morgan Stanley, Goldman Sachs, JP Morgan's platforms, Merrill Lynch's, we sell to RIAs as well, the LPLs of the world, and they sell our funds. And recently, the 20-odd ETFs that we've launched in the last 18 months. So that's kind of, how
you found
started
Bitcoin.
doing this.
Yeah.
And
how did you start making money on Bitcoin? What was the first deal that you all did, or?
So we looked at the opportunity and we said, there's got to be a better way using our management and the way we have got great options traders because of our risk management and our convertible DNA. It wasn't until January of this year that when the current administration in the United States won the elections, that the SEC started loosening up. So there was finally a Bitcoin index that we helped create with the Chicago Board of Options Exchange. And then, the market, we were able to actually launch in January the first 100% protected Bitcoin ETF. And how that works is that the day of launch, we buy treasury discounts out for a year. We buy options on that day on the Bitcoin index. And then we sell out on money calls as well in order to do that. And it protects you with a particular cap rate. So you don't get all the upside. On 100%, you get, at the time we launched the first time, it was 11.85% of the upside. But if it falls, like it's done many times before, you don't lose any money if you keep it for a year.
Yep.
And then we launched a 90%, which protected, so you can lose up to 10%. Of course, the upside, the cap rate was higher. And then 80%, which went up to 50% in terms of your return the first year.
And you're primarily selling these products through advisors?
Correct. And they're ETFs, they're liquid, and they trade. And there's a lot of times, and it's proven, and if you look at them, they trade so much better than the actual Bitcoin. And you can get in and out of these anytime you want as well. You don't have to keep them for a year. Even when Bitcoin was really, really far down, 20, 30%, some of our products were down only 7%.
Well, we're fixing the mic real quick. 1 second. Okay.
Sorry. Can you hear me now?
Yeah, great.
Okay.
Cool.
Thank you.
So, as long as I've been in Bitcoin, every year we've always liked to say the institutions are coming, the institutions are coming. It does feel like the past 2 years, 3 years, the institutions have started to show up. What do you think has taken so long for this to happen? What do you think are the biggest hurdles that are still facing bringing in more institutional capital?
Well, this is why I think we're in the infancy of Bitcoin. Because although I'm not a huge component of regulations, you do need some regulations in order for people to feel comfortable about it. And I think the current product, the 80% the volatility is more equal, the 90% volatility is more equal to gold, but the upside is much, much, much better than gold or some of the commodities. And the 80% is very, very similar to the volatility of equities. And, you know, getting 45% to 50% of the upside of the annualized return of Bitcoin versus the S&P that averages what? Close to 10% on average, is a lot more returns, a lot less volatility, and now the institutions are looking to increase their allocations because of that. Because now you could add more than maybe 1 or 2% of your portfolio to maybe 5 or even as high as 10%, because you can replace it with traditional equities or commodities or just cash, because you don't have to worry about the volatility that going long just straight Bitcoin does.
Where do you think we are in terms of institutions coming in? Like, if you put a percentage on, you know, how much penetration we have into the institutional capital market, what would you place it at?
Let's just start for the whole world. I think the numbers are 4% of the population in the world has exposure to Bitcoin. My market, the majority of what we do institutional too, but in terms of the advisor market, is a $93 trillion market, right? So if you look at the, what's the cap rate of Bitcoin, 1.8?
Yep.
Somewhere around there, right? So if we could increase just by 2%,
wow,
just in our market, given the products that we have, then now people are more interested in buying, and it dips their toes into Bitcoin. It'll double the market cap of Bitcoin as it is. And then we're not even talking about institutions yet. So the institution, I don't know the exact numbers of how much they have, but it's minimal. And they will start coming, they are coming, we're having those conversations. Just like the conversations I've had at the beginning of the year with every major Wall Street bank, putting it on their platform, because that's what we do. And at first they're like, nah, it's got the word Bitcoin on it. I said, but we don't even own Bitcoin. Just options and index, and it's traded. You know, it points to Bitcoin, but it's not. No. Now, every one of them is putting on us on a list to get us on their platforms to sell it. Morgan Stanley's calling us and say, when can we, start talking, bring this on. So it's a different attitude. It's coming, and just the last 2 months, we've seen the volatility of Bitcoin actually makes our product even more valuable, because you can now risk manage it a lot better.
Yep. So educate me a little bit on the advisor distribution model. Like, if you look across like the advisors that are out there, what percentage of advisors are selling Bitcoin products? Like, are there certain places that still won't touch it at all? And how do you overcome those barriers? Like, how do you get greater distribution?
Look, I mean, they all have to, it goes all the way to the board level of the banks. I've talked to CEOs of some of the biggest banks in the world, and like I said, they're just starting to come around. I mean, everybody's heard, Jamie Dimon, what he said about Bitcoin a year ago versus what he's saying about Bitcoin today, and it's taking time, but it's happening for sure. The announcements, Citibank, everybody going to custody it. You can start to like margin against it, which is going to be huge. Because all these people that have these big positions in Bitcoin, and they can't use it for anything, no one wants to sell it. So to the extent that the big banks around the world will let you custody it and then margin against it, it's going to be a huge thing for everybody, for retail and for institutions. Now the retail world, how that works is we have wholesalers that go out and pitch the product to, let's call it the Morgan Stanleys of the world. And the ultimate thing is to get it on their platform. Then the next step is to get an analyst to cover your particular fund or ETF. And then the grand slam is, can you get it in one of their models? So if somebody has a particular model and there's like a 2% allocation, and that we do have some of our funds, like our market neutral, in these models, and quite frankly, they sell themselves because people put money in blind and they model it up, and so that's what really makes
It's like passive flows.
Exactly. So now you just leverage. You have thousands of people selling your products, not just your internal, call it 60 to 100 sales force.
Wow. So what are the products that you're seeing people sell? Like, where's the money flowing in, and where do you see where's the hot money in the market?
Well, look, there's a lot of people that are looking for income, and we're providing certain ETFs that give you income, but there's a lot of people that are looking at what is this, Bitcoin that people are talking about. What are these stable coins? And we're seeing a ton of money flow into that. And it's, even though they take a drop and stuff, it's been great buying opportunities for that. So I think there's going to be a time where a lot of the big guys that have had big positions want to, take some money off the table. And that's what we're seeing right now. But there's, the fact that it's the new digital gold and the scarcity of it, that there is a finite number. There's just too much of it out there. As I've said before, the bus has left the terminal. It's not coming back. It's here. Look at your conferences here, Vegas. People are very interested. It's going to take a little time to really play out, but when it does, it's going to be huge.
So, John, I think the way we first met is you're a buyer of MicroStrategy converts.
Yes.
Made some good money on MicroStrategy converts. What's your view of the Bitcoin treasury world? Where as a traditional TradFi investor, do you see the opportunity as an investor on treasury companies? I'm asking this question selfishly because we have a Bitcoin treasury company.
Sure.
So yeah, what's your view on it?
Well, look, I think that there's going to be, like everything else, there's going to be winners and losers in those companies. I mean, I think that people that have a head start, like Michael, I think Michael's a warrior, and it's going to be really tough to bring him down, almost impossible, if I had to say. I think, unfortunately, that won't be the case for everybody.
Yep.
But all these companies, you need the miners, you need the treasuries, you need all of that for the ecosystem, and they're going to survive. But like everything else, there's also a lot of really levered product that is being sold out there that people need to be careful about because it is volatile, and not all products are managed properly in terms of risk managed properly. So you have to really understand what you're buying. So I do think there's rooms for many treasuries. Like I said, we are, I don't know where we stand today, but we had been the biggest or second biggest buyer of Michael's convertibles.
So Michael's kind of moved from the convert model to this digital credit concept. Are y'all fitting that into your product mix?
We're looking at that. Quite frankly, the converts really fit what we do as a firm. It fed a lot of our other funds, specifically our market neutral fund. Because it's so big, we buy almost every convertible that comes out. Unless we don't think it's money good, we will buy every convertible, get an allocation, and we usually get great allocations because we are the biggest convertible buyers, because it feeds into our market neutral. And if we don't like the name, we'll just short it on the other side. So, but we need the convertibles in order to feed the machine that we're building. So, like I said, unless we don't think they're money good, we buy. And that's been pretty much, you know.
All right, so note to self, I need to sell you some of my converts.
We will be there.
Okay, so how do you see Bitcoin kind of changing the landscape for the asset management business? Like, you know, when you talk to some of these legacy firms, how are they entering into the market?
Look, I think that we're ahead of the curve for some of the traditional money managers. We've been around almost 50 years, longer than BlackRock, Blackstone, and all those. But so we're a lot more traditional, long-only growth type investors. How it's going to change, everybody will eventually participate in it, just like every portfolio around the world is going to have an allocation of Bitcoin in the future, or they will be left out. And it's funny because we're bopping back and forth from the other conference today, and some of the biggest titans of the industry, old school, said the same thing this morning. They finally realized that they have to be, part of the allocation needs to be in Bitcoin.
So, you know, I think this might be my last question for you, but, you know, when Bitcoin got started, you know, Chancellor on the brink of second bailout, you know, Bitcoin has this cypherpunk, free market, permissionless ethos and a challenge to Wall Street. And, you know, I feel like there's a lot of Bitcoiners that get uncomfortable when we start talking about Wall Street adopting Bitcoin. But I've been a long-time believer that Wall Street loves free markets. They love making money. And once they get a taste of the money to be made in Bitcoin, it's hard to not want to come back to the Bitcoin trough. You know, do you see Bitcoin infecting money managers on Wall Street? Do you see investors that start investing capital here, grow their positions, and grow their conviction?
Do not underestimate Wall Street. And Wall Street's been a power since the beginning. And it does still have a lot of the great minds in finance, even though the young entrepreneurs in Bitcoin are amazing. But look at where the market is. 4% of the world.
Yep.
When Wall Street jumps in, institutionalizes it, you're going to see it take off even bigger. So Wall Street will take it and run with it, and that's when you're going to see it really, really take off. And so we're just the beginning, the traditional Wall Street firms, how I grew up in the 80s, that have you know, taken it under their wing. Everybody's going to start to do that. You're going to see this thing take off because Wall Street is very, very powerful. And I think that's going to be the wave that will really help the product go to the next level.
So I'm going to put you on the spot. The year is 2030. What's the price of one Bitcoin?
2030, I can see it $1 million a coin.
$1 million of Bitcoin, people. There you have it, on the record. All right, John, thank you very much.
Thank you.
Fantastic. Once again, give a big hand to our fantastic panelists. This was really...
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. We are winding down the day 2 of Bitcoin MENA 2025. I am Frank Corva, Bitcoin journalist, joined to my left by Alejandro de la Torre, CEO of Demand Pool, as well as Aaron von Weerdum, former editor-in-chief at Bitcoin Magazine. There is no time to waste, Alejandro. I need to know what is going on with Demand Pool. We had some big news recently. Tell us what's going on here.
Correct, and Bitcoin Magazine was the one to cover that one. We are live. The first Strand B2 pool is here. You can build your own block. You're secure. You're efficient. Go up to Demand Work and sign up.
Sign up. Who's signing up? Average home miner? Who are we looking to attract here?
Look, we're looking to change the industry as a whole. And who is that? Who has the hash rate? The big guys. So we're looking at the big guys. So if you're a mid-sized to large miner, we're here for you.
Okay, sounds good. Aaron, maybe a little bit of context for those who might be new to Bitcoin. Why is it so important to diversify, to spread this hash rate out?
Well, the main benefit is that usually a mining pool selects which transactions go into a block, right? And with something like Strident V2, the hashers themselves, so the people that are doing the proof of work, they can themselves include whatever transactions they want to include in a block, right? So you decentralize mining in that sense. Alejandro, I do think with so one of the things you announced last week is you got some sort of licensing, right? Yes, we're SOC 2 Type 2 compliant. Correct. And that means? That means that we have serious and industry-wide controls of our security, of our data, which is something necessary for miners who are businesses. Okay, so if you want to join who can join your pool? Can anyone join? Yeah, anyone can join. You have to sign up. We do KYB. That's a process that we want to take because a lot of these miners require it.
So to be a properly sort of above board business, so to attract a decent amount of the hash rate, we're above board, you're buttoned up, and you're doing this because we're looking to maybe draw away from which pools? Where do you see some of the hash rate coming to demand from?
The top pools. So we're building a pool that is industry first in the sense of Strident V2, so it builds your own block, but we're secure. We're focusing on all the right structure that these large miners require. And ultimately, again, what I said earlier is still in play. We feel that the big hash rate is where we need to be at. We need to decentralize Bitcoin mining. And where's the hash rate? With the big guys.
It's with the big guys, and the danger there is what? So the big guys have a lot of the hash rate. We could see things like what? Pressure to have OFAC compliant blocks. What is it? What is the inherent danger here?
The inherent danger is that Bitcoin should be decentralized.
Yeah.
I mean, that's the whole point. That's why we're all here. And right now, it's all centralized in just a few hands. Like, I would say around 5 guys in this whole entire planet control the Bitcoin block. That's incredibly dangerous. It's incredibly against what Bitcoin is.
We're not against. We don't like that. Speaking of a big guy, we have a big guy headed to the Falcon stage right now. The one and only Changpeng CZ, Changpeng Zhao, the founder of Binance. He'll be sitting down for a fireside chat on the Falcon stage. So we're headed over there. We'll be right back here at the live desk after this.
Fireside chat. I'm so excited to welcome on the stage Brandon Green, CEO at BTC Inc. He'll be joined today by one and only CZ, founder of Binance and Giggle Academy. Give him a warm welcome. The floor is yours.
Wow, CZ. Everyone give it up for CZ. Isn't he amazing?
Thank you.
Well, we were chatting backstage about how we wanted to kick things off, and I think we would be remiss if not to talk about the gold bar that you presented Peter Schiff just a few days ago.
Oh, I have another one.
Oh, please. Tell me about how the debate went down and just that moment of kind of getting him on that. That was fantastic.
Sure. Actually, I planned 2 tricks for him. I think the first trick I planned was to he's launching a tokenized gold. So I was going to ask him about it. I'm host, right? So I was going to say, look, I'm going to generously offer you time to talk about your new project. And then the more he talks about the tokenized gold, the more he has to talk about the benefits of blockchain. And then I would just repeat to him, so you like blockchain better than the gold. That part didn't come out quite strong enough. I tried that, didn't quite come out. And then I also prepared the gold. I figured he would do most, he likes to talk, right? He's a nice guy. I figured as a host, I would let him do most of the talking. I thought the gold bar might work, and the internet only cut that part out, which is great. So it's like a 2-minute thing, and even viral, so it's pretty good. Yeah, it's fun, yeah.
That was fun, that was fun. Well, so CZ, you've been on quite the journey over the past 18 months, 24 months.
Yeah.
Walk us through really from the beginning. What was it like being the #1 highest profile target of Operation Choke Point 2.0?
Well, I think there's really no choice. We have been operating the largest crypto exchange for 7-8 years now. And then as the largest platform, you're the first one every regulator look at when they look at crypto. And as the largest centralized platform, so we're always there. We got all the regulatory warnings 5 years ago, and then we're the most scrutinized. So we always have to be the first to deal with regulators and even prosecutors. And then there's no precedent, right? So there's nobody else to solve this problem. So we're always out there. So there's quite a bit of an unknown. But my view on life is, life is a simulation. There's a lot of challenges that are programmed in front of you. You just have to go through them. There's no way to avoid them. There are some parts, that are chance, randomness, but you just have to deal with them. So for me, I adopt a pretty simple approach. Whatever challenges they are, we just try to solve it. I honestly didn't think I would go to jail in the U.S. because no one went to jail for a single violation of a Banking Secrecy Act. I thought perhaps maybe 6 months home confinement, which would be fine for me. As long as there's internet, I can deal with it. But in prison, there wasn't internet, so that was a bit tricky.
I mean, yeah, no kidding. You're one of the few Bitcoiners who have really stuck their neck out in that way for the industry, and you've had to go to jail for it. What was that experience like? I mean, how did you feel?
Well, actually, it was mostly the uncertainty that was really scary. I don't know if they were going to slap on another charge to keep me there forever. But for me, the decision was pretty simple. I thought, look, if I don't go, they threatened, or they at least said they would potentially charge a lot of people. It would not be good for Binance. It would not be good for our co-founders. It would not be good for our employees. It would not be good for the BNB holders. It would not be good for anybody in the crypto industry. So I thought, look, it's a banking secrecy violation. It's a failure to register. It's a serious charge, but no one went to jail for it. I thought I would just go and deal with it, and I'll step down CEO. That was also a difficult part, but I've been CEO for 7 years at that point, so I'm happy to actually step down. And if I quit myself, people will say, look, this guy ran out of stamina, right? So having them force me to step down is like I can retire and let other people carry on. So I didn't care. I didn't think too much about myself, but I thought it was important. It was the right decision to do for everyone, basically, and myself included. So I just thought, I go and deal with it. And I didn't know that, a year later, U.S. is going to be this pro-crypto. So that part I did not expect. But, things change.
Yeah, absolutely. And tell me then, I guess tell everyone, what was it like the moment you received the pardon from President Trump? What was your first reaction? What was the first thing you did?
Well, first of all, that was an emotional thing to have happen. I think first of all, it's the feeling of relief and justice. It's like, okay, finally, it actually completely changed my perception of the United States as well, because it just feels the U.S. claims to be the freedom, democracy, etc., and justice and fairness. I think when that happened, I just felt a sense of relief that U.S. is now a fair, just country again, at least from my perspective. So I just felt, look, and then I want to help make the U.S. capital of crypto again. So there's more work to do.
Yeah. Well, and the U.S. it's one of many governments, right? And I think what we've seen kind of on your path post this whole situation is you've been talking to a lot of governments, right, about Bitcoin. How have those conversations gone? And maybe even tell us, you grew up on a farm in China. You're a rugged entrepreneur. Now you're talking to governments around the world about Bitcoin. What does it feel like to even just be in those conversations?
Sure. I'll talk about the previous part first, which is, even maybe 3-4 years ago when I talked with governments, the question was what and why, right? What is crypto and why should we adopt it? But now when I talk to governments, the question is how, right? So they're no longer asking the first two questions, at least the guys, the people I'm talking to. If a government is still asking what and why, I usually don't spend time talking to them. I just let them figure it out. And they do. So now it's all about how do we regulate crypto? What are the good regulations? What are the bad ones? How do we regulate exchanges? How do we protect consumers? How do we regulate stable coins? How do we set up a national crypto reserve? How do we issue how do we do tokenization? Issue national bonds, tokenize oil, other reserves, etc. So the question really now is how. And when it comes to how, I think they're way more smarter people than me. But I somehow have this hat that I'm the crypto guy, and everyone wants to talk to me. So, but for me, it's a very meaningful thing to do. Actually, I'm freed up from managing day-to-day operations of Binance.com, etc. So that part of work is somebody else taking care of it. And I now just go to government to advise them on how to regulate crypto, which I think actually probably has more impact to people, more positive impact to people around the world than if I was still working at Binance.com. So, and then to your first question, I believe in simulation theory. So if we're not in a simulation, there's no way I can grow up from a kid in a village with no running water, no electricity, till now. They say I'm a rich guy and then build a successful business, talking with governments, advising them on policies about this industry. So, but for me, I just try to do my part. Whichever situation is in front of me, I just got to do my best.
Would kids CZ on that farm believe that you're in the position you're in now if you had told him all the way back then?
No, absolutely not. There's just absolutely no way you can imagine this stuff.
Interesting. Well, so you've been talking to governments. You've also been kind of one of the most prolific entrepreneurs in the whole industry, right? You took a step back from Binance, like you said. You've been doing a lot of advocacy to governments. Do you have like a next chapter? Do you have something that you're really planning to make your project next?
Well, Giggle Academy is kind of my pet project right now. It's a free education platform for people who don't know it. But for me, when I was deciding to do Giggle Academy, I thought about what I would do next. There's a few questions I asked myself. I don't really care too much about fame or legacy. I just pleaded guilty to a federal crime, and I was going to deal with all of these issues. So, but for me, reputation and integrity is different. Is important. There's no fraud. No users got hurt. I've never hurt anybody. So that's my reputation. Fame and legacy, they're not so important to me. I didn't care too much about money. People say I have a lot of money, but I don't spend a lot. I still buy polo shirts. I don't know. This is Amazon basic pants, etc. So I don't spend a lot of money. And then power doesn't matter to me either. I just stepped down as Binance CEO. So what do I want to do? What do I want? So I thought really hard about it. I just want that when I'm really old and when I look back at my life, I want to be able to tell myself I did my best. That means that if I have high abilities, I need to do more. If I have little abilities, I'll just contribute a little bit less. But I think what doesn't matter the magnitude, we just got to do our best and leave a little bit of a positive contribution to this world that we came into. That's all I want to do. And then I thought really hard about it. I think education, a free education platform that's completely digitized, gamified, and individualized, and pushing to people who don't have education, is probably the biggest positive impact I can do. So that's why I started that project. I'm very happy every time I work on that project. Right now, Giggle Academy reaches about 90,000 kids. We only been working for about a year.
Wow.
And there's still quite a lot of improvements we need to add to the product in terms of features, etc., but also content. So I'll continue to work on that. But I'm also helping with Easy Labs investments. We do investments in blockchain, AI, biotech. I'm helping with mentoring many projects in our space, BNB chain projects, other AI projects, etc. So I'm more of like a coaching type of role. So that's kind of what I do, and I enjoy it.
That's amazing. That's amazing. Truly, I mean, if more people could dedicate their lives to education and helping the world, that's an amazing thing. I think that's also one of the things about Bitcoin, right? We like to say, fix the money, fix the world.
Yep.
And what's been amazing is for so many people, they've fixed their money, right? They're Bitcoiners now. And now they've moved on to how can I fix the world around me? And I think it's amazing to see you do that, and you know, would encourage more Bitcoin OGs and more Bitcoiners around the world to really focus on that and really, you know, try to lift up the world around us.
Absolutely, yeah. So I think I see a lot of crypto people do that as well. Many people have become financially free, and they're all looking for the next thing. And this is also sort of evident on Giggle Academy. I've only spent maybe about $2, $3 million on it, and then people want to donate. For the longest time, I didn't want to take donations because I want to build a platform first, and I want to make sure we have a product market fit. I don't want to take donations and then waste them and then like cancel the project. It would not be good. And then finally, like we opened donations for like a month or so. We got $11 million of US dollars worth of donations. So actually, the project has more money than I spent. So I think there's a lot of people who are contributing to good causes.
Love it. That's amazing.
Yeah.
That's amazing. Yeah, absolutely. Give it up. So let's talk about Bitcoin for a second.
Sure.
There's been a lot of things happening in the market as it pertains to Bitcoin ETFs getting launched, Bitcoin treasury companies coming out, institutions getting involved, Bitcoin strategic reserves getting launched. What do you think about what this adoption cycle has looked like? Are you surprised by it, or are you excited by it?
I'm not super surprised, but this cycle is a little bit different than previous cycles. This cycle, as you said, all of those things are institutional adoption, right? So they're all like Wall Street, etc. So we have this cycle. We have seen more institutions come in than I would say probably than previously. Previous cycles are all mostly retail. This cycle, the retail rushing in, we have not seen that yet. But this is still very good for crypto, right? So now we're kind of bridging the gap between crypto just being a grassroots movement to now Wall Street really participating. And Wall Street is the largest institution market in the world. US is. US is the largest institution market. But now we're seeing that spill over to other countries as well. So many funds in this country buy the IBIT ETFs, etc. So now they all have Bitcoin exposure. Michael Saylor, who I've just talked to, is speaking behind this session, and he's selling everyone Bitcoin basically, right?
Yeah.
And he's doing a fantastic job at it. So we're seeing a lot more adoption. I think that's fantastic. Yeah.
Well, let me put you on the spot. We're in December.
Yeah.
This is supposed to be, in the 4-year cycle theory, this is supposed to be, 4, right? This is supposed to be the year of the massive bull market. We've been relatively flat. Is the 4-year cycle dead, or is it changing? What do you think?
So, in a sense, actually, it would be better if the 4-year cycle is dead. It's better if we don't follow the 4-year cycles today. Because in the 4-year cycles, usually this December will be the peak. But if we follow the 4-year cycles, then the winter will probably, the crypto winter will be the next year or 2 years, etc. But right now, I think there's another force at play, which is President Trump. Which actually, on my shoes, there's President Trump. You can see it on the side.
Yeah, great shoes.
So I think President Trump is using stock market as a benchmark. So there's rate cuts coming. There's quantitative easing, which will basically pump the stock market, really.
We've been in macro headwinds since 2022, right? This is the first time that we're starting to see macro turn dovish.
Yeah. So I think when the stock markets do well, people have cash. People diversify their holdings, and they participate in crypto as well. We've seen that, and crypto is much smaller than the stock market today. So crypto is kind of tethered. So I think, I'm not sure, don't quote me on this, but I think that force will be quite strong. So that force may be strong enough to offset the 4-year cycle. Who knows? Yeah.
So you're saying next year bull market?
We may be seeing a super cycle. Wow. So we'll see. Yeah. I'm not sure. Yeah.
We'll see.
Yeah.
So I want to ask you as well, what surprised you most about Bitcoin's adoption path over the past decade? I mean, you've been in here over a decade, right?
Yeah.
You've seen it be adopted in a lot of different ways. You've seen narratives, grow and crash, right? What has surprised you most about the path that Bitcoin has taken?
Yeah, it's very surprising, actually. You can never predict the adoption path, to be honest, at all. Bitcoin was first taught, the Bitcoin white papers like electronic cash payment system, right? And everyone was doing payments. To be honest, even today, very few people use Bitcoin for payments, right? So that's not really adopted.
Do you think that trend will change?
I think so. I think so. And I think, well, maybe not just Bitcoin, also crypto payments. I think, well, I think on payment side, first of all, there will be integration between the crypto payments versus the traditional payment rails, like now the crypto cards, right? So the Binance card, you know, the user swipe and merchants gets fiat, user pay in crypto. And then this way, both sides can grow. The user, the demand side, the user side can grow quite a bit. And then once the user side is large enough, then the payment side will accept crypto directly. The second is the stable coins, right? People can pay in stable coins instead of Bitcoin. A lot of people have in their minds that, you know, spending Bitcoin is bad because then you lose the upside. But you could, whatever money you have left, you can use that to buy Bitcoin that you just spent. But anyway, and then I think in the future is direct crypto payments when everyone has more adoption on crypto. So payments is, you know, was expected to happen. ICOs, I didn't see that at the beginning of 2017, but mid-2017 was all the rage. We did an ICO. By today's standards, I think we have a successful project. I didn't expect NFTs. I didn't expect, like, you know, the DeFi summer. All of these things are kind of surprises. But I think, and I did not expect ETFs.
Really?
Yeah, so you just couldn't see that before it happens. Because from my perspective, I was being prosecuted for pushing crypto, right? I was like, there's no way the ETF will get approved. So again, everybody's perspective is a little bit different. Yeah.
What do you make of that, right? At the same time that you're being prosecuted for, you know, creating an exchange to buy Bitcoin,
Yeah.
The legacy financial system is approving products to buy Bitcoin. You know, like, how do you square that?
Well, again, this is my personal opinion. It feels like, you know, they want to push down what the grassroots movement is, and they want to institutionalize it. But Bitcoin itself, today, you know, most of the holders are still retail holders, and it is an international movement. So, you know, I think we welcome the institutional participation, but you can't remove Bitcoin from the rest of the grassroots movement. Yeah.
Yeah. No, absolutely.
Yeah.
Well, so, you know, we got about a minute left, and I want to make sure, you mentioned earlier, talking about legacy, that you don't think about it too much, but I want to push you on it. You know, assuming that you're not going to go back to Binance, which doesn't sound like you are, what do you want your legacy in Bitcoin and in this industry to be?
I think I want to be seen. Well, I am the crypto sales guy, so I'm helping with the crypto adoption all around the world. Be it part of Binance or outside of Binance, I'm continuing to do that. And I think I'm actually making more impact now because I'm not running a platform anymore. So I'm just a shareholder there. So people actually take my advice more openly because I'm supposed to be more neutral now. At least I'm seen as more neutral. But I'm a crypto diehard, right? So I always push crypto adoption. And I think that's pretty much it. I want to be remembered as the guy who helped to increase crypto adoption.
Love it. Last question before we finish. Sure. Who's the bigger Bitcoin bull, you or Michael Saylor?
I think Bitcoin-wise is Michael. I think, you know, he's very focused on Bitcoin, whereas I'm more of a multiple. So I think Bitcoin itself is great. It's the global reserve currency in crypto and probably in the world soon. We can see that. But the Bitcoin, given it's the most decentralized cryptocurrency, etc., and the highest market cap. But Bitcoin's rate of innovation is necessarily slower than some of the other newer projects, smaller teams, etc. So I'm a guy who encourages innovation, and I think all of those innovations will help Bitcoin. They don't take away from Bitcoin. Bitcoin can copy many of the innovations, right? So Bitcoin ordinals can copy the NFTs. Well, NFTs kind of went away. Well, not went away, much smaller now. But Bitcoin can reverse copy many of those innovations. But if you want to innovate on Bitcoin alone, it's hard. You have to fork Bitcoin all the time, which creates a lot of other problems in the industry. So I'm more of a founder-friendly, innovator-friendly person. I want to help more people innovate. And we don't need, we shouldn't just have one blockchain. We should have multiple blockchains. And I think when the technology matures, like 10, 20, 30 years later, we can have a few blockchains. But today, for the amount of innovation we're looking for, the more innovations, the more blockchains we have, the better.
So to maybe put it in another way, invest in innovation, measure the success in Bitcoin?
Pretty much. So if you can outrun Bitcoin, that's true success. Otherwise, you should buy Bitcoin.
That's amazing. Well, everyone, give it up for CZ.
Thank you, guys. Thank you.
Thank you so much.
Thank you so much. Thank you. Sure.
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. We are here winding down day 2 of Bitcoin MENA 2025. I'm Frank Corva, Bitcoin journalist, joined by none other than the man himself, David Bailey, the CEO of Nakamoto, as well as Lauren Asmus, head of capital acquisition at UTXO. Let's dive right in, gentlemen. It's been quite an exciting conference. David, maybe some major takeaways from the conference for yourself.
Well, first off, I'm a little offended. CZ called himself the world's best Bitcoin salesman. I think that is absolute hogwash, and I would like to nominate myself for that position. No, I think the conference has been incredible. I spend most of my time in meeting rooms and trying to make things happen. This has been the most productive event that we've had. The quality of people that have been here, the amount of interest from this region. I really think Abu Dhabi is making a play to be a Bitcoin superpower of the world. And the amount of capital that's been here, the amount of people from the president's office, the royal family, it's pretty incredible. So let's see what happens after this event, but I hope we sold a shit ton of Bitcoin.
I think that is the case. We were talking a little bit off camera, Lauren.
It's been a long day.
It has been a long day. The region does seem primed to adopt Bitcoin, and it's been that way for a while. There's been a lot of education happening at the higher levels of government here, but it does seem like they're sort of ready to dive in. Some takeaways, if you don't mind.
I would agree with that. I think there's definitely this coalition of Bitcoin interest and education. We've had a lot of meetings lined up with investors who are very interested in having meaningful exposure to Bitcoin. And it's really, really exciting to see folks here in the region, but also I would say a big takeaway for me that I didn't really expect coming in was a lot of other folks coming in to this conference across Asia, across the US to learn more about Bitcoin, high quality investors. And so this region is really attracting top investors, top talent from all over the world. And it's great to see that coalesce here in Abu Dhabi.
Yeah, absolutely. Speaking of talent from around the world, we're going to hear from Michael Saylor in just a moment. He wouldn't be in this region likely if it wasn't for the groundwork that you've laid here, having this conference here, David. He had some big things to say about credit on Bitcoin and what this region can do with that. Does it just seem kind of surreal that we're at this point now where we're bringing Michael Saylor into the Middle East and he's meeting over here with families in the UAE and in Kuwait? Is it just kind of surreal to see with your own 2 eyes?
It is, and it's not. And, I don't want to put down any fighting words, but last year, we had Eric Trump speak.
Yep.
The president had just won the election, and you would have thought that would be like the #1 draw that you could have at an event. I think Michael Saylor might actually be a bigger draw this year to this conference than Eric was, which is pretty surprising. Saylor is an incredible salesman. He's been going to all the GCC countries. He's been selling them hard, and I think he's going to be able to get some things to happen here on the nation-state level that no one else really can.
Okay.
And so I'm bullish. I'm bullish on what he's going to do here. I'm bullish on what this region's going to do with Bitcoin more broadly. And I'm interested in see if he's going to announce anything new today during his speech.
Yep. Lauren, over to you. We've obviously seen a major shift in America. We embraced Bitcoin. We have our first Bitcoin president there. We were just talking about his son being here last year. How much was that a part of the conversation? Sort of maybe not the gauntlet being laid down, but maybe sort of a new precedent in the United States. Is the rest of the world paying attention? Is this region paying attention in particular?
Absolutely. The region's paying attention, and really Bitcoin's an institutional asset now, right? We're talking about this a little bit off camera. Is really coalescing around this first inning of institutional adoption of Bitcoin going to sovereign wealth funds, pension plans, endowments, foundations, large family offices. And really since, I would say, beginning of last year, since the election, there's really a true interest in having Bitcoin in portfolios and starting to get off of zero?
I'll just say that the America's forwardness on Bitcoin and crypto more broadly has been massively needle moving here. Like, this is a part of the world that very much cares about being aligned with U.S. interest, U.S. policy, and I've heard it again and again and again in almost every conversation I've had from people from the region, how impactful that was. And it actually, you kind of, I'm used to everything in Bitcoin lasting 2 seconds. So it's like, something happens and people forget about it the next day. It seems like the U.S.'s shift in policy is really a slow snowball. It seems like it's almost having more impact now than it was a year ago.
Immediately, right?
Right, and it almost feels like there's this inevitability that starts to intertwine itself with the gears of government when it's like, okay, well, this is what the U.S. wants, this is what we're going to do, and it has to metastasize. So it'll be very interesting to see if next year that's even more of an impact. But again, every conversation I've had, it's come up.
And in a way, is it a genuine excitement, or is it a need to sort of react because, again, we're sort of setting the pace in the U.S.?
It's both.
Okay.
It's both. Okay. And I think, Bitcoin is a very strange thing for certain people to talk about because it really zeroes in on some sensitivities of some major geopolitical questions and geopolitical topics. And so it's kind of like, okay, in some ways they want to tiptoe around it. But then at the same time, the message has been heard loud and clear. The president is the Bitcoin king, and America is the Bitcoin superpower of the world. And so if you want to get in line, this is what we got to do.
I think we're going to leave it right there. Perfectly put. We appreciate that, David. We are heading back to the Falcon stage to hear from the one and only Michael Saylor, keynote presentation. Keep it locked. We're with Michael. We're coming back to the live desk after this.
The author of the next words. Bitcoin is digital energy. It is superior to all forms of property. Any guesses? Of course. Yes, yes, and yes. So let's find out right now about digital capital, credit, money, and banking. I'm super excited to welcome on the stage, and please give him a very warm welcome, Michael Saylor, founder and executive chairman and strategy. Give him a big hand and be louder. Welcome, Michael, and the floor is yours.
So I've been all around the region this week. I started in Dubai and went to Bahrain and went to Kuwait. And of course, I'm ending in Abu Dhabi, the big end. This is the big end of the tour. I have had a chance to meet with 100 investors, regulators, sovereigns, banks, crypto enthusiasts, Bitcoin enthusiasts, and I thought I would share with you what I'm showing them and what I'm speaking about with them, and give you a sense of what we're proposing to the sovereign wealth fund, the hedge funds, the investment funds, the family offices, the banks, the traders, and those running the government. And very exciting. So without further ado, let's put my presentation up on stage. I'll start with the title, right? My topic today is digital capital, credit, money, and banking. And so let's start with the first topic, digital capital. What is digital capital? Bitcoin is digital capital. Gold is metallic capital. Real estate is property capital. S&P is equity capital. Why is Bitcoin digital capital? First of all, because Donald J. Trump is the Bitcoin president. Donald J. Trump says he is intent on making America the Bitcoin superpower, the crypto capital of the world, the leader in digital assets. And David Sachs, who works for him, in March of 2025, this year, said Bitcoin is special. Bitcoin is an asset without an issuer. It is the dominant digital commodity in the world. This administration designated Bitcoin as digital gold. And of course, it's not just the president, it's the vice president who I've met who said that. It's the Secretary of Treasury who I've met who has said that. It is the head of the SEC who I've met who has said that. It is the head of National Intelligence, Tulsi Gabbard, who I've met who said that. It's the head of Commerce, a Small Business Administration, Kelly Loeffler, who I've met, who said that. It's Bill Pulte, who runs the Federal Housing Administration and regulates $5 trillion or $6 trillion of home mortgages, who I've met, who said that. It's RFK, who not that long ago wanted the US government to buy 4 million Bitcoin, who I've met, who believes it. It's the incoming head of the CFTC, Mike Saylor. It's David Sachs himself, the crypto czar and the Bitcoin czar. It's Howard Lutnick, the Commerce Secretary. And it's Kash Patel, the head of the FBI. So you have a profound consensus amongst everyone running the United States. And the most important thing is that the United States is the most influential financial regulator in the world. And whatever the US banking system does and the US security market does ripples through South America, it ripples through Africa, it ripples through Europe, it ripples through the Middle East, it goes to Canada, it goes to Australia, it even goes to Hong Kong. Even the Chinese will copy what the US is doing. So it's very, very profound inflection. The other major inflection point is all of the large banks in the United States have gone from not banking Bitcoin 12 months ago to, in the past 6 months, I have noted and been approached by BNY Mellon, by Wells Fargo, by Bank of America, by Charles Schwab, by JP Morgan, by Citi. They are all starting to issue credit against either Bitcoin or against Bitcoin derivatives like IBIT. And so there's a sea change here. Wells Fargo and Citi have both publicly announced intent to allow the custody of Bitcoin within the banks. In the year 2026, they'll start to extend credit. And so Wall Street, the banking establishment, and the regulators have all endorsed Bitcoin as digital capital. Where does that take us? Well, my company's strategy is the world's first digital treasury company. And because it's digital capital, we have capitalized on it, and we have now accumulated 624 Bitcoin, including 10,600 yesterday, we announced. We are acquiring at the range of 500 million to $1 billion a week worth of Bitcoin. We've now at this point acquired not quite $50 billion of Bitcoin, which is worth substantially more. We're not stopping. For those people that we have buyer fatigue, we don't have buyer fatigue. I think that we can buy more Bitcoin than the sellers can sell, and we're going to take it all. And we're going to take it out of circulation. In essence, we're winding up the network. We're powering it up like an engine. It's coiling like a torsion spring of sorts. And what do you do with all that capital? What we've decided to do with that capital is to start creating credit, Bitcoin-backed credit, and we've created the world's first digital credit vehicle. In essence, we are going to digitally transform the credit markets by creating a vehicle powered by digital capital. So the company today is paying out about $800 million worth of dividends on our digital credit. We have about 76 years worth of dividends if Bitcoin goes up 0% a year. So I think the Bitcoin reactor has about 76 years of energy. If Bitcoin goes up 1.4% a year, we have infinite energy. We can go forever. So that's really our break-even point. And why do we exist? What is the purpose of our company? We exist to transform capital into credit. So what is capital? Capital is, you have a 5-year-old kid and you give them $1 million block of real estate in the middle of New York City. It's just dirt. It's land. There are no rents. And you say, child, hold that real estate for 30 years and you'll be rich. No cash flows, but you have to wait a long time and it's hard to value the real estate. In our particular case, we maybe in 20 years you can finance the real estate. And if you ever want cash flows from it, you have to form a company, get a construction loan, build a building, market the building. You're going to have to rent the building, then you'll get cash flow. That's a lot of work for a 5-year-old kid. Maybe you don't want to do it. So there's another thing you could do for the child. You could give them a piece of paper, a credit instrument that pays them $10,000 a month forever. Right? The picture on the right is credit. I'm just going to give you money every month forever, starting now. Instant gratification. And the picture on the left is capital. I'm not going to give you any money for the next 30 years, but if you've got the patience and you can stand the risk and hold your breath, you'll have even more money. So Bitcoin is digital capital. It's volatile. It's going up. How do you create digital credit? The world is built on capital. All of the blocks of granite underlying Manhattan are the capital. The world is built on capital. The world will be built on Bitcoin, but the world runs on credit. You need money now to eat, to pay the bills, to pay the rent, to pay for your tuition, to get on an airplane, to live your life. And of course, the criticism of a lot of uninformed skeptics is, well, Bitcoin's not an investable asset class because it doesn't have cash flows, and we don't know how to value it. And they don't believe something's valuable unless it has cash flows. So a treasury company that's capitalized on Bitcoin can create that cash flows. And so we're creating the credit in order to make this an investable asset class. And what our company does is we convert the digital capital to digital credit. We create the currency. So if you have BTC, we convert it to USD. Or we convert it from BTC to Euro. We could, in theory, convert it from BTC to JPY or Great British Pounds. We convert the currency. We strip the risk by over-collateralizing the credit instrument 5-to-1 or 10-to-1. Bitcoin could fall 90%, but we're still over-collateralized, and so you still got your principal. That's the credit proposition. If Bitcoin falls 90% and you have the capital, you've lost 90% of your money. That's the capital proposition. Strip the risk, strip the volatility. Convert a 45 vol asset to 20 vol, or 10 vol, or 5 vol. And then extract the yield. Pay you 10% dividend yield forever. Now, Bitcoin's going up 45% for the past 5 years. So in essence, if you have, and I believe, and I've said this to many a time, I think Bitcoin's going to go up about 30% a year for the next 20 years. So if you have a long time horizon, you shouldn't take the 10%. You should take the 30%. But you have to have the stomach for the volatility, and most people don't want 30% with 30 vol. They want 10% with 10 vol or less vol. So we distill the yield, and then the last thing we do is we compress the duration. Your 5-year-old has to wait 30 years to get rich. That's difficult. Your 5-year-old gets money now forever. That's instant gratification. We're converting 120 months or 240 months of duration. A 30-year bond has 240 months of duration if you're an interest investor. We're stripping it down to 1 month. Pay me now. And so the way you do that is with a huge pool of equity capital. We have $60 to $70 billion of equity capital a day, and then you embed the credit instrument into the equity capital. And that's what allows us to build this digital credit. And I'm going to talk about digital credit and digital equity, but with an aside. When gold was money, and gold was the commodity store of value in the world, the killer app for gold, it wasn't the gold. Cash settlement meant I moved gold from here to there. The killer app of gold was credit. The Rothschilds created gold-backed credit. The banks created credit. All currency was credit. All sovereign debt was credit. All corporate debt was gold-backed credit. All consumer debt was gold-backed credit. All mortgages were gold-backed credit. It used to be the world for hundreds of years ran on gold-backed credit. If we have digital gold, it's very logical that the world's going to run on digital gold-backed credit, or digital credit, if you will. And how do we get it? Well, if we've got an asset that outperforms the S&P index, we just strip off the amount of yield you want, and then the excess yield goes to the common stock shareholders. So the first digital credit instrument we created was STRK. We created it as a preferred stock. We pay an 8% dividend forever, and we give a conversion right into the common shares forever. 100-year call option, 100-year bond. We took it public, and we put a shelf registration on it. So the innovations were preferred stock as credit, a public instrument, a happy name, strike. Sorry, Jack Mahlers. I like the name, so I took it. But you can still have it, STRK. And then we also backed it with digital capital, Bitcoin. And because it's perpetual, we could sell the instrument into the market any given day. So it's like taking the best ideas from an ETF and adding them to the best idea of a bond, the best idea of a common equity, and then putting digital behind it. And then after we did that, we thought, why don't we create a perpetual bond that pays 10% dividend yield forever? And we did that with Strife, STRF. You would never pay 10% in a bond to build a house or to build a data center, because it's not going to last 100 years. How do you actually pay someone for 100 years? You have to have a use of proceeds that will last 100 years. So we borrow the money forever, and then we invest the money in Bitcoin forever. We're basically funding we're investing in the digital asset economy forever with money we borrowed forever. We're matching the duration. Because that's a senior instrument, it traded way above par, and the effective yield is 9%. And the idea is that's 9%, an investment grade bond is 4%. We had to pay a higher rate because we never intended to pay the money back, right? We're not giving you the money back in 5 years. We're giving you the money back in 5 million years. An investor would say, pay me more. And first we thought that was a bug. Oh, we have to pay more. And then we realized that's a feature, because I would rather pay 10% forever than 5% for 5 years. If you do the math in your head, if you got to repay the principal in 5 years, that's 20% a year plus 5, that's 25% financing versus 10. So if we'd rather pay 10%, who would rather collect 10%? The credit investor. So we created the best credit. The credit became the product. This traded up. And after we did it, we thought, how could we pay people more? Because Bitcoin is going up more than 9% a year. Bitcoin's going up 29% a year. So how do you actually create a perpetual swap and pay somebody more than that forever without credit? And the way you do it is you do it with a non-cumulative junior preferred stock. We created the same version of the stock of Strife, but we stripped away the cumulative right and the governance provision, and it trades below par at 80. And that means that the effective yield is 12.5%. So there's a 3.5% credit spread between the senior instrument and the junior one. And what that means is, if you don't trust anybody in the world, you buy Bitcoin and you collect 30%. If you trust the company and you trust Bitcoin, but you don't want, if you have a short time horizon, you want cash flows, you would buy STRD and you would collect 12%, the first 12% of Bitcoin return forever. And everything above 12.5% goes to the common equity, to MSTR shareholders. And then if you semi-trust the company, if you kind of think Bitcoin's good and the company's good, but I want to make sure that it's very painful for them to ever skip a dividend, you buy STRF. The price to semi-trust us is you get 3.5% less yield. The value to trust us is 3.5%, and the value you get paid if you have a long time horizon. If you're willing to wait 10 years and take nothing for 10 years, you get paid 30%. And so that's three interesting things. We took the idea of Strife and then we did it in Europe. And we actually created a €100 par that pays 10% in euros for European investors, and we call that Stream. Same idea, Strife. And then after we've done all those, I'll call those digital notes. They're like bonds, but they're not bonds, but they're long duration digital credit instruments. Generally if you walk down the street and you ask the average person, do you want to buy a 30-year bond? Not many people want to buy a 30-year convertible bond. But if you said, do you want a bank account that pays you 10%? Everybody wants that. So we started thinking, how do we strip the volatility, the duration, the delta, and the complexity off the instrument? And we created Stretch, STRC. And the idea of STRC is we'll just pay a monthly cash dividend and try to get it to trade about at par, about 100. So if Strife is a 20-year bond, Stretch is a 1-month T-bill, a 1-month Bitcoin bond. Now, this next chart shows you the difference between credit and capital. We took Stretch public, and in August 1st, if you bought $100 of Stretch, it would have traded up to about 99. It would have traded up 9%, and you would collect $3.70 worth of dividends. If you had bought $100 worth of Bitcoin, it would have traded down $23. Which is the better investment? Well, over the 4 months, it's the credit. If you're going to hold it 4 years, it's the capital. Bitcoin is a much better long-term investment, but you wouldn't be able to tell from that chart. And if you needed the money tomorrow, you'd want the credit. And so what you can see we're doing is we're straightening out that volatility, and we're stripping that risk, and we're creating that cash flow. Now, remember I told you I had to pay more money for the preferred credit. That was the bug, but it became the feature. And then I said, well, we wanted to take it public. So we took it public. It pays a big dividend. It's backed by Bitcoin. And inadvertently, we created the most interesting credit instruments in the world. These are the most successful preferred stocks ever. And here's one way to see it. The average preferred stock trades over the counter. That means it's illegal for you as a retail investor to buy it. It's only institutions that can buy it. It's like 37 guys in a back alley trading baseball cards with each other. They trade 100,000 a day. Wide bid-ask spreads is not very good product. If you take them public in Europe or the US, they trade $1 million a day. The first credit instruments we created, like Strike and Strife and Stride, they trade about $30 million a day. So they were 30x more liquid than anything anybody had done before. But then people said, well, I don't want the volatility. I want monthly. I want it simple. Everything else is too complicated. So when we did Stretch, we found the right product market fit. And you can see the instrument started trading 130 million a day, 100x more interesting. That's in the first 4 months. It became 100x more interesting. I think this will become hundreds of millions, then billions of dollars a day. And you can say, well, why doesn't anybody else do this? Because the rest of the capital market approaches credit differently. When Apple borrows money, they borrow money tactically to finance a tax arbitrage. When Microsoft borrows money, they're borrowing it tactically to finance a data center. When a bank borrows money, they're borrowing money to fund a consumer loan business. the money that they're borrowing, they want to get as cheaply as possible. It's a tactic in order to improve a product or a service. For us, the credit is the product. We're not trying to minimize the cost of the credit or the yield we pay. We're actually trying to maximize it and strip the credit risk away so we can invest in Bitcoin forever. And so we're an example of a well-run company where the credit is the product and the rest of the capital market is full of junk bond issuers and investment grade issuers and bank preferred issuers. The credit is the byproduct, right? It's a necessity. But if the CFO of Microsoft had a preferred stock paying 10%, the board of directors would say, you should call that, retire it, refinance it, and replace it with 5% money. And so most well-run companies aren't trying to create good credit. They're creating crippled credit. Credit that's good for the issuer, bad for the investor. And we inadvertently flipped that on its head, and we created credit good for the investor. And we didn't actually need the tax deduction because we're a treasury company, and we would rather pay a higher yield because we wanted to invest the money forever in Bitcoin. Nobody else has a use of proceeds to invest in forever that's going to go up faster than the S&P index. And so you have to have the right capital structure and the right corporate structure. And so I talked about the bug being the feature. One way the bug was the feature was we used preferred stocks. The other thing we did is we took them public because over-the-counter markets are very inefficient and the public can't buy them. The third thing we discovered is that if we pay the dividends by issuing equity or by selling securities or even by selling highly appreciated commodities, the dividend we pay is tax-free. It's tax-deferred. That is to say, you get the dividend, and then until you've reduced the basis in the instrument to zero, you don't pay taxes on it. Now, if you live in Dubai or Abu Dhabi, it doesn't matter to you. But if you live in New York City or San Francisco or London or Paris, it does matter to you. And so what we did is we created, in essence, tax-deferred dividends. Huge amounts of them. And what does that do to the equity, right? Our MSTR is digital equity. Well, if I issue 10% of my Bitcoin capital as credit each year, I'm actually creating a BTC yield of 10%. So that means that every 7 years, I double my Bitcoin per share. So if you want to actually hold Bitcoin per share constant, you buy Bitcoin. Or you buy the ETF. But if you wanted to double your Bitcoin per share, what you'd want to do is issue credit instruments and then buy Bitcoin back. And you can see here that if we just run a routine amplification, then what we do is we 2x or 3x our Bitcoin holdings over the period that you would otherwise have the same. So the way to think of it is MSTR equity is amplified Bitcoin. It's more volatile, it's more performant on the downside, the upside. If you're an equity investor and you want 2x Bitcoin, you would buy an equity that's amplified by credit. If you don't trust anybody, you buy Bitcoin, which is a good idea. If you have a short time horizon and you don't like volatility, you buy the credit. And now let's look at how this breaks down in the world. This is the stretch yield. It pays 10.8% effective yield. Private credit only pays 7. Junk bonds pay 6. Money markets pay 4. Municipal bonds pay less. The bank doesn't want to give you much of anything. This is the best it gets in the entire world, US-based credit. The benchmark is SOFR. SOFR is going to fall. When SOFR falls from 400 basis points to 3, mortgage credit, corporate credit, and junk credit is all going to be drawn south by 100 basis points. So digital credit's already 2 to 4 times better. if you're a retail investor or a corporation and you pay taxes, the fact that you can defer the tax, New York tax, city tax, federal tax, means that buying STRC, buying digital credit, is like a bank paying you 22% interest on your bank deposits. You see, it's off the chart. It's 4 times or 5 times better than buying a conventional money market. In fact, all digital credit is better than all conventional credit. Why? Because the collateral is appreciating and it's digital, and conventional credit is built on depreciating, collapsing collateral, whether it's a data center or a product or a warehouse. And it's all indexed to the risk-free rate, which is repressed by most central bankers. In Japan, it's 50 basis points. All the credit is tied to 50 basis points. And so digital credit is free market rates. And if you're a taxed investor, the tax advantage of digital credit is, again, do you want 1.5% in Europe, or do you want 20%? Our objective is really to build out that entire free market yield curve around the world, right? Why can't you get paid 10% in any currency, everywhere? And you can see all these currencies, right? You're getting 0 in Switzerland. So the opportunity for treasury companies, ours and other treasury companies, and the reason we need Bitcoin treasury companies in Switzerland and in Japan and in France and in Great Britain, is because we need companies to accumulate pools of capital and issue credit that meets regulatory requirements, that integrates into the banking system, that absorbs the currency risk, that fixes this yield curve, fixes this savings problem. So if you don't know what you want, you probably want treasury credit. I joke, it takes 100 hours for people to understand Bitcoin. So you go and you orange pill someone and you say, here's Bitcoin, and let me tell you about money, and let me tell you why it's not currency, and why it's a store of value, and why the utility doesn't matter, and why we're going to use it. And after 100 hours, you decide it's a volatile asset that's better than the S&P, and if you don't need the money for 4 years, you should buy it. But that's a very, very difficult educational process. This is another educational process. This is a 15-second ad. What it says is, if you like money and you're not getting paid by your bank, you can get paid 10 or 11%, 10% by buying digital credit. Okay? Short and sweet. I don't need to explain Austrian economics to you. Like, you use electricity, and probably not many people know how a nuclear reactor works. You don't care. All you know is you want free electricity. And you use the iPhone, but not 1 in 10,000 electrical engineers understands the way the codecs work and the chips work, in wireless handsets. Doesn't matter. Creating a great consumer product is the way to deliver technology to the world. Digital capital is appreciated by those after 100 hours. It's loved by people after 1,000 hours. But what's the equivalent of the automobile? What is the mass consumer product? Well, here's digital credit, but I'm not going to stop there, because what I'm going to say is this is a journey of discovery. First, I discovered digital capital. Then I discovered long-duration digital credit. Then we discovered short-duration digital credit like Stretch. And now we realize that we can create digital money. And what is digital money? Well, digital money is when we start to plug the credit into the traditional finance economy. What we think is that digital credit is going to power insurance and pensions and long-duration liabilities. But we think digital bills, Stretch is like a digital T-bill, a digital short-duration instrument. We think it's going to power money. And let me show you what money looks like. If you take digital credit, take Stretch, and you create a fund which is 80% Stretch, 20% currency equivalents, then you've got a digital money fund that can be buffered against instant liquidations. If people want to redeem 20% of the fund, you sell the currencies instantly without actually putting pressure on the underlying digital credit instrument. The blended rate of that, it wouldn't be 10%, it might be 9%. Now if you want to strip all the volatility off it, if you want it, the volatility of stretch might be 5, it might be 10. What if I wanted it to be 0? If you want to strip the volatility, the formula, the recipe for digital money is 80% credit, 20% currency, and a 10% cash reserve. So you actually take $10 million of cash, $20 million of currency equivalents, like a money market, $80 million of stretch. You hold the cash in reserve, and then every day at 4 p.m., you just top up the NAV using the cash reserve, so you trade like a stable coin. You would have $1 NAV. Now, if you do that, you've got 0 vol, it's totally backed, you'll probably get about an 8% yield. Your Sharpe ratio, 8% minus 4% divided by infinity, or sorry, divided by 0. It goes to infinity. The Sharpe ratio goes to infinity because the vol goes to 0. And now think about this for a second. What could I do with digital money? I could create a digital money coin. I can create what looks like a stable coin, a $1 stable coin, stable to 6 significant digits that pays you 8% yield, tax deferred. Tax deferred 8% yield, 12, 16% tax equivalent yield, but powered by Bitcoin. Right? Digital capital creates digital credit, creates digital money, put it in a stable coin. Instead of a stable coin that pays you nothing, or a stable coin that pays you 4% taxable, why not a coin that pays you 8% or more? So you can actually put it in the crypto economy if you want. And we wouldn't do it, but our partners would. So we would actually let a crypto company create that money coin powered by STRC, and then they could do it. The other thing you can do is create a digital money fund. Basically an ETF, a private fund or a public fund that pays you 8% with a stable NAV of 1, 0 volatility. Vanguard could do it, BlackRock could do it, anybody that creates a private fund, a public fund could do it. You can take it public, it could trade on any stock exchange. And anybody can trade in and out of it. And then the last idea, why not put it into a bank or a crypto exchange? I'll give you a digital money account. And I just put my money in the account and I get 8% daily dividends, tax deferred, no volatility from my bank. So now you see, we can't create digital capital. Satoshi did that, you do that. The Bitcoin community creates the capital. The treasury company creates digital credit. We're the middle, you know? And then the bank or the crypto exchange or the money manager creates the fund, the coin, the account. And now I want to end with, this is my pitch to you. If you have a country, if you run a nation, are you interested in making your nation the digital banking capital of the world, if you'd like to be the Switzerland of the 21st century, then these are the 3 ideas, the big, the bigger, and the biggest. The big idea is you take your sovereign wealth fund and you invest in digital capital, Bitcoin, buy as much as you can, digital credit with your credit portfolio because it pays 2 to 4 times the other credit you hold, digital equity if you want to buy treasury companies because the treasury companies will create the credit. That's the first idea. It's a simple idea. Digital capital is growing 30% a year. Digital credit's going to pay double your corporate bond or your junk bond rates. digital equity is going to outperform Bitcoin if Bitcoin goes up 10% a year. Now here's the bigger idea. You have a bank, have the bank custody Bitcoin, custody crypto, extend credit on it, create digital credit. If you allow a regulated bank in a country to take Bitcoin deposits, you have $2 trillion worth of Bitcoin that's not banked. People start wiring you $50 billion or $100 billion of Bitcoin. They create billions of dollars of credit. It pours into your economy. You can build all the derivatives, the notes on top of it. This is a $2 trillion idea, not a $200 billion idea. And then here's the biggest idea. Create digital money. I take a bank. The bank gives you a digital money account. You just put $1 billion in the digital money account and you collect 8%, no volatility, from a regulated bank. There's $200 trillion worth of money out there. The money from Australia, Singapore, Hong Kong, China, Europe, Canada, the US, all of Africa, all of South America, all of Russia, all of Ukraine, everywhere on earth, it's all going to come to you wherever you are. What is the perfect product? I used to think it was the iPhone, but you have to be awake and you have to be able to see and hold things in your hand to use an iPhone. But you could be in a coma. You could be a 3-year-old asleep. You could be an unborn child. You could be a person yet to be born 10 years from now. You're going to want an account that pays you 10% or pays you 400 basis points more than the risk-free rate in the currency of your choice. Basically, when I pay you anything more than the risk-free rate, I am giving you money, free money. And there's a word in the English language for universal utility appreciated by everyone, everywhere, that buys anything. And the word is money. So you create digital money. The first bank to do it, you won't draw a little bit of Bitcoin. You will actually pull billions and then tens of billions and hundreds of billions and trillions of dollars of capital from people that don't understand Bitcoin. I don't got to understand nuclear reactors to know that electricity is free in the country. If you give people free money, give them money that's better than every other bank on earth, all of the capital in the world will flow into that country, that bank. And I think right now, UAE is a leader in digital assets. Obviously, they're enthusiastic. I think the USA is committed. I just showed you that Donald Trump wants the US to be the leader. Everybody else is following. The question is, who is going to lead the way? And it's a combination of you have to have commitment, you have to have clarity, you have to have a bit of courage, you have to have competence, and you have to be an optimist and believe in the future. And if you believe that there's a digital transformation of banking and capital, and we can give people digital bank accounts and digital money that makes them wealthy forever, right? Then you have a chance to be, you deserve to be the digital banking, the banking leader of the 21st century. Everybody will follow you, and by everybody I mean all the money will come to you. Thank you.
Thank you once again.
Welcome back to the Bitcoin Magazine News Desk, powered by Crypto.com. We are here closing out the day at Bitcoin MENA 2025. We just heard from the legend himself, Michael Saylor, laying out his grand plan for talking about Bitcoin as capital, then creating Bitcoin treasury companies to issue the credit, and then creating a new form of money via new banks or crypto exchanges. Big ideas. I'm joined by Tyler Evans to break this down, the CIO of UTXO, as well as Lauren Asmus, the head of capital acquisition at UTXO. Tyler, your thoughts? Saylor, he never fails to deliver, no? Your thoughts on this big idea?
He never fails to deliver. It's been very cool to see his evolution and transformation as he started out with strategy and now diversified into all these new financial products, all the preferreds, and now you take that out, next step of its logical conclusions. And I love how he's breaking it down for really, like, what's the framework for a digital banking economy built around Bitcoin as the core monetary asset. I think he's got a bold vision.
Quite interesting. Do you think it's maybe as easily said, easily done as said here? It seems like, there's quite a lot of that would need to sort of be laid out. We sort of have to create faith in this new idea. We're obviously seeing what he's doing with Strike and with Stretch and these other preferreds that he's issued working. Is this the next logical step?
I think so. I mean, he's laid the groundwork, right? I mean, within really a year, it's pretty incredible. He has 4 products now, pref products out there that he's laid the groundwork for that have a lot of demand, a lot of interest, and it's really the beginnings of digital credit for Bitcoin, backed by Bitcoin. It's a $300 trillion fixed income market out there. We're just starting to tap into this.
Yeah. And what's so cool is how he's created all these individual products that maybe have their own volatility profile or their own convertibility, their own nuances, but how he's now conceptualizing a vision for those individual building blocks to be assembled to build a credit portfolio that has, the aggregate of all the properties and the faith that each of them can build as a long-term track record.
Yeah, for different risk profiles, different investors, quite interesting. One of the big things that goes through my mind, though, is can some of the other treasury companies copy this? We've seen something similar with Strike already, right? I believe they have their own preferred option that they just put out. Are we going to see this from all of the other treasury companies we've seen come to market this year, Tyler?
I think we are. We're very bullish on kind of this credit expansion in the treasury companies. Now, we've gone from 0 issuers to 1 issuer in strategy to now 5 different products that have issued, and now we've got global players starting to follow with Metaplanet announcing the launch of their pref product in Japan, which is a totally different interest rate environment, and Strive in the US. And I think, we look back a year from now, we'll have more than 10 issuers. And again, for credit managers, credit investors, that creates a diversification of counterparties, of issuers, of credit profiles, which is what helps give the confidence to allocate when you can build a diversified basket to manage the risk rather than being reliant on a single company.
Yeah, very good point. Lauren, to you, is this also a jurisdictional play, right? We know that Metaplanet has taken advantage of the fact that yields are very, very low for state-backed credit or for their fixed income market. Are we going to see this happen? You brought up Switzerland. You barely get a yield on your money in Switzerland. Are we going to see this happen across all, 210 countries out there? Is that going to be the play?
We are. Fixed income's global. It's a global market, right? The $300 trillion is global fixed income. We tend to think in terms of U.S. debt, right? U.S. leading the way in terms of that, but you have yields across 50 plus different countries, liquid bond markets. You're gonna have prefs, you're gonna have fixed income instruments in each one of these.
Okay, Saylor's already reached. He's already doing it in Europe. Is he going to lead the way and basically make everybody sort of follow his lead, or are you going to see other companies pop up? I know a lot of the work we've done with Nakamoto and everything. We have, the jurisdictional play is a thing, but are these other companies poised and ready to deliver on these sorts of products, Tyler?
I think so. I think we'll see strategy be more active now that they've launched their first Euro pref, as that builds volume, builds confidence, and in a lot of ways, it's hugely accretive to have Saylor leading the way, with his balance sheet, with the institutional credibility that he commands in helping kind of educate these markets. But that doesn't mean there isn't a huge opportunity for a local partner. And there's just too many countries, too many currency pairs, too many opportunities to build, the individualized product for each of those markets. So I think we'll see a huge diversity of issuers here, and we'll probably see more companies really follow his lead and issue products into different global capital markets.
Okay, I heard we have to kick it back to the main stage. I just have one yes or no question for each of you gentlemen. Is the 4-year cycle over? I know we're going to get to that on the main stage in just a moment. 4-year cycle dead or still intact?
I think the 4-year cycle is dead.
Okay.
I think Bitcoin being down on the year is confirmation of it.
Confirmation of it, ladies and gentlemen. I think I was a little bit mistaken. That'll be the final talk, but right now we're going to go over to differentiation among Bitcoin treasury strategies. That's on the Falcon stage. Stay with us. We'll be back here at the live desk after this.
Strategy and research at Orange BTC. Please welcome him on stage. They will be also joined by Matt Cole, CEO at Strive, and also last but not least, King Uy, CEO at Treasury. Please give them a big hand and be louder. The floor is yours.
Thank you so much. Guys, great to be here with you. Thanks for joining. Thank you all for being here. Hope you're having a good time in Abu Dhabi. Again, my name is George McHale. I am the Managing Director at Bitcoin for Corporations, where our mission is to accelerate corporate Bitcoin adoption, and we do that with partners like these gentlemen on stage. So why don't we start with just a quick round of introductions, starting with you, Sam. Share a little bit about who you are and what you do.
Yeah, my name is Sam Callahan. I'm the Director of Strategy and Research at Orange BTC. We are the largest Bitcoin treasury company in Latin America. So we currently have 3,720 Bitcoin. And our mission is to accelerate Bitcoin adoption throughout all of Latin America.
Amazing.
Matt Cole, Chairman and CEO of Strive. So we are, I think, the 14th largest Bitcoin treasury company. We're the second Bitcoin treasury company to IPO a perpetual preferred equity, SEDA, which was about a month ago. So deep in the world of digital credit that y'all just got a great lecture on.
Amazing. King.
My name is King Uy, founder and CEO of Treasury. We're the first Bitcoin treasury company in Europe to be listed on a main European exchange. Did a private round and have 1,111 Bitcoin.
Awesome. Well, we have the privilege of following Michael Saylor, which is always fun. But we are talking about the differentiation among Bitcoin treasury companies and the different strategies. And I think as this space has evolved, we've seen different types of strategies be employed, and I think we want to tackle this in our conversation today in a few different buckets. We got regions, we got operating sort of strategies, what they actually do, the regulations that they have to navigate. I think those are the three main ones that I would look at. So let's start with regions. So Sam, you're in Brazil, Latin America. What are some of the unique things that you guys have experienced as you guys have implemented your strategy?
Yeah, I mean, Orange BTC is not just long Bitcoin, we're also long Brazil. So there's like inherent differentiation with everything we do. It's a different currency and inflation regime. It's a different regulatory environment, like you said, different tax treatments, different investor base with different mandates and constraints to accessing spot Bitcoin. It's a different investor psychology. So in developed markets, it's more about upside and portfolio optimization with Bitcoin. In Brazil, it's about survival from currency debasement. And so all of that just creates a very differentiated company compared to other treasury companies simply because we're listed in Brazil and there's really not that many options in the entire Latin America region for getting exposure to Bitcoin through a publicly listed vehicle.
Yeah. Definitely. I want to jump over to King, and I know you're navigating some unique challenges in Europe. Can you share a little bit about what you guys are seeing over at Treasury?
Sure. I'll start on the positive side. Obviously, the Netherlands was actually the birthplace of modern capital markets, first joint stock company, first exchange. It's a very deep market, very advanced players, great market makers, infrastructure, etc. So it's a perfect place for a Bitcoin treasury company, and also very natural for sort of what we call the next part of the digital golden age. On the other hand, the European landscape as a whole is certainly less, I would say, crypto adoptive or Bitcoin adoptive than certainly in the US or other markets. So a big part of that, I think, is education. It's dialogue. It's making sure that whatever you build is according to best practices with the best people, et cetera, et cetera. So we're trying to be an integral part of that.
Definitely. And Matt, so Strive has done one of the more unique things that we've seen in this space, and that is acquire another Bitcoin treasury company. Can you share a little bit about your strategy and sort of how you guys came to that decision?
Yeah, so it started with having a differentiation around digital credit, around amplification, turning down convertible notes, and then with that differentiation, there became other companies, and so similar that I think we're more struggling to find a true differentiation, a true long-term strategy. And so for us, when you combine, you get two benefits. One, you reach a level of scale that's difficult to achieve, right? It's not easy to go raise 10,000 Bitcoin. Like, not an easy thing to do. And so we're, at the time we were about 5,800 Bitcoin. Now we're 7,500. Post-Semler would be 12,500. And you start to reach a scale where the cost to operate a U.S. capital market strategy, which probably different than international strategies, becomes de minimis relative to the size of the balance sheet, and so that becomes helpful in providing digital credit. So I mean, strategy has how many 650,000 Bitcoin, but when you don't get a level of scale, you can't really go launch a preferred equity instrument. And so we learned that. I mean, probably my view is in the U.S. capital markets, you probably have to raise at least 200 million notional to actually do it, which is actually what we raised. And so I think we kind of raised about the smallest amount to get out there. So it's not easy to get through that door, but with Semler, I think we're stronger together and can really lower cost of capital, which at the end of the day helps us amplify Bitcoin further.
Yeah, amazing. One correction though, they actually have 660,000 Bitcoin. They just added 10,000 yesterday, which was crazy.
Big buy. Biggest buy since July, actually.
Yeah, out of nowhere. So that was fun to see. Okay, as we talk about how this space continues to evolve, I think what we've seen recently, the last 6 to 8 months, is the so-called pure play, Bitcoin treasury companies come onto the scene. We've seen, some that are legit, and some that are sort of a flash in the pan, that are leveraging the momentum and kind of the excitement to try to pump their stock, and then you never hear from them again. I think that now what we're starting to see is the need to emphasize a significant operating business, that you are actually making money, that you actually have a real business, whether that's through creating preferreds or some other related or non-related type of company. Sam, how do you kind of view the evolution of the narrative around Bitcoin treasury companies?
Yeah, I think you're starting to see what you said, the focus on having an operating company. For us, we wanted our operating company to be in alignment with our mission to accelerate Bitcoin adoption, which is why we did a reverse merger with an education company. Mm-hmm. And so we have the infrastructure of an education company that we could transform over time to generate Bitcoin content, Bitcoin curriculum, Bitcoin courses to help educate the market on not just Bitcoin treasury companies, but Bitcoin itself. So Brazil is a few years behind the United States and other developed nations in terms of just their understanding of Bitcoin. And so we wanted our operating business to help accelerate our mission to push that adoption. And that's why our CFO has experience running a public company in Brazil for over a decade, and that was an education company. Mm. And so we have a lot of experience in education and media, and as well as in Bitcoin itself, to kind of push that narrative and to be a leader and a voice in that region that's kind of devoid of resources like that. We've kind of been inundated with amazing podcasts and research reports and institutional grade analysis of Bitcoin, and that's what we want to bring to the market.
Yeah, that's incredible. I think that's one of the things that we hear the most in conversations that we have is this lack of education, like you said, about Bitcoin specifically. It's like we got to get people to understand what the underlying asset is before we even get them to start talking about a Bitcoin treasury company. Matt, I would ask you kind of a similar question. How do you see the narrative evolving from these pure plays to kind of what happens next?
Yeah, so I think as a Bitcoin treasury company, you have to start with the first principles. So like the basic question, what are you trying to do? And for us, we believe that Bitcoin treasury companies should set Bitcoin as their hurdle rate. So if you're going to spend money, then you should be thinking that that money or that investment of time, effort, energy, operating business should be to outperform Bitcoin over the long run, right? Like Bitcoin's a duration asset, so outperforming Bitcoin over a month or even a year is a silly thing to say, because that's it might happen on certain years, it might not happen on other years or months, but over the long run, how do you make strategic decisions to outperform Bitcoin? And you start looking down the opportunity of business decisions, and you end up saying no to almost everything. It's like, that's not going to beat the hurdle rate of Bitcoin. That's not going to beat the hurdle rate of Bitcoin. 90% of startups fail versus fiat. What do you think the percentage of startups that are going to fail versus Bitcoin? 95%. And so for us, that's what led us to focus on digital credit as our operating business focus, is that if you're underwriting Bitcoin and you believe that Bitcoin's going to go up 30% on average for the next 20 years or whatever you're underwriting, then digital credit actually makes sense to help amplify the Bitcoin exposure, because your cost of capital is substantially less than that, and then you can hit the whole Saylor conversation of stripping down volatility and the great product that provides, and I think that that's tough to beat, and I think that if you're not thinking about differentiation or focus in that regard, then still owning Bitcoin might make sense for your business. I mean, it's Bitcoin, right? But should you trade at a premium? Are you going to outperform Bitcoin? Those conversations, I think, become harder.
Yeah, staying with you, Matt, would you say that you're on a mission to create a better bank? You know, I've heard Saylor talk about that. Is that sort of how you see Strive eventually being viewed?
Bank, insurance company, I think that the space is so nascent, it's so new. I mean, it's hard to remember this, but Strategy launched their first pref 9 months ago, right? Like, I mean, it feels like in Bitcoin space, this is dog years. It's been like 5 years, but it's 9 months, right? And so as this evolves, I think we're going to see different ways to maximally monetize these Bitcoin treasury companies. I think we're in literally inning 1 of innovation. We'll see things that work, that don't work, but I think a foundation of Bitcoin and digital credit is something that will provide maximal optionality, especially when like you look at Strategy or like Strive, like none of our Bitcoin is unencumbered, which means you have maximum optionality while still basically saying no to almost everything.
Definitely, yeah. And King, you guys have been doing some unique things as you execute your strategy. Can you share a little bit about how you view the operating business of Treasury?
Sure. I think first of all, it's interesting, as Matt said, the industry has gone so quickly, and we're now at a phase where you see these differentiated models evolving, and which model a company embraces depends on the market environment, the market you're in, the team, and a whole bunch of other factors, sometimes also investors and shareholders. And the way we look at that is when we launched our company, the first thing we did was we actually bought the Bitcoin Amsterdam conference. So, and that's sort of the North Star of education in mind as well, right? Overall Bitcoin adoption, and there's no better asset to have for Bitcoin adoption than a conference where you bring people together to do that. Over time, it's very important to evolve into a company that uses Bitcoin as a reserve asset for multiple functions. And we think in a broader sense, as a financial services company, right? I think it's too early to speak about banking, but it's certainly where it will go inevitably at some point. It all depends on integration with the financial system. If you think about being a structured finance company, issuing digital credit, that's obviously a very important component. And then on the operating side, there's other things you can do with your Bitcoin. Obviously, we see Metaplanet being very successful with their options trading strategies. There's some very early developments in terms of Bitcoin collateralized lending, and we're exploring all of the above.
Yeah, nice. So one of the things that I thought was really interesting when we first started Bitcoin for Corporations, we partnered with Strategy. The initial conversations were them wanting to see other companies adopt their playbook. And I think this is pretty unique for Bitcoin, right? You don't see a lot of corporations wanting to encourage, essentially what would come down to competition, right? In our space, we have the benefit of viewing competition completely different. So I'll throw this out to the group, whoever wants to take it. How do you see our role as leaders in the space to not only educate sort of investors and retail, but also companies that aren't here yet, companies that don't understand Bitcoin, and us wanting to see this accelerate? What is our role in educating just the average corporation about what's going on?
King and I actually just had a great example of this. We did a panel on another stage, and right after I got to the panel, someone that was looking to start a Bitcoin treasury company came up to us, and we had a great conversation. And part of that conversation, though, was the discussion that it's actually critically important we want these companies to succeed, because this is such a new industry. If you start seeing failure, bad decisions, companies blowing up, which probably happens at some point, but it puts a black eye on the rest of us that are trying to build long-term strategies, right? And so, yes, we're competing, but you really are going to win more by growing the pie here. So it's like, I want more Bitcoin than the next guy. I want to have more total return, but ultimately, if we're all winning, we're going to win together, and that's the greatest way to grow this. And so I think that's why you see this collaboration, why Bitcoin for Corporations took off. It's a fun competition. And we have differentiations, we have viewpoints, but it's like, my last business, like we were fighting like capitalism versus socialism. Like we were not on the same side of the table. Now it's like a bunch of Bitcoiners debating the best way to drive total return in a public vehicle, and that's a lot more fun.
Yeah, definitely.
And maybe to add to that, I think for me it's all about dialogue, and especially being in Europe, it's maybe a slightly different angle from, for instance, the US. There's more catching up to do. Such education starts with just individuals, just again, the conference, great part. corporations, also regulators, banks, traditional finance, and
definitely.
I think you know, there's people that we know each other. Like for instance, the MSCI news. Like you wrote a great paper. Like I had no problem sharing that because we need to educate the market about what we're doing here. And so it's about working together, and it really starts from the top with Michael Saylor and how he has been so transparent. And I think that motivates us all to kind of follow his. And I think that motivates us all to kind of follow his lead and be transparent about what we're doing, learn from each other, mistakes, what works, and how it implements in our specific capital market. So it's such a young industry, and there's a lot of education that needs to happen, and we're stronger when we combine our forces and work together.
Definitely, yeah, and I'm glad you brought up MSCI. That's kind of where I wanted to go next, because, you know, to your point, we are stronger when we work together, especially when we're under attack. And it seems like, you know, there are attacks coming at us. I think Matt and I were talking, it's like whack-a-mole, like different angles, different attacks every day for seemingly no reason. And I try not to worry too much about the why. Like, you know, why did MSCI come out with this proposal to exclude Bitcoin treasury companies? That's less important than like how do we, you know, fight back. And I think this is one of the things that, you know, Bitcoin Corporations is really built to address. And then Matt did write a great letter through Strive to kind of you know, push back on this, and you know, we launched an action yesterday as well. I guess on the topic of differentiation, what do you see as happening with this specific proposal, and how it's kind of being presented as, you know, this is a different category of companies? They're trying to say that, you know, if you have more than 50% of Bitcoin on your balance sheet, that you're a fund. Like, how would you respond to that?
Yeah, so to start, so my background, I used to work at a large pension fund. We actually used MSCI indexes, and the pension fund actually was CalPERS, which if you don't know is the largest pension fund in the US, in California. It's very political there, so they have a board that's mostly appointed by politicians. So we had all sorts of weird political pressures, and so we had to talk to MSCI about implementing like a political agenda in our investment portfolio. And what will typically happen there, and which I completely disagree with, but you know, I worked there, so I had to help implement, is that they would create a custom index. So CalPERS would say they wanted something, MSCI would create it, but they wouldn't push it out to everyone. And that's really important in regards to Bitcoin treasury companies. Probably everyone in this room is a Bitcoiner or learning about Bitcoin, but in the broader institutional investment community, some people don't understand it. They get in these, you know, it has no intrinsic value or whatever. It's like, I don't want this, it's an investment product. But the answer to that is not to take out companies that are legally compliant operating businesses that have products, but actually to create a custom index. A custom index that I think will underperform, have tracking error, whatever, but that's not, if it's a custom index, I disagree with it. It's kind of like they're right, but when you push it to everyone, that actually substantially hurts capital markets, it hurts the cost of capital, it hurts innovation. I mean, obviously as a US investor, but around the globe. And then when you get into some of the details of how they would implement it, there's also a million workarounds. And so Bitcoin treasury companies, if they really wanted to be in an index, could structure their company in a way to get around those rules, unless they're going to continue to play whack-a-mole. So it's like, just let them be in the market for a compliant operating company and let the market speak. And, you know, it's like I think, you know, as an digital asset treasury companies that aren't Bitcoin, I think they have a lot of value, but I don't think they should be excluded from MSCI. I think we should let the markets decide, free markets decide. If they have value over time, then they'll win. A passive index doesn't need their opinion, and frankly doesn't need my opinion either. It's passive.
Right.
Here.
Yeah, I mean, and King, you spent a lot of time in your career in sort of traditional markets. What was your response when you saw this MSCI proposal? Were you surprised by this?
Yeah, completely. It's completely discretionary and badly argued. And I was thinking earlier, right? Saying earlier, there's two things that really bind people: common interest and also common fear, a common enemy. And we have that now. So we're getting to the history. And to me, these are what the typical norms we've seen in the last 17 years in Bitcoin. Who knows where the decision is going to come out in January? But I'm 100% convinced that it will go over the hump, right? Maybe slightly later, worst case. So I'm still very bullish on that. As Matt said, in the end of the day, I'm a huge believer, as we all here, in free markets and let the market decide. This is, you know, Microsoft is almost $100 billion company company itself, at some point over 100 billion, a bit lower now, you cannot just ignore that company and its operating business. So, and innovation is bringing something else. It's not to think about as an operating company.
Definitely. Yeah. Sam, any thoughts on MSCI? Actually, maybe even love to hear from you as you kind of break it down. What do you think the implications would be if this were to be implemented?
Well, this is one index provider. I talk about like the game theory of this. If they choose to not include Bitcoin treasury companies or companies with Bitcoin on the balance sheet, it doesn't mean other index providers are going to follow suit. And so what they're really doing is damaging their reputation as a neutral benchmark. They should just be reflecting the market.
Yeah.
They are being political and basically discriminating against a reserve asset that they disagree that corporations should hold. But obviously, these corporations feel like it's a prudent reserve asset to put on their balance sheet. And so I think you saw what happened. So we just saw Vanguard, right, pivot. Well, their business was hurt by not embracing Bitcoin. And so I think companies that embrace Bitcoin benefit from it, and the ones that don't seem to get hurt.
Yeah.
So, I think over time, MSCI would probably capitulate because Bitcoin does belong on a balance sheet. Bitcoin is the ideal reserve asset, and I think more and more corporations are going to hit that 50% threshold over time, especially as Bitcoin appreciates in value and everything else depreciates over time. So, I think it's unfortunate if it goes through. It might be temporary self-pressure as those passive flows removes, but it doesn't mean everything's going to follow suit. And it's just one index provider, and this is a long-term strategy. As Michael tweeted, their strategy doesn't depend on one index provider. And they just continue marching forward, continue executing the strategy, and providing Bitcoin-backed securities to the market.
Yeah, it's a little bit of a self-owned by MSCI. It seems like we're coming up on time here, so I'm going to give you guys one chance for final thoughts, starting with you, King.
Yeah, I'm super excited into 2026. I think we continue to love innovation in the different business models, digital credit. Obviously, where Bitcoin is going to go, and we're part of that together. So super excited.
Absolutely. Thoughts?
Final thought would be that we are in the early days of differentiation that I think Sam and I were talking about, a few months ago. Was there a need for more than one Bitcoin treasury company in America? I think now we're seeing differentiation, clear differentiation between Strive, Strategy, Nakamoto with what they're doing, 21 as they're getting off the ground. Like there's so many different ways to differentiate, but you actually need a team. The days of just going public and using the ATM and trade at a premium, those days are over. But real teams that can actually think about structuring in an interesting way, I think we're in the early days.
Definitely. Sam, final thoughts?
Yeah, I think you're just going to see so much differentiation across the operating businesses. Even at Orange BTC, we're seeing local Bitcoin businesses reach out to us with opportunities. We're seeing international businesses reach out who expand the reach, reach out for strategic partnerships. Ways to differentiate the balance sheet, all types of yield generation strategies. And so you're just going to continue to see this kind of develop and evolve over time. And I think it's a good thing for the market. I think differentiation is important to stand out and to build a long-term business. And we'll see, like we said before, we'll learn from each other and what works and what doesn't work, what we can incorporate into our own business, what we don't want to. And it's really up to the management to decide what's the best use of capital and the resources, and thinking about risk return, and it's an exciting time. We're in early, we're here, and we're building, and see where this goes. It's really a time to be building a coin treasury company.
Absolutely, yep, and it's a lot of fun. I appreciate you guys as leaders, and it's interesting to see how things play out. Definitely bullish on everything that's happening. So, thank you all for being here. Thanks for joining us for this conversation, and thank you to our panel. I hope you all enjoy the rest of the conference.
Thank you.
Amazing. Please, once again, give a big hand to our amazing panelists. Be louder, please. An exciting moment, not the end still, because we have, like let's say, as a cherry on top, another exciting panel that is coming up. So please be prepared. This time is different. Bitcoin cycles. Yeah, that's true. Today it was mentioned that maybe Bitcoin cycles are not like 4 times, like repeat themselves in 4 years. So let's find out this more by inviting our fantastic speakers on stage. Please give a hand to Eric Hicks, managing partner at EPOP. Please give him a big hand and be louder. He'll be joined today by Zuby, musician, author, speaker, host of Real Talk with Zuby, Team Zuby Media. Be louder. He'll be also joined today by Stefan Livera, podcaster. Stefan Livera podcast. Give him a big hand. Be louder. And last but not least, please welcome on stage Alexander Satz, founder at Atlantis. Please be louder. Fantastic.
Welcome to the final panel of Bitcoin MENA. Everybody. You guys aren't fair weather attendees if you're holding out this long.
Yeah, the room is full, huh? Look at this.
Yeah. This is almost what it looks like for Saylor, I think.
Yeah, exactly.
Yeah.
We're like warming up.
Right.
Well, he warmed it up for us.
Well, we're gonna turn the heat up in here a little bit, and we're gonna be talking about cycles. Are they broken? What's going on? We have some of the best minds in Bitcoin to be able to talk about this with all you guys today. And okay. What do we think? Are cycles broken? Stefan, I'll throw it to you first. What do you think?
So traditional kind of, as many of us in Bitcoin have been talking, for a while, they're coming now. I think it's going to break. So at least that thing is probably breaking, is my guess. But open to hear your thoughts. Like, we should have an argument about it. Like, is green, red broken?
Who disagrees?
I'll take you on a jiu-jitsu battle, and then we'll see if it's broken or not. I'm kidding. Whether that is broken or not, the way I generally perceive these things is psychology doesn't change. A lot of people come to me and they're like, oh, look, this time the ETFs are buying, this time the big money is buying, this time the smart money is buying, this time this and this and this and this. And me and MVK, if anyone remembers Clubhouse, that was still a thing. MVK and I had a kind of disagreement back in, this was 2020. No, it was 2021. I remember I was in Brazil at the time. And he was like, oh, there's like Michael Saylor and this and that. And this was still early, right? I think he had just set up the Treasury website or something like that. And my position was, look, man, people are retarded. And they're just going to do the same thing over and over again. It doesn't matter if they wear a suit or shorts or whatever. It's just the same process. And fear and greed still drives it. People still want to make money, and people still don't want to lose money. And even though, like, I've been in Bitcoin for so long, I still try, like, when it's time to pay expenses, I'm like, yeah, you know what, Bitcoin is going to go up a little bit more next week. Then it goes down. I'm like, oh, shit, I better quickly pay my bills now. And then I pay, and then it goes up, of course, right? So, like, it's still, after all this time, still gets me. So where I'm getting at with this is NVK was adamant that the cycle was over back then. He had another dump, whatever. I don't know if the timing of the cycle has shifted. The idea that Bitcoin isn't going to have these like massive dumps or corrections or anything like that again is stupid, in my opinion. I think we are still going to get some sort of ridiculous run up, and then we're going to get a mad crash down again and just wipe a bunch of people out. And wipe stupid people out, but at the same time, the smart money will, attempt to get out, and they will sell it at the wrong time, this and that. So I think it's going to be messy. There's no.
I don't even know if it's the stupid people are getting wiped out. I think what we're witnessing right now with the drop is that I think it's the middle of the bell curve that's getting wiped out. I think it's the middle of the bell curve giving it to the tips of the bell curve with all these sales, and that's what happens in all these cycles.
Yes.
But that's the question I think everybody has. What's causing this right now? Like, why are people selling Bitcoin? Zuby, do you have any thoughts on that?
I think it's just a human psychology thing. I think that coming up to, it's now Q4 of a post-halving year, and in that time, people are expecting, okay, if anything like 2013, 2017, 2021, we're now heading into a downward phase, and so there can just be something that happens in the macro which triggers a massive sell-off, and then you have all the people who are over-leveraged and all of that, and that wipes out, and there's this cascade of the price just plummeting down, and that leads to more fear, more uncertainty, more people start selling, especially people who bought higher, especially people who are newer to it. It takes a while to hold Bitcoin to build conviction. Most people can remember, like, if you've just bought into, whenever you first bought into it, those first few months, that first year, in most people's cases, the conviction is not incredibly high. So you just bought this thing and the price is going up in fiat terms, you feel like a genius. And if suddenly you buy this thing, it drops 5%, 10%, 20%, and it's like, what am I doing? Let me off sell to avoid any loss. And then I think the longer you've been in the market, the longer you've been holding, the more you've been educating yourself, that conviction just grows. And you've been through these cycles multiple times. You've been through these human psychology cycles, and you've seen the massive runs, you've seen the massive drops, and it's less scary each time.
Yeah.
I think even if you've been holding for a while, I don't think people say that they, feel nothing during the massive dumps. I don't think that. I think there's very, very few people that that's true, where you kind of see your net worth just kind of like, plummet by however much, and you're like, yeah, that feels great. That's just not how human psychology is. I think Alex is spot on. Human psychology does not change. And that's why we'll always have those cycles. So whether it sticks to the 4-year, as it has been, as we're accustomed to, or whether it changes and it extends, I don't know. If I were to say anything, it would be pure speculation. But I totally agree that the psychology is always going to cost. Maybe once the market is more advanced, then it will stabilize more at a much, much higher fiat price. But for the time being, we're going to keep
psychology is a big, big part. Stefan, you have any thoughts on what's driving the dip?
Maybe it's wrong. People might have had the wrong expectation. Like they maybe were expecting 400K or something ridiculous, and then because of that, now they're sort of like, maybe they're sort of looking at, oh, AI is hot right now, and they're just sort of, there's this, I think there's like a social kind of now, not endorsing, but they're sort of trying to hyper gamble way to wealth, because they feel like they don't have any other way, instead of just understanding, no, actually you can just live in Bitcoin, like just humble and stack that, and you just do that longer term and you'll be okay. But I think maybe people had this expectation and now they're trying to sell. And the other one is also like this kind of the Biden era regulations and so on, where it made it hard for people to take some out. And maybe now you've got this kind of, the IPO movement, as some people have spoken about it. So maybe there's a bit of that. I think it's just, Bitcoin is just maturing, right? It's this power law growth, and some people want really quick returns, and it is going to be diminishing in percentage returns. In percent terms, and yeah, like I think we'll still have kind of bull and bear cycles, but just not on the 4-year kind of basis like we had before.
Yeah. What do you think it is that will cause it not to be a 4-year cycle this time?
So as an example could just be, maybe it was never a halving. Maybe it was really always liquidity, and and we will just point out now, they've just stopped in the US. They've just stopped quantitative tightening. Everyone's sort of saying, hey, it looks like they're likely to lower the rates soon. They're like, Trump wants low rates. He's likely to get his guy in. We'll give him that. So maybe we're about to see another cycle of liquidity. I mean, again, we're speculating, but maybe it's just a liquidity-driven thing. And the other aspect is maybe now it's a class of investor, right? Like back in the early days, it's like retail hodlers and people like that. Now you have these institutional people, and they are just kind of professionally rebalancing a little bit out, and they're not as in and out as quick. But none of us knows. Like we could see another 50 come next year, and it could totally undo everything. So none of us really knows, but maybe just like the character of the market shifting. Now you've got ETFs, like a genuine big steady buyer. I think it's also something that shifted. So if you look at the percent of the drawdowns, it's come down a little bit over time. Like the early drawdowns were like 90%, then it was like 86%, then 83%, 76%. It's slowly less. Maybe the next big drawdown will be 50 or 60%. Who knows?
Yeah, I definitely agree on the macro side. Like I think this is a macro-driven drawdown, and I think the main thing is right now we are technically shifting into a form of easing from the Fed, but everybody has an expectation that might reverse. And I think it's just like inflation's been going up this past quarter, and people are scared. Like in the US, inflation is around like 3% measured by the CPI. And people are like, okay, the primary trend I think that's concerning people is AI demand for energy right now, and some sort of expectation that not enough supply is going to be able to come online, and it takes years for us to build out the capital that's going to enable a lot more of that supply, and that might cause some sort of spike in energy, which is an input to a lot of other different goods. And we might have an inflationary scenario where it starts to rise much more quickly. And perhaps central banks have to reverse policy. Or they just run it hot, to your point. Donald Trump wants us to have more liquidity in the system. That's going to benefit him. And, you know, we're going to see how that pans out. But I feel like that was kind of the initial, like, drop, and that's what hit markets more broadly. And then we had the psychology kind of play, right? And then there was a function of the credit that started to impact that as the market deleverages and people get called when the price goes down. But I think, like, fundamentally, people in Bitcoin have always, you know, really needed these. They've always wanted a framework. We had the stock to flow model, with people talking about power law distributions. We have this 4-year cycle narrative. People want something that allows them to feel like these cycles are predictive. And I think the reality is that we see in markets that marginal supply meeting marginal demand is where we can observe a price in the market. There's fundamental drivers to what causes those things to fluctuate over time. But I think that we're just at this point where everybody who believes in like a cycle is kind of like, well, what do I believe in now? You know, what model can I worship? And like, I don't know, what do you think people are going to start shifting to going forward? If 4-year cycles are broken, you know, how are they going to start thinking going forward? Are people just going to say, Bitcoin's going up, there's going to be some sort of framework, or there's going to be no framework at all?
I don't know if this specifically answers that question, but I think that even in this conversation, and so many, like, a lot of people are still really thinking of Bitcoin kind of, I'd say, from a trader perspective. So even when we're talking about cycles and we're talking about the price going up and the price going down, it's sort of thinking of a trader who's trying to accumulate more fiat. And there are millions of people who are interested in Bitcoin for that reason, right? They're trying to maximize their fiat stack, and they're using Bitcoin to help with that. So there are so many things we can speculate on, but there are certain things which are just solid and which we know, and they're not going to change. We know that they're going to keep printing dollars, pounds, euros, yen, pick your currency. We know inflation is not going to stop. They're going to just keep printing and printing. We know that any fiat currency is going to be worth less now, is going to be worth less in 5, 10, 20, 30, 50 years than it is now. We also know that there are only 1 million Bitcoin established, and you just know them as fact, and then to adopt a strategy where whether next year is a continuation of a bull run or it's a bear market like previous, like it's been in, I don't know, 2018, 2022, and so on, so that whatever happens, okay, essentially. Because we were talking about psychology, and that still affects everyone individually, right? We all have emotions to some degree, and I think it's just best to position yourself so that no matter what happens, whatever flies down the pipeline, you really cannot predict. You know that you're okay, you know that your family is okay, and you've got a long enough time horizon that you just know, like, cool, whatever happens in the meantime between here and 2030, 2035, 2045, whatever it is, it's going to be.
Yep.
Yeah, I think it's important to the structuring. I mean, I agree with Zuby. Like, ultimately, it's a process of, it's a journey for a lot of people. When they first come in, they may be a trader, and then eventually they sort of go further down the rabbit hole and realize, no, I need to make sure I'm okay whatever happens. Whether next year is a bear market or a bull market, or we just go sideways, make sure you're okay in either scenario, and that you can keep on accumulating Bitcoin. Like, and it's just a regular thing. Like, a couple of years ago, we used to meme about this DCA army, right? Haas from Australia was one of the guys sort of promoting that idea. And for a lot of people, it's just a dead simple idea that works for most people. Like, just keep DCAing, just keep averaging in, and you know, 5 years down the line, 10 years down the line, you'll be very happy.
I think I want to just touch on two things. One is, I can't remember whether Stefano or he said it, but to your previous question around what's causing the dip, and then I'll touch on the second part. I'm a little superstitious, and I think Bitcoin requires a couple of things before it continues its thing, its movement. One of them is to basically create either enough fear or apathy that people stop giving a shit about it. and go look for something else, which I think you were mentioning, like people are looking for ways to quickly make money, right? So like Bitcoin's boring at the moment. It's boring. Like no one cares.
Yeah, to normies, yeah.
Yeah, like but even somewhat to the big hedge funds and all this sort of stuff, like, 6 months ago, Saylor was all the rage. Now everyone's laughing at him, right, on mainstream media, right, like because Bitcoin's down, MicroStrategy's down, all this sort of shit. So the one indicator I watch, this is the only indicator I really give a shit about, is the ranking on the App Store for the Coinbase app. That's it. As soon as that thing goes up to like, when it's ranked like number 5 or more, like I'm looking to like drop Bitcoin in my business. At the moment, it's like ranked number 400. So like we're in accumulation territory, and we're just sort of in the zone of creating apathy. Like it goes up, down, around in circles until people just get so fucking sick and tired of this thing and be like, I could have bought Nvidia, I could have bought this, I could have bought that. And then the sort of the tourists leave. And the tourists, doesn't matter if they're retail or institutional or whatever, like when the tourists leave, then the train continues.
It's like you've exhausted the selling.
Exactly. You exhaust all that and then they're off. So I think that's one piece. Second is where do people go next? What is the new altar? Yeah, I guess stock to flow disappeared to some degree. I don't know. Is that guy even still around?
I don't know.
He's still posting, but to be honest, I think the model's
no one
broken,
cares?
so,
Okay, yeah. So, I mean, look, we're humans. We'll come up with anything to explain anything. Like, we'll fucking come up with some other new sort of, cycle or whatever. But to me, the cycles that matter is not so much the 4-year cycle. I talked yesterday, actually, about larger generational cycles, which to me are more important. And to me, that is generation 1 cycle being the speculative era, meaning that everything around Bitcoin is built, or the relationship to Bitcoin is one of comparison. We, all of us here, have one foot in the world pre-Bitcoin and one foot in the world after Bitcoin. So our psychological relationship to Bitcoin is one of comparison. What's interesting will be next generation, the kids who were born in 2010, don't have a relationship to the old world. Like they will perceive Bitcoin very differently, and they will treat it very differently. They will build differently. They'll do different things. So like in the generation 1, we built product, services, industries that were around how do I accumulate, dispose of, exchange, store, create, which is mining, exchanges, wallets, and treasury codes, right? There's no real other businesses. The next thing will be something else. And that's really the cycle, in my opinion, that matters. But as with all things, they sort of cycle fractal all the way onto, the second timeline. So that's a long way of saying, what's the new sort of deity?
What's the new meta,
Yeah.
I don't know exactly.
Yeah, that's how I think about this. I think that when you want to preemptively understand where something is going, then you really want to get a hold of what the fundamental drivers of it are. And with us in my company, we're a Bitcoin venture capital firm, so we're talking to all these private companies, and we're hearing and seeing all the things that are being built. And when Bitcoin's price runs up, it's a very small percentage of days in which the vast majority of the gains actually occur. And that's just like when the tip of the iceberg emerges above water. But meanwhile, it's been accumulating so much down below. And that's what gives me so much, I think Bitcoin is going up a lot next year. I think we're going to reach all-time highs in the second half of next year. And that's because I see a lot of things going on behind the scenes where I'm really excited at potential forms of adoption that can ultimately come into play. When you understand how big these pools of capital are that exist at institutions, that exist in sovereign nations, of all the millions and billions of people who still just don't have exposure to it yet, it becomes very obvious that we're, a headline announcement away from some sort of massive run-up in the price. Inflations with historical variables to say what is Bitcoin's price, but really I see this big opportunity emerging in the future for how people could buy it, and that's actually what's going to drive a run-up in the near-term price because people don't want to buy it. I'm curious what you guys think, over the next, 2 years, is there anything that you're this is the thing that is drive demand for Bitcoin? I see this one group or this one type of activity or something like that that's really going to cause it to get a lot more
I'd say the institutional kind of, there's been shifts right at the institutional level. A lot of ETFs have become a big factor in the demand. I think we're starting to hear more about different large pools of capital, right? Like the Czech National Bank bought some Bitcoin, Luxembourg bought some Bitcoin, sovereign wealth funds are buying Bitcoin. Of course, there'll be retail and small businesses asking too, but I think it's just that show will keep going, and then eventually we'll have the run.
Yeah, I mean, I see two main things, and I think this has just always been the case for Bitcoin. I think there's the adoption from people actually in the previous day, right? There was a time when none of us knew anything about it, and maybe some of us were even skeptical and so on. Everyone goes through that. And every year, the amount of people who get it increases. And then the other one, again, coming back to human psychology, is just the number going up. Right? So many people do initially get attracted into Bitcoin because they need to invest in something, they need to park their money somewhere so it doesn't get eaten by inflation. And you see something which is going up, 10%, 20%, 10% over the course of multiple years, hundreds of percent, thousands of percent, and you see that and you're like, okay, that's an interesting investment, and that's what draws people in initially. So I tend to think that the narrative follows the price more than the other way around. Mm-hmm. Like, I think if the price were shooting up right now, we'd actually have a lot of narrative that we'd be saying, oh, it's happening because of this.
Told you so.
Yeah, but I think I think the price happens, and then the narrative tends to come after that. Mm-hmm. But I think on a long enough time horizon, you know, like, people get so impatient. I mean, remember how hyped everyone was when it hit 100K for the first time last year, and then remember when it like hit 100K again on the way down, and everyone's like deflated, and everyone's like, oh my gosh, this is terrible.
Even now, like, if it hit 100K again, we'd be like, all right, loser, no worries. Yeah. Thanks a lot.
Yeah, it could go up 10% tomorrow, hit 100K again, and you know, the excitement's not going to be like before. But if I just think eight years ago, December 2017, around this time, actually, almost exactly 8 years ago, when it hit $20,000, and it was insane. Like, the level of hype was just bananas. And now you think 20K, oh gosh, I wish I could buy some for 20K. That sounds good.
Speaking of 2017, I don't believe 2021 was a bull market. I actually think that was like a scam. And seriously, and I have not had 2017 vibes until now. So it's going up, it's going on the moon. But, seriously, like, because we had the same sort of thing in 2017 where you had like Bitcoin internal wars, you know, it was Bcash, all this sort of shit. Like, everyone was fighting, everyone hated each other. Like, there was, you know, the price was going like this, and it was shaking everybody out. It created a bunch of apathy, and then all of a sudden we saw this like explosion. And I don't know, it feels very similar to me. It's like not enough people care, but there's actually a lot going on behind the scenes. And it was reminiscent back then, because 2017, remember, there was like sort of the foundations of Lightning Network were coming together. Like, all this other stuff was going on in the background, and it was very, very good for Bitcoin. And this thing is, you said it, Eric, it's like it goes up in like a fraction of the days of the year, right? I think it's 11 days of the year or something, like, where most of its gains, something like that. So this thing is a beast of momentum. Like, when it moves, it's going to move, and you blink, you're going to miss it. So these sort of periods where it is doing the chop, periods of accumulation. Like, we are fundamentally in the middle of an accumulation phase, and we're going to have some fun soon. This is the boring part, but this is sort of what gives you the opportunity to acquire and sort of build some conviction. The same thing over and over again. Just to touch on what Zuby said earlier as well, is all of the other shit doesn't make sense. It's all noise, noise, noise. The only thing that really matters is that we're going to keep printing. Yeah. This thing is limited supply. I'm sure some paper Bitcoin shenanigans going on, and you know, we can't prove that, or, you know, like, I'm sure there's something happening, but at some point you can, you know, it's like every dollar peg breaks. Like, you can kind of run shenanigans for so long until something breaks behind the scenes, and then all of a sudden you get the moon or the basement.
This is true. This is true. So the key takeaways are the 4-year cycle isn't broken. It never existed. And you're more at risk being on the sideline and trying to worry about any of this in the first place.
And it's going up. Is that right?
And it's going to go up. And
forever. Yeah.
Yeah.
I think in the short term, you know, I'm not financial advice, but I think in the short term, invest money that you got that you can afford to lose, but on the long term, you invest what you can't afford to lose.
Beautiful, beautiful. All right, guys, we're out of time. Thank you, everybody. It's been a beautiful conference.
Fantastic.
Back to the Bitcoin Magazine news desk powered by Crypto.com. Ladies and gentlemen, we have closed out day 2 of Bitcoin MENA. The second year we've been here. It has been a legendary conference. We heard from the legendary Michael Saylor, Changpeng Zhao, GZ, founder of Binance, the likes of Saifedean Ammous, the author of the Bitcoin Standard. We had the Bitcoin for Corporations Symposium happening. Lots of stuff. We have a few all-stars yet that we have to hear from still. They're sitting to my left here. Again, I'm Frank Korva, Bitcoin journalist. To my left here, we have Greg Davis, director of Bitcoin MENA. To his left, we have Craig Deutsch, head of programming for all of the Bitcoin conferences. So all these guests you heard from today, that's Craig's work. And then we have George McHale, managing director of Bitcoin for Corporations. Gentlemen, it's an emotional moment. A lot goes into this, a lot of blood, sweat, and tears. Greg, I'm going to go to you first. This is sort of your baby as far as conferences that fall under the BTC Inc. umbrella. Give us a little behind-the-scenes insights.
I need to get some sleep. It's been, I think, building on what we've done last year, the conversations that we're having on the site this year, the types of people that we're hearing. I was worried, the price is a little bit lower than we were last year, but it's not in any way dulled the conversations.
Vibes were higher.
Yeah, dulled the excitement. I think everybody's excited about what we're building here, and it's definitely clear that this region is ready for Bitcoin adoption and having those sorts of conversations for sure.
Yeah, for sure. A lot of people coming to us saying that exact thing. This region, there's been education happening at the highest levels of government for years and years and years, and it now seems like it's really ready. They're poised to sort of take a position on many levels, literally and metaphorically. And we heard a lot about that. On that note, I go over to you, George. Bitcoin for Corporation Symposium yesterday. A lot of alpha coming out of that. Saylor sharing some big ideas. Other people sharing their different treasury strategies. Some highlights for you.
Yeah, definitely. It's always fun to do a full day of corporate adoption content. Having Saylor was obviously great. I think that what we're building is pretty exciting, and being a part of it kind of behind the scenes and seeing some of the conversations, I think there's a lot of critics about like, why should I go to a conference? It's not even, that beneficial. I'll just like save my money and stack sats, whatever. I hear from people. I had a conversation yesterday actually. Someone told me that they got a job, joining a corporate Bitcoin company from a dinner that we did at our last conference. So it's like these are the kind of conversations that happen in real life when you're sitting across from somebody and you get to look them in the eye, you get to get to know them, and they just like offer you a job. So I'm bullish on continuing to get Bitcoiners together in real life.
Yeah, same here. Love getting together in our life. It makes a big difference. If Twitter was our own mode of communication, things would be quite gnarly in this space. Face-to-face things are a bit different, though. Craig, on that note, there's so much to Bitcoin. There's so much happening at the grassroots level in circular economies, all the way to what we're seeing with treasury companies to the nation-state level. You and your team do an incredible job of bringing all of them together. What is that like? How is it like reaching out to all these people, trying to tap into all these different things, these different developments on different levels of Bitcoin and the financial strata that surrounds it?
A good question. I mean, it is challenging because there are so many different things that are happening, and a lot of the attention is probably more focused on the public-facing things, such as treasury companies. And so it is our team's role, my team's role, to really bring attention to some of those things, those grassroots movements that might not be as people not know what's going on with it. And so I think one of my favorite conversations that was talking about retaining the cypherpunk values of Bitcoin in this era of encroaching financial action, and really remembering Bitcoin's roots as a censorship-resistant money that nobody can stop and nobody can tell you what to do with.
Yeah, I think it's, and if we really want to look at that objectively, that's part of the value proposition, right? It can't be capital the way Saylor talks about it if it didn't have all of these attributes, and I think that's a big part of it. So I don't think it's a matter of Bitcoin is only this or it's this, right? It's all these things, and we know that as evidenced by this conference. I'm curious if you had any takeaways. Were you walking around? Did you catch anything from some of these stages that sort of stuck with you, Greg?
Well, I think building on what you just said there, especially with the price being a little bit down right now.
Keep bringing up this price,
no,
Greg.
but I think that's great. I think we're at a point now where some of those properties of Bitcoin are becoming even more important to people. I'm from England right now. When you're looking at things like trying to own your own capital, being your own bank, having the ability to be able to send value whenever you want. I think those sort of properties, regardless of the price right now, I think you've got technocratic governments around the world, and people are really starting to value the properties of being your own bank, self-sovereignty, being able to get up and move, and I think that's the sort of conversations that I'm certainly hearing. Yeah,
there was a lot of that. George, I want to go over to you. Bitcoin for Corporations, relatively new entity, right? Relatively new institution. Did you imagine, the caliber of people that we have showing up here? Also, just generally speaking, this trend in not just Bitcoin treasury companies, but corporations embracing Bitcoin on various levels, whether it's a means of payment, whether it's a treasury asset. Could you have sort of vision, especially at Amsterdam just a few weeks ago, we're doing this. People seem really excited about this. What has it been like, over this course of this past year building this out?
It's been crazy. I did not expect it to blow up the way it has. We have 40 companies now in our network. We have signed a 5-year commitment from Strategy to continue this initiative. So there's definitely commitment to see this continue to unfold. I think that the caliber of speakers has continued to increase, the caliber of leaders that have come onto the scene. One of the things I'm most excited about, though, is now that we have sort of a critical mass of companies that are all sort of in the foxhole together, fighting this. We do continue to get attacked. There, every time we turn, there's someone else trying to slow adoption or put obstacles in our way. And what's great is now that we have this network, we have a coalition that can actually together and have shared interest and fight back. And so we're really just getting started. The last year has been a testament to how much the space continues to evolve.
Appreciate that. Craig, I don't want to hear this, but we're going to have this other big conference in April, if I'm not mistaken, Bitcoin 2026. Are we hard at work already on that? What's going through your head? And also, it seems like it's going to be this is going to be a kind of a pivotal year to do something, because we don't know if the 4-year cycle is intact, right? So there's always this thing with conferences, like, are people going to be bummed out, or going to be in a bear market, blah, blah, blah. Does this go through your head as it comes, when it comes to programming and sort of maybe thinking about a theme for the conference and just, bringing it together? Or, you're considering, are vibes going to be high as we go into Bitcoin 2026 in Las Vegas?
Well, just thinking about it from a vibes perspective, I know vibes are going to be high because the Vegas event is just always a high vibes event.
We like that.
When it comes to themes, part of our job is figuring out what the narrative is going to be, which is challenging because in Bitcoin it changes every 10 minutes, and we are, planning months and months ahead of time. And so my team is already working on exciting speakers, exciting content. I think one of the themes that we're kind of thinking about this year is almost like a Bitcoin World's Fair, of bringing together all of these people. It's time to think about the future, think about what that looks like. I think one of the ways that we're seeing this shift is also with AI. And so especially with all these mining companies switching and getting into high-powered computing, we are thinking about how does Bitcoin and AI, how are those things coming together? How do they interact? Whether that is through just mining or also, internet native payments.
Yeah. But, AI agents making payments, that's a lot of people looking forward to happening with Bitcoin as their. Greg, how do you keep your finger on the pulse of what's happening in this region? You don't live here.
I do.
Oh, you do live here. I thought you were when you said England. Okay, so you've been here. So when it comes to sort of keeping your finger on the pulse here, I mean, are you going to meetups in the region? Are you speaking with members of the government? What is it that basically helps you to conceptualize what this conference should look like?
Yeah, things change quickly here. That's what in England things take a long time to get where they need to be. Here we've got really dynamic leadership. Really trying to chase really what's going to make this country future-proof. Going to meetups, this event doesn't happen without strategic partners. So we're always engaging with government entities. There's actually ministers in the government that actually look after these things like AI and digital economy, etc.
Very built out. It's very sophisticated.
Absolutely.
They have many ministers
they
looking
actually
after
have
this.
Like towers that are just dedicated to these things. So when you compare what's happening here to other parts of the world, this is why this region needs a Bitcoin conference. This is why this conference has got bigger this year, and it will continue to get bigger in the years to come.
Awesome.
Sure.
Yeah. George, I want to go over to you. Obviously, we've seen major changes in the U.S. with the Trump administration. How much, from what you were hearing from people from all over the world, not just this region in the Middle East, obviously we had Simon from Metaplanet and representatives from treasury companies in the Netherlands and all over Europe and around the world. Is there a certain amount of sort of the United States has very much given this its stamp of approval, and that changes the dynamics now globally? Was there talk around that at all?
Yeah, a little. I mean, I think everyone tends to follow what the U.S. does, and there are challenges in other regions. I think Europe is up against some regulation constraints that we're working through. But I'm fairly bullish on the fact that as this number continues to go up, that regulators and any institution that is standing in our way is going to have no choice but to see this as a legitimate asset. And that's kind of the trend that we're seeing, is like, oh, you can't really ignore this anymore. It's actually part of the financial system, whether you like it or not.
Okay.
And so now the work really is just figuring out how to integrate it into all these different markets.
All right. We do have to wrap this up in just a moment, but I think we want to leave on a bullish note. So 2026, what is it going to look like for Bitcoin? We can maybe touch on the 4-year cycle. What are you looking forward to? Maybe a prediction or two. It doesn't have to be price related. I'll start over here with Greg, and we'll go down the line.
I don't know. It depends what happens in the world right now. I think Bitcoin. I think Bitcoin is really important stage where it's either people think it's either really tied to the traditional finance market. I think when something big's brewing. I really feel that, and I think Bitcoin's really starting to have its real limelight right now. So I reckon going into next year, who knows what the price is going to be doing? But all I know is that the conversations that happen on the floor here, there's really important people having that pen drop, and trying to understand, this can be integrated into the power grid here in the Middle East. This can be a sovereign asset. I think all these conversations that we have, all of our events and all these meetups, it's only going to make sure that more and more people, especially people in really important positions, are taking this asset really seriously.
Yeah, people are surely not just thinking about it, but they're acting, and I think that creates a domino effect. So yeah, that's something I'm paying attention to as well. Craig, over to you. 2026, what's it look like in your mind when it comes to Bitcoin?
I'm really bullish on in-person events. Like George was saying, I think especially as our work lives and just regular lives are more digitized and we're spending more and more time online, I think that these in-person events in general are very important, continue to be important.
Yeah.
And so I think, especially looking forward to Vegas, I think it's going to be a phenomenal event. I think it's going to be great to hang out with Bitcoiners. Anybody that is relevant in the Bitcoin space is going to be there. Like to come hang out at BitCon. Some people don't even go to the stages, but they will come and they will hang out. I think it's going to be a great time.
You got to be there. Just let that FOMO take you over. Make sure you get there and do what you will once you're there. George, 2026 predictions.
No, I love the energy of we've just wrapped up 2 minutes ago, and we're already thinking ahead. It's time to get ready for the next one. That's definitely
no for the weird.
Yeah. No, I think 2026 is going to be a pivotal, similar to what Greg said. In the U.S. we're coming up on a midterm election year, so I think as an industry that helped get Donald Trump elected, the midterm elections represent a huge opportunity for us to go in serious conversations with politicians and fight for our interests. And so I think it goes, first they laugh at you, or first they ignore you, then they laugh at you, then they fight you. And I think we are in the then they fight you, kind of coming into the then you win part of that equation. I think 2026 we're going to see that transition. So.
All right.
Samurai.
Bullish note, free samurai, bullish note to end on. We want to, of course, thank all the viewers, thank everybody who came out here. Without you, this wouldn't exist, so sincerely appreciate it. I can say on behalf of this team that, we all put our, as I said, blood, sweat, and tears into this, and we sincerely appreciate you paying attention, showing up, and again, if you haven't made that decision to get out and get to a Bitcoin conference, we have Bitcoin 2026 happening in Vegas, and of course we will be back here at Bitcoin MENA 2026 as well. So those are two very good options for you to step outside of your comfort zone a little bit and to engage with some Bitcoiners and maybe create a little bit of magic where you end up working in this industry. So I'm going to leave it at that, everybody. Sincerely, thank you so much for tuning in. Thank you so much for our team that helped us get this live stream together. We appreciate it. Round of applause for Bitcoin MENA 2025. Yeah. And we're signing off, everybody. Take it easy. We'll talk soon.